being added and an expansion is taking place into new markets. And we have a conversation lined up with the management, but before we do, let's head across to Hiral, just to give you context of what they're doing. And of course, Hiral, you're going to be speaking to the management after.
Absolutely, Alex. It's very interesting to see how Max Healthcare has actually been expanding when it comes to the smart super specialty hospital in Saket. The other conversation point over here is their expansion in East India. The ideal understanding over here is that the expansion in East India will be similar in terms of cluster-based expansion that they are doing in the NCR market, and whether that will actually aid their average revenue per occupied bed, and what happens to margins as well on the back of the capacity expansion. To talk to us about this, Abhay Soy, Chairman and Managing Director at Max Healthcare, joins in. Abhay, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. My first question coming to you is, if you talk about Max Smart, it's a brownfield expansion. If you could help us understand what kind of facility this is going to be, and how would it actually be unique from the other facilities, because you have been expanding in Saket and now entering East India as well. So what is the strategic thinking behind these moves?
I think first and foremost, we've had 3 recent rollouts of new facilities attached to our existing facilities. The first one was Mohali, where we added 200 beds to our existing facility of 200 beds. The second has been Max Nanavati in Mumbai, where we've added 280 beds on existing facility of 300 beds. And now the third one, Max Saket. Again, this cluster of Saket, we have 800 beds. We are adding another 400 beds. And the primary reason for adding these beds has been that these hospitals have been facing huge occupancy numbers, and had a shortage in number of beds which are available to patients. We've got extensive waiting at the ER in these hospitals, and pretty much no availability of beds. So we had to debottleneck these hospitals. These are patients require beds. Our doctors require beds for their patients. They require OPD spaces. They require operation theaters and so on and so forth. So first and foremost, pure infrastructure has been rolled out in each one of these facilities. I think secondly, and most importantly, today, it's aspirational India. The kind of airports we land at, the kind of metro stations that we have, our infrastructure is far superior than perhaps what is there in hospitals. So what you will see these are really state-of-the-art facilities which will host the best of technology as well as the best of Indian clinical talent, which is desired today by the aspirational India as well as global medical tourists. Right? I think we will be able to showcase the best of what we have. And the starting point for that is infrastructure. So I think that's the hole which we've been able to plug with this. So in terms of touch, feel, in terms of look, etc., these are significantly superior assets compared to what we've had in the past.
Okay, so Abhay, if you're talking about NCR, where Max has built a strong cluster model, is this the idea to replicate the same kind of a model in East India as well?
Yes, and so are we in doing the same in Lucknow. We are coming up with our second facility over there. We've done something very similar in Mohali, Chandigarh, where we have a facility. We're building another facility as we speak, and we expanded the first one. Dehradun, similarly. Mumbai, we're expanding the existing facility, putting up a new one in Thane. Nagpur, we're expanding the existing facility. So it makes all the more sense to do brownfields. And when you run out of brownfield space, really to look at a cluster approach, because resources can be shared, referrals can be shared, your knowledge of a market increases once you do your first facility. So it's always easier to do the follow-on facility in the same kind of. And there is advantage in clusters. In fact, there is more advantage in clusters than being present in the length or breadth of the country, so to say.
Okay, so with this expansion, Abhay, what's the kind of contribution that you're seeing in terms of earnings, and when do they really start?
immediately. These are brownfields expansions, and immediately, in fact, your profit margins are accretive in these new facilities, simply because you only look at incremental costs. The cost of the management, cost of clinicians, common utilities, etc., already incurred by the existing facility. And when you expand that facility, it's just incremental cost. All these costs don't need to be replicated. So it's extremely advantageous to do brownfield expansion.
Okay. And if I'm talking about the average revenue per occupied bed for Max Healthcare, I think it's one of the highest in the industry. If you can talk to us about how sustainable this is going to be, what is it that is driving this, premium pricing power? And with the expansion coming your way, will there be a dilution there, or are you expecting further improvement?
So first and foremost, I think, I can answer that, but first and foremost, my objective is not to maximize ARPOP, average revenue per occupied bed, or EBITDA per bed, or EBITDA margins. That certainly can't be anybody's objective. Certainly, because even from an economic standpoint or a commercial standpoint, it doesn't lead to any joy, so to say. We are generating X amount of free cash flows, alpha amount of rupees, let's say, in our present hospital network. We are in the job of investing this incremental dollar incremental rupee at high ROCEs. We seek a 20 to 25% ROCE. Now, if I get an opportunity to buy something which can immediately give me a 20-25% ROCE, it doesn't matter whether what I acquire leads to lower ARPOP, lower EBITDA margin, or lower EBITDA per bed, and drags the rest of the network numbers down from that standpoint. So long as when I deploy every incremental rupee, I'm able to make that 20 to 25% ROCE.
Okay. Very lastly, with all of this said and done, in future, what's that capacity addition that you're looking at in the next 2 to 3 years, and what is the kind of capex that it will entail?
So we're looking at, we were 3,500 beds in 2024. We are about 6,500 beds starting of 2026. In the next 3 years, we are planning to be 10,000 beds, but now we'll be a little more than that. We just acquired Bhubaneswar. You will see more beds being added through M&A route other than what we've declared, in the coming years. So I gather will be significantly higher number than that. And all our sort of expansions, we are looking at funding through internal accruals. We should be to the tune of 4,000 to 5,000 crores over the next few years.
Okay, so I think interesting aspects to watch out for going ahead as well. But thank you, Abhay, so much for joining in. Always a pleasure to speak to you. But with that, it's a wrap on this edition of India Markets Open. Up next is Ask Profit with all your queries, and at 11 a.m, a town hall with Ramdeo Agrawal only on NDTV Profit. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
We're teaming off with Dr. Vinod Hayagiri, MD and Director of CKC Jewelers. As a fifth-generation leader steering a 155-year-old legacy, he knows that brilliance takes patience. Watch at these times.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. With me is Mahima Vacharani as always, and it's going to be an interesting session today because we're seeing sustenance of what we saw in yesterday's move. So the Nifty continues to be in the green for now and up about 88 points. When you look at the heat map for the Nifty 50 also, it gives you that perspective where a lot of stock movers continue to be in the green today. So pull up the heat map for the Nifty 50. You'll see these individual movers in trade today. The likes of, you've seen Hindalco continue to be up. Adani Enterprises, Bajaj Finance, Tata Steel and L&T are all up in trade today. You're seeing some losers now and that gap is widening. So from roughly around 10 stocks in red, we're now increasing that to 16 for the Nifty 50, but continuing majorly to be in the green, and that's a key positive. In terms of the sectoral heat map as well, you're seeing positive moves across a bunch of sectors today. You've seen the Nifty Metal, defense, as well as what we've seen, for the IT index also continue to be in the green, while the auto and realty are down, but not with too much rigor. So we'll take that with both hands at this point of time. But overall, in the advance decline ratio, yesterday was a blistering session to say the least. A 10:1 in favor of advances, and when you pull that up as well very quickly, it shows you that almost very neck and neck we were, and now we're starting to see the widening essentially in favor of the gains as well, Mahima. But overall, the broader markets continue to be one of the key ones in terms of news flow as well as expectations before the earnings season.
Most certainly, right? And the sustenance part that you talked about, largely, of course, we saw FI buying, again yesterday. We'll have to wait and watch out for whether that happens today also or not. And just that 88 points uptick on Nifty 50, we'll have to wait and watch out for whether that happens or not. But with regards to broad end of spectrum, doing slightly better as compared to where the benchmarks go. The mid-cap 150 is up by about 0.5% off from its day's high point. So is the small cap 250 up 0.7%, but off from its day's high point. Slight recovery from the day's low point has also happened for the small cap 250. But specific names, you have GMDC, completely rocking in trade today, up 15%. First Source, Sonata Software, NLC, as well as Indian Metals, All Cargo are some of the names that are doing fairly well in the broader end of spectrum. And you have Tejas Networks, which is taking a knock in the back of its earnings. You have Mahindra Life, Confidence Petroleum, Sterlite Tech, Z Entertainment, as well as Astral, which are down in that range of 3 to 4% each. So that's with regards to where the broader end of spectrum goes. But with that, let me welcome in our guest for the day, Avinash Gorakhshekar, founder and head of research at Avinash Mentor Research Services, joining us. And we have Kush Bora with us in studio today. Kush Bora, founder of kushbora.com. Gentlemen, thank you so much for taking out the time, and a very good morning to the both of you. I'll start by taking the first question, which is from Arvind, who's writing us from Mumbai. Asking about LIC. He says that is it advisable to buy it at the current levels from a long-term perspective? 2+ years is what he's looking at, considering the bonus that was announced yesterday. Avinash, would you recommend that?
I think, Mahima, just for buying the stock for a bonus is not, doesn't make any economic sense, because as it is, I think all of us remember that the stock still trades below the IPO price. So, retail investors who had invested in the IPO are still not making any money here. It's only a matter of some relief for them that now the bonus has come in, so maybe the average cost, gets reduced. But I think there's no need to buy the stock purely for bonus. It's better that the stock goes ex bonus. Let's see how the numbers perform. And most importantly, what kind of traction they show on the earnings side. Because, that would be a near-term trigger for the stock. As of now, not advisable to buy.
Not advisable to buy is what Avinash recommends. Despite the bonus, you have that majority shareholding by the government as a whole, 96%. So that could eventually put a pressure on the stock once that comes in. But the next question coming in on BHEL, our viewer Suina from Noida actually holds roughly around 200 shares bought at 300 rupees per share. Now, Kush, good morning. Welcome to the show. Her question largely being if she should continue to hold or move out of this particular stock, what would be your recommendation?
Hi, first of all, very good morning. I think it's a good idea to exit because 300, that's the level where the stock has, seen multiple rejections. Even in the past, the stock did briefly go above that level and, then just gave way quite rapidly. This is that false breakout kind of level where it shows strength, moves above 300 and then just fizzles out. So having seen that history repeat multiple times, I think it's a good idea to exit BHEL at cost, 300, maybe a little over that. But I wouldn't stay on in BHEL for too long at these levels.
Okay, Tata Tech is the other one. Razia from Hubli, Karnataka is asking this question. She's bought at the levels of 643 and she's holding 1725 as quantity. Wants to know if she can continue to hold or sell. Kush, I'll stick with you for this one. Your view on the charts.
Yeah, massive underperformer. What's happened in this along with the rest of the market is that even this is starting to see some sort of a bounce. I doubt this will be a lasting one, a sustainable one, for a very long time. However, the next levels of resistance come in at 610 and then at about 645, 650 the buying price. So my suggestion would be to hold right now with a stop loss at about 565, and as the stock approaches 610 and then 645 levels, you should start exiting gradually.
Got your view, Kosh. The next question, now coming in, it's on Action Construction Equipment. It's a stock that's largely been in a sideways momentum over the last year or so. Let's pull up that counter. It's trading about 900 now, but the 1 year chart gives you that real perspective. And a viewer is holding 50 shares bought at 870. So it's a recent purchase. Stock's down 27% from the highs. But Kush, is the momentum coming back now for the next 6 months, or would you recommend a viewer to just exit at the current price point? He's bought at 870.
Yeah, so two points of compliments there. One for the viewer, to buy this at the levels at which he is bought. So it takes courage because that is close to the lows, maybe a little off the lows, but he's bought it at very good levels. And secondly, to you, Puneet, to lay out how beautifully the stock has reacted in the last month or so, in the last year or so, in fact. I would hold on to this because now the things are starting to turn a corner. Volumes on the healthy side, price action on the healthy side, stocks taken on 20 and the 50-day moving average. And more importantly, if you see the last 12 to 18 months, falling trend line, that resistance is also being taken out in the last couple of days moves. So my suggestion, because you've entered at a good level, stock is starting to show strength, you should continue to hold this. I would suggest, a trailing stop loss at the 875, 880 level. So continue to hold and put a trailing stop loss at the 880 mark.
Okay, the next one is coming in on Bajaj Finance. This is from Balasubramaniam, who's writing us from Bengaluru. He's holding 20 shares of Bajaj Finance that he'd bought in November 2025 at the levels of 1014. Says he's incurring a loss of around 1720. Wants to know if he can add more at the current level to average out. Says he's a long-term investor. From a long-term perspective, Avinash, would you recommend that?
Yeah, I think, within the NBFC space, Bajaj Finance can be accumulated, but I think keep a time frame of at least a year, year and a half, because I think, the market is definitely now going to reward large NBFCs in a much better way. Interest rates have also stayed neutral, and I think demand seems to be coming back. So obviously FY27 should be a lot better. And I think the outlook also shared by Bajaj Finance has been quite encouraging. So definitely I think worth accumulating, but keep a time frame of at least 12 to 15 months.
Unimec is the other question that Ramesh from Vijayawada is asking, and viewers, you can also call us, talk to us for your stock related queries as well as of course with our guest. On Unimech, Avinash, Ramesh is holding 70 shares at 893. So he is currently, sitting and incurring, actually it's recovered in that sense, right, from the lows. But what would be your view? It's the quarterly results haven't been that strong. Should he still continue to hold Avinash for the next 5 years is what his question is.
No, I think, defense companies normally display a very lumpy kind of a pattern in terms of quarterly numbers, but I think the tailwind continues to be very strong. And I think, the company operates in a very niche area. So if the investor can hold on for the next at least 2 years, if not 5 years, I think definitely things should improve because defense is a very large space and I think the opportunity is very large. So, you need to take a very long-term call and can't base your decisions on quarterly numbers. So I would say, yes, continue to hold, but keep the faith at least for the next 2 years.
Okay. All right. The next one is coming in on latent view. Our viewer wants to know from a 9 to 12 months perspective, can I go ahead and buy this counter? Kush, your view on the charts?
Well, the stock could see some sort of rebound and it could continue moving higher, but there's a possibility that it might hit resistances. Even those levels, by the way, come in slightly higher at about 355 and then 380 levels. So if that's a healthy return that the viewer is happy with, then you can go out and buy because it has a major overhang of supply because the stock's seen sharp fall and lower high lower low formation on the weekly chart, so there will be some supply pressure that will come in. But like I said, if you're happy with targets of about 345 and 380, you could consider entering at these levels. Stop loss I would suggest at the 285 mark.
Got that view, Kush. But the next question, and Kush, largely because we've been asking this question to a lot of guests on Ola Electric. Now, viewer Ram from Hyderabad holds 11,000 shares at 32. So clearly, Ram is the smarter one of all of us at this point of time. Given the buying prices, he wants a 2-year target, but largely coming to you because we've seen a very stellar move, right, Kush, from the bottom. What would be your view now? Is there enough to move above that 40 mark, which has been a key resistance? How are you viewing Ola Electric now?
Yeah, so there's a technical reason why the 40, in fact, if you push it a little and be a little precise, then 40.8 is where the resistance comes in. That is the 200-day moving average. And Puneet, you'll recall my view on this has not been as constructive, but kudos to him for buying it at lower levels and making this massive profit. If he wants to continue holding on because of the momentum, I would suggest yes, but it's a good idea to book partial profits at these levels. So book partially and then you could hold the rest with 37.5 as your stop loss. Any further move will require a comfortable close above the 40.8, 41 mark. But even now, with the kind of move that it's already had, I wouldn't really suggest a fresh entry.
Okay. All right. So that's the view coming on Ola Electric. The next one is an interesting one. And this is coming in from Muiz Ansari, who's writing us from Mumbai. He says he has one query and he's asking as to what 2 or 3 stocks that he can buy right now and continue to hold forever. He says he's a retired person and wants to know as to what could these counters be. Avinash, if you were to pick 2 or 3 stocks right now to maybe buy from a really long-term perspective, what would those be?
I think very difficult question because the markets are so volatile.
Yeah.
But I think my sense is that businesses like steel or cement or infrastructure or hotels will not go out of business. So maybe I think he could look at investing in Indian hotels, or maybe he could think of investing in companies like Mahindra and Mahindra, or maybe even something like a Larsen and Toubro, because these businesses have got a long kind of tailwind. They are operating in sectors which are going to grow along with the economy. So I think, yes, I think if the investor can probably have the time and patience to hold on these stocks eternally, then I think these 2-3 bets in the large cap space could be better. In fact, even IT companies could be looked upon. I think IT is not all that bad, but clearly you need to have a higher risk appetite here. So something like a TCS, Infosys can also be looked upon.
What's interesting is that he has specifically mentioned that he's a retired person, but he wants these 2 to 3 forever stocks in his portfolio. So that just makes Avinash's job more tougher. But some interesting spaces, Avinash, that you highlighted. Next question is coming in from Guru. Kush, his question is directly for you. He wants to buy into a couple of key names, Sai Silk, Sula, as well as SW Solar. Now, a couple of them definitely beaten down. What is your view right now on these stocks? Should he continue to hold them, average down more? What would be your view?
Puneet, could you repeat the names again, please?
Yeah, it's Sula Vineyards, Sai Silk, as well as SW Solar.
Yeah, so Sula Vineyards is something that I would avoid right now. The reason being that, the sector has not really seen an all-out upswing, but a lot of names in this space are seeing, a good up move. So Sula Vineyards, unfortunately, hasn't participated. So I would, perhaps keep that out. Sterling SW Solar also perhaps, you could consider because the stock is rebounding. So maybe just from that perspective, but it really doesn't have too much strength going for it. Alternatively, I would look at Warrior Premier, by the way, in this, broadly in this space. But Silk, very interesting because, most of the stocks that he's mentioned are not only from a near-term perspective seen, a deep gash, from a medium to long-term perspective also they've seen a gas. So I want to perhaps understand, what is the rationale? Is it just because they're so beaten down that he wants to pick them up? That's not the best strategy, by the way. So like I said, Sula Vineyards does not feature on my list. SW Solar, maybe, but I have a preference of Vari and Premier. And Sai Silk also had a good run, but is, given way now. But it's still something that you can consider. So I would suggest amongst the three, Sai Silk is perhaps the only one that you should consider. Keep a stop loss at the 90-91 zone, and you could aim for targets of about 112 and about 125. So I'm more interested in the rationale of these stocks rather than the stocks themselves.
Yeah, all right. It's time to take a look at the FNO space, and we have Sharad standing by to give us a perspective on how the FNO queues are shaping up. Sharad, yesterday there was green on the screen, but today what are you observing? Does that still hold?
Interesting case, Mahima. A little bit of technical cool-off is at play. Of course, the markets are from the day's high levels. But nevertheless, the technicals, how it's suggesting, is still showing a good strength. Largely, we see a sea of red. 80 to 85% of constituents in Sensex are still in green. Of course, some sell-off is definitely there in HCL Tech, but there's nothing to be majorly concerned about. This is a technical pause, and it's actually healthy for the markets as well. But overall, the value buying in the mids still remain. But let's look at the stocks which should be on your radar. A key long build-up happening in which of the important counters, if you'd like to point out, and of course that includes PNB Housing Finance and Chola Finance. All the NBFCs are buzzing in trade also. There was an RBI announcement also, and that's also aiding a good momentum in these NBFC stocks. Let's look at, apart from the long build-up, let's look at the short covering candidates which should be on your radar. That's also where the action is coming in. Hindalco and IDFC First Bank make it to the list where we'll be tracking their momentums, but not major trade happening, but definitely the metals are seeing a good volume buying as well. Let's look at the long unwinding, which are the important stocks which should be on your radar. And two stocks make it to the list, GMR Airports and Eicher Motors. Not a major convincing trade, of course, GMR Airports impacted by the weak operational numbers. And lastly, I would like to point out the short build-up, the counters which should be on your radar where short build-up is there, and Astral and Supreme Industries both make it to the list. Of course, there's an important development on the industry front, and that is why we are seeing a sell-off happening, and both of them as a pair trade are seeing a big short build-up.
Okay, all right, Sharad, thank you so much for getting us that perspective on the entire FNO space. Moving on to the next question, which is from Sudhir, who's probably been investing in a lot of FMCG counters and interested in a lot of FMCG counters. Today he's asking about Marico. He wants to enter into this counter at the present levels and wants to know if this is the right thing to do. Avinash, would you recommend kind of investing in Marico right now? A lot of these FMCG names are trading below its 5-year averages when it comes to valuation. But at the same time, there is the entire global uncertainty which is putting pressure in terms of raw material prices and eventually their EBITDA margins and volumes as well.
No, I think Mahima, it's better to wait for the Q4 numbers because the bigger negative now for the FMCG companies is that this year the monsoon is not going to be great. The prediction has not been sound, and I think monsoon has got a very significant factor in almost all the FMCG companies. So I think it's better to wait for Q4 numbers and probably wait for maybe a quarter because the monsoon factor is going to play a very important kind of role in most of these FMCG companies. In case the monsoon is not good, I think you're going to see a significant amount of kind of a price decline for almost all the FMCG companies. So it's better to wait and watch.
And watch is what Avinash recommends. The next question coming in, it's on GMDC. Now, Bhavna from Bangalore actually bought it at 420. Stock's trading over 720 levels now, and she bought it in June 2024. So kudos to you, Bhavna, for continuing to hold this particular counter. Bought at 420, and she's holding 50 shares. Now, Kush, on the charts though, is the momentum largely done? Because we've seen some rare earth key aspect coming in on the fundamental side, but on the charts, what would you recommend? Is the move yet to continue even after this 12 to 13% move we are seeing on the stock today?
Yeah, it's interesting that you come to me, Puneet, because it's just yesterday that I had mentioned GMDC as a call with very sound technical reasons as to why it makes a good buy, and now my targets seem very conservative. Around 600 levels, my targets were 633 and 650, so that's been taken out in just a couple of days. And as you rightly said, the stocks actually run up quite a bit, and especially if you include today's move. So while I do see there is momentum and the stock could go higher, given the kind of run-up that it's already seen and that it's approaching overheated territories, and it has a tendency of seeing some profit booking after it reaches those overheated territories. So my suggestion would be to book partially, maybe 25-30%, and wait for a decline to add again, maybe around 660 to 680 zones. If it declines, you could go out and add that quantity again. So don't let go completely, book partial profits.
Okay, interesting one. Puneet was just putting a perspective and giving a perspective on how charts have fared for GMDC. If you would like to tell our viewers.
Well, it's been a stellar run, right? 250 rupees the low of March 2025. So just in the last 1 year, ever since this rare earth play started to come in, I don't even want to go to COVID lows because it's trading at 55 odd rupees, but just look at the move in the last 1 year, 130%. If you can pull up the 5-year chart also if possible to make this more interesting, and it's up 12x in terms of that momentum. So it's been a stellar run, Mahima.
I know. So anybody who's caught that rally is probably sitting on a gold mine right now. But moving on to the next question, which is coming in on Enviro Infra Engineers. Our viewer wants to know whether this is the right time to enter into this counter from a long-term perspective. Anil, in fact, from Gurugram is asking this question. Avinash, what would you recommend?
Yeah, I think, the company enjoys a good order book. I think execution has also been pretty good. And in the water solution business, they have a large order book which gives them a very good reasonable tailwind to grow in FY27 also. And I think there are large institutional funds, a lot of ultra HNIs who have invested in this stock. So I think if you have a 12 to 18 month time frame, I think definitely you can stay invested. You can definitely expect a decent risk reward in the coming financial year.
Got that view, Avinash. But Avinash, Kush, as well as our viewers, it's now time for the rapid fire round in this edition of Ask Profit. You both know the drill. The first question coming in now on from Vipin Kumar Sharma. He wants to know the best price for Vari Energies. Avinash, what's your view on the stock now?
I think it's a hold from our side. I think wait for the Q4 numbers. We'll probably take a call post the Q4 numbers are announced.
Okay, Tenneco Clean Air is the next one. Venkatesh is holding 38 shares at the levels of 549. Hold or exit this one, Avinash?
Yeah, continue to hold.
The next question coming in is from Anita from Vijayawada on Aisha Motors. Kush, she's holding shares at 7175, a short-term view.
I think you should continue to hold, keep a stop loss at the 6900 mark.
The next one is on Railtel. Our viewer V Murli is holding 1000 shares at the level of I think 497. Wants to know as to till what time can he continue to hold this to wipe out his losses. But Kush, your technical view on the charts for this one.
Yeah, the timing is always a tricky question. My suggestion would be you can continue to hold. It could see some profit booking, but hold with a stop loss at 325.
Khurshid is holding on to Samman Capital at 139. Now, Avinash, he wants to know if he should continue to hold or sell. Is the price also where the acquisition has happened? What's your view on the stock now?
No, I think continue to hold for long term.
Sterlite Tech, is it a good time to buy for the next 3 to 6 months? Planning to buy 100 shares is what Krishna is asking. Kush, your view?
No, run up quite a bit. If you want to add, consider on declines close to the 220 to 25 mark.
Nalco is the other one, Kush, bought at 396 by Ramesh from Bangalore. What's your view on the stock now? It's been one where a lot of investors are tracking this counter now.
Absolutely, and it's given a breakout above that 420, 418 zone is a call on our advisory for buy as well. I would suggest a hold with a trailing stop loss at 425.
All right, okay, that brings us to the end of this rapid fire. Okay, all right, we still have some time is what my director is telling me, but MRP is the next one. Sushila from Bellary is holding 5,227 shares at the levels of 179. What's the short-term targets on this one? Kush, your view?
No, ideally you should exit, but if you want to hold, keep a stop loss at 166.
We can't stop now, there are a lot of queries to go through, but Varun Beverages bought at 655. Avinash, is it a good time to average now? Our viewers have been holding for the last 2 years.
Yeah, I think he can average now.
Anant Raj Prasanth from Bengaluru wants to know if this is a good time to make an entry into this counter for the next 2 years. Avinash, your view?
Yeah, I think he can add in a SIP kind of mode.
Kush, on Siemens, our viewer Rakesh from Hyderabad wants a short-term view on the stock. What would be your view?
If you have it, you should definitely continue to hold. Stop loss at the 34.30 mark, has room to move higher, even perhaps 3750, 3800 levels on the cards.
Okay, Lemon Tree bought at the levels of 110. 500 shares is what our viewers holding. View for the next 6 months, Kush?
The momentum could fizzle out, but because he's bought it at good levels, hold with a stop loss at your buying price of 110.
Sharda Cropchem, also Kush, our viewer Shobha, actually bought at 1193. Currently sitting on a loss. Should she continue to hold or average down?
No. Don't average down. The momentum's not all that great, but you could still hold. Stop loss very tight at 1045.
Premier Energies 150 shares bought at the levels of 910. Hold or sell? Avinash, this has been one mid-cap stock that has been outperforming. Your view?
No, continue to hold.
Next one, the interesting one on Suzlon, but our viewers asking what could be the reason, Avinash, because of this lag. Is it just valuations or bigger players entering the space now?
No, I think a lot of institutional money coming in, and I think it's better to hold. I think you could see a better FY27 going ahead.
REC 500 shares bought at the levels of 380. Short-term view on this one, Kush?
Hitting the 200-day moving resistance, but his buy price could be achieved. So hold, but exit at buy price. Stop loss at 360.
Okay.
The next one coming in on Dabur, our viewer has bought, Animesh has bought it at 462, holding 200 shares. Now, can she hold for the next 1 year, Avinash?
Yeah, I think she can hold on, but as I mentioned to you that no fresh buying advisable, only continue to hold old positions.
Okay. The next one is on MCX. Our viewer Bala from Hanoi has 280 shares bought at the levels of 1382. Hold or sell partially? Avinash, I'll stick with you for this one.
Yeah, continue to hold.
Aether Energy is the next one for a very short term. Our viewer Raj from Delhi is asking a question. Kush, what would you recommend?
It's in the profit booking mode. Let it decline close to the 855, 850 zone. You can enter. Primary structure is positive, and in that case, stop loss will be at 820.
Gravita India, is it the right levels to enter from a long-term perspective? Avinash, your view?
Yeah, I think one can add at the current levels.
GRSC bought by Bhaskar at 3123. It's holding 64 shares. Avinash, can he exit now, or should he still continue to hold?
I think continue to hold.
Netweb Technologies, GK from Bengaluru wants to know if this is a good time to probably make an entry and continue to hold from a slightly long-term perspective. He wants your view, Kush.
Yes, you can. This had good momentum before the war started. I think you can continue to hold or even add fresh positional stop at 3550.
Okay.
Sandeep from Hyderabad wants to buy into MedPlus for the long term. What would you recommend, Avinash? Is it a good time to buy now?
Yeah, I think continue to hold. Buying at lower levels is advisable.
HDFC Bank is the next one. Keshav from Chennai is holding 70 shares at the levels of 832. From a time period of 2 years, can he continue to hold, Avinash? Maybe add more?
Yeah, I think for the next 2 years, you can definitely look at adding it, but time frame has to be minimum 2 years.
Okay.
We of course exceeded the time, but there are so many queries, so we are keeping to going on at this point of time. On Clean Science, also Kush, if our viewer has bought it at 800, what's the view on the stock now?
Primary trend negative, rebound could take it to or closer to the buy price. So my suggestion will be a hold, stop loss at 725. But remember, primary trend negative, so you want to exit as soon as possible.
Sirma SGS, 140 shares bought at the levels of 890 a couple of months ago. From a 6 months perspective, is this a good hold, Kush?
Definitely, it's just given a breakout above that 900 mark. Continue to hold, keep a stop loss at 900, that resistance zone, now support.
Sneha is asking a question on Lemon Tree, Avinash, if it's a good time to add the stock and enter for the next 1 to 2 years. Would that be a safe bet?
Yeah, I think for the next 2 years, this definitely can give good returns.
Kush is saying no there. D development is the next one. Kush, for you, 2 months perspective on the charts. Our viewer Neha from Bengaluru has 100 shares bought at the levels of 263.
Yeah, a lot of stocks fall in this category where they could just perhaps come to your buying price, but the primary trend remains negative. So same view here also. I would suggest a tightish stop loss at 225. Doesn't look very encouraging.
Kush, since we have you here on Biocon, also a question has popped up. Is it a good time to buy at the current price, trading at 351 and fell back again from that 400 mark? Any view on the stock now?
You remember, and I suppose so do the viewers. No, I would suggest an avoid. I prefer Oro and some of the other names in this space. Avoid Biocon.
Okay, Ramakrishna Forging, holding 500 shares, bought at the levels of 760. Avinash, continue to hold?
Yeah, continue to hold.
Sterlite Tech actually bought at 58 from Rajesh from Noida. Avinash is holding 1,000 odd shares of this counter. Should he still continue to hold? He's up almost 5x from his current from his buying price.
No, I think he should book out 50% and hold the rest, for the next, say, 12 to 18 months.
The next one is from Sunita, who's writing us from Hyderabad, asking about Inox Wind. She wants to know as to what would be the right buying price to invest into this counter from a short-term perspective. Kush, your view?
Yeah, so you could buy now, keep a stop loss at 89, and the stock could go to about 102 and about 114 levels. So you could buy now and keep a tight stop loss.
All right, so that's the view coming in on Inox Wind. But viewers, we've extended this rapid fire round. But like promised, we have a very exciting town hall that we're going to do right now with Ramdeo Agrawal, who's going to be in our studio. All the viewers who are watching us right now, you can send us your queries that you want to go ahead and ask Ramdeo Agrawal.
And that continues to be one of the bigger ones, right? It's a big time to also continue to look at, in terms of where the market is at this point of time. So you have seen that there has been, of course, the correction. You've seen some revival from the lows as well,
right.
But what a time to get such a big market veteran and a big voice at this point of time, because already we've seen a 10% move from the lows. I think Vikash from CLS actually highlighted this on our show today. So it's going to be very interesting, viewers, that if you didn't buy at the dip, and even if you missed this 10% rally, if it's still a good time to look at this as well. But that's all the time from this edition of Fast Profit. A lot more, of course, Ramdeo Agrawal on the other side of this break.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the self-prospectus and the tranche 1 prospectus dated March 30th, 2026, together referred to as the prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
We're teaming off with Dr. Vinod Hayagiri, MD and Director of CKC Jewelers. As a fifth-generation leader steering a 155-year-old legacy, he knows that brilliance takes patience. Watch at these times.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, one unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's happening.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall...
Welcome to the town hall with Ramdeo Agrawal, Perma Bull, someone who has always been very positive on Indian markets. And I would say, first of all, Ramdev ji, welcome to the NDTV Profit Studios.
My pleasure.
We think it's been too long since you made
Yes.
it to our studios, but we're happy to have you here. And of
Yes.
course, our team is here to ask you questions as well. We've opened the lines to our viewers as well. So whoever wants to ask you questions has the opportunity. I hope that's okay
Yeah.
with you.
No, that's fine, but please don't ask me about any individual stocks. That's about it.
That, of course, we know the rules. So we know the rules, guys. You know what questions to give. Ramdeji, very warm welcome. And I think it couldn't be a better time to talk to you right now because you've always been optimistic, bullish about the Indian markets. And in the last 10 days, those who had faith have been rewarded. Would you say?
Yeah, I mean, see, in anything that is most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal. What's big deal about it? I mean, market is up 3%. If you are not on the buy side, even if you are short, you say I'm bullish. You know, so you have to be bullish when chips are down.
No, but were you bullish, say, 10 days ago when chips really looked down? There was a point at which we thought we were brink of maybe a nuclear war. And इसमें अजीब सा ये था कि युद्ध इतने देशों के बीच में हो रही है. India seemed to have been suffering the most as far as equity markets are concerned. Were you bullish even then?
Yes. See, because there are two types of dialogue. When you have 10 months dialogue, it's a very different thing. When you have 10-year dialogue, in your own mind, different things will come up. You know, if you want to be right or wrong in 10 months' time or 3 months' time or tomorrow or day after, then, God knows what to see. Probably just about who's buying, selling and those kind of stuff. But when you are buying for 10 years, 20 years, I typically think that I'm buying for 25 years. You know, it's different that I'm not right every time. But I always buy thinking that it's 20, 25 year kind of bet. So the dialogue is very different, actually. In my mind, dialogue is very different. And that keeps me, if you see my last wealth creation study, which we did just now, see, what is the summary of the report? The summary of the report is the world is becoming wealthier year after year. If you see last 50 years, 75 years, world is becoming wealthier. India is becoming wealthier at double the speed. World is becoming wealthier at 7% dollar, nominal dollar. We are becoming wealthier at 14% nominal dollar. Now 14% is not double of 7%. If you take a 10-15 year profile. So India is emerging very rapidly. Of course, other countries are also emerging like
It's
China.
also our base case, which is the reason why India is emerging more rapidly.
That is also one of the same. That also allows me to be emerging for next 50 years.
Yeah.
You know, so it's a very long story, and there are very few compounded predictable countries. One is, of course, nothing can beat US. US is one and the only one. You know, like in last 15-20 years, US has gone from 30% of total global market cap share to 50%. You imagine, the world is growing at 7%. In that, US went from 30% to 50%.
Sir, FIIs ये सब क्यों नहीं देख रहे हैं?
See, they are for 10 months. They want to be right in the next 1 year, 2 years. I don't care. I want to be right on 10-year basis.
So you're saying that the average investor should not worry about the FII figures today. We were earlier this morning speaking with a prominent market voice, and he said exactly this, that the conversations he's having with his friends who manage India for global funds is that hum office aaye nahi aaye koi fark nahi padta hai. No one is looking at India right now globally.
Yeah.
Why aren't they seeing all of these points that you are talking about?
I mean, India for them is very small. Say, like, if there is one micro cap where a lot of excitement is happening, I don't care. Because in my scheme of things, that 100, 200 crore company or 300 crore company, I cannot buy enough. So I don't bother about what's happening in that company. India, in their mind, is something like that. And particularly if you're sitting in US, which is now $70 trillion, market cap, where single companies are bigger than India. Well, would you bother about an NVIDIA? Or would you bother about thousands of companies in India? So it has become like that, and US is doing extremely well thanks to this AI and AI-led capex and whatever is happening there. It's crazy. I mean, it looks scary. I mean, if they have 55-60% of the global market cap, can they go to 70-75% types? That's the kind of run. If you look at internet-based businesses, they are the only guys. There's nobody.
From a 10-year perspective, how are you looking at AI? Are you looking at it at the next big thing? We should be worried because that's the horizon, or is it something which is being overestimated right now?
It's very tough to say for me, but it's a very big development. These kind of times happen every 15-20 years. I mean, we saw the mobile phone coming in, then we saw internet coming in, then we saw the internet and mobile coming together. That exploded everything out here. I mean, literally everything, payment and scheduling and your road, everything is out here, and more things are coming. So we have seen that advent, and now AI will do its own magic. In what way? Consumer AI we have seen, where you can get your essays right for your son, you can get your letter well written. Those kind of things are done. But the enterprise AI is a very different ballgame, and that's where enterprise and government AI is not that easy nut to crack. It's not that easy as people are talking about. That will also require a lot of intelligent people to run it. You can write your own essay on your own, but you can't run a company with you can't give one instruction and the company will be run. So yes, you might do your things faster, but it's also not the situation that requirement of AI or software are limited. One of the funny thing or best thing is when things become cheaper, particularly software becomes cheaper, demand is unlimited, literally infinite. So say today, if there are 1 million projects are there in the system, and the 1 million projects could be, say, 20% or 30% faster in execution, there are 10 more million projects waiting to happen. So what do you do with that? So I think eventually demand will explode. That's my sense. Right now, for a year and a half, there will be readjustment of the old model and new model, and then eventually the new model will explode. I mean, once the software is developed, once the way enterprise will adopt AI, if that is clear, I think all the projects will be done by the same services companies.
So you think IT companies will survive, thrive and come out smelling of roses?
Survive for sure. How much they'll thrive, it depends on their own adaptability and at what pace diffusion of the technology happens through enterprises.
Okay. So, in fact, we have viewer queries coming in. I'm not going to hog all the questions from Ramdeo Agrawal, so don't worry. All of you viewers will get a chance. So will our team over here. But there is one quick query which has come in while we were talking. If you had to hold only 5 stocks or sectors for the next decade, what would they be? And Ravi specifically saying, is it a right time to invest in IT space given the AI disruption? Nothing stock sector specific. But there's always a debate about IT, and we get both views.
Yeah, so in IT, I have been saying for last 2-3 years since I advent of this AI, that it is headwinded. See, I met somebody very senior from Microsoft. He said the era of headcount driven model is over. See, if you have 500,000 people working for you, you don't need another 500,000 to double now your revenue. So, one part of the engine of Indian IT is kind of gone, where they used to add people at 15-20% every year. So that's gone. So will they be able to increase the productivity of the people or profitability per person at that pace? But I'm not competent to answer that. So I would still say the sector is headwinded. I would be very cautious unless I have extra insight. I would not put in more money.
Okay, cautious on IT. Let's get some questions in-house. Alex is starting off first.
So, Ramdeo ji, always a pleasure listening to you. And the question I have is more strategic in nature or tactical in nature, which is that oftentimes over the course of the last decade, we've spoken about fill it, shut it, forget it, patience, etc., and looking at the long-term horizon. But that the reality is that we remember the winners of that strategy. To say that in the 90s, you had an Infi that came in and now look at what Infi has done, right? But you don't remember those that have fallen by the roadside. Is there a pitfall holding on to companies that have been relative underperformers valuation-wise, because they can have a hole in your portfolio as a result of that? When do you pull the plug?
You have to see, fundamentally in investing, you have to understand what you're doing. You know, what stocks you're buying, why you are buying, what is the source of value, where is the price and where is the value. That understanding is constant, not constant, because the value is continuously changing. As the company is growing, the value of the company is growing. Say like when we got listed, we were 1,000 crores. Today we are 40,000 crores. And we are growing at 25%. So my value, I hope I am able to grow my value. So, so long as the value of the company is growing, you are pretty comfortable even if price is fluctuating a little bit. If the value of the company is not growing, then obviously you have to take your call.
But even blue chips, you're happy to sell. And
forget about blue chip, red chips. I'm talking about your company. So let's...
I'm going to actually take you up on that. Forget about blue chips, red chips. Do you think that classification and definition has changed over the last few years? You have mid-cap companies which are at huge market cap and value. And that old way of just looking at blue chips with the depth of the Indian market right now is also changing?
Come again.
My point is, should we look at blue chips with the same awe that we used to? Just taking from the point that you made about blue chips and red chips.
So I think one of the big differences is the availability of data. Now markets will become far more aligned to data rather than this. See, when you had scarcity of data, so you are saying, okay, you are a Tata, you are an FI, you are a what is that, multinational company, because they were known for terrific management and markets were generally reasonably priced. If the market is at 12, 13, 14 P and you are a multinational company, Colgate, Lever, underpenetrated categories and all, so your management was never a concern. So you made a lot of money because of aligning with them. But now, because those quality has been so much, thanks to Buffett, the quality has been so much overpriced, irrespective of the growth, that they have been stuck at 50, 60, 70 P multiple. Whereas I am getting the companies, young companies at 15, 20 P multiple and growing at 20, 25%. Who the hell bothers about those 70, 80 P multiple? All the P's will get corrected. They will not make money. They cannot make money at 70 P. If they don't grow at 25, 30%, there is no hope in hell to make money. So even if you are the bluest of blue chip, and if the valuations are upwards of 50, 60 times, and the companies are glorifyingly growing at 5%, just run.
That's the big one. I think that's the clearest answer we can get to blue chip and red chip. Puneet has a question there.
Actually, on continuing your point, because within the Nifty, you've seen IT and FMCG. Both those counters haven't performed well in the last 5 to 6 years, and the growth hasn't been there. So, continuing your point, are these largely dinosaurs essentially in that sense, and will you see that change? Or should people or investors look at the broader end of spectrum, and how do you look at from that perspective?
So there are no dinosaurs in these companies, but there are phases of tailwind and headwind. In every business, while they are growing, say HDFC Bank. I'm just giving an example. Like they came in 85. They were 1,000 crore company. When they got listed, it was less than 1,000 crore company. It got listed $40, 200 crores of equity. So it was definitely less than 1,000 crores or 1,100 crores kind of market cap. Which in next 25, 30 years, it became a 12 lakh crore company. Almost became number 2 company of the country. And it was a pride of the world in terms of banking system. Okay. So they had a continuous tailwind from the management side and from the business side. Tailwind is still there in the business side. But there is a management transition. So it is taking a breather. It doesn't mean they have become dinosaur. They will, once everything transition is over, they'll again get the growth path. So, what you do now, you know, you made a lot of money out of them, or they look cheap relatively. And what do you do? So those are difficult things, you know.
Yeah, no, but please answer that question. That is, sir, you
company
are
specific.
No, company question, company specific, nahi, but those difficult questions have to answer because I'll put it in context. I'll put my question in context. The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years, and for no fault of theirs. These are things that are out of our control. Should you be looking at them with fresh eyes?
That is what you should have independent mind. Market is going this side, left side, you should go right side. Because the data and valuation is telling me that there's a tremendous opportunity in banking side. What has happened is the private sector banks have been bought by foreigners. Almost 40 to 50% of the banks have been bought by them. Literally, they own the private sector banks. I think 45 or 48% of HDFC, which is like almost 12 lakh crores, so 5-6 lakh crores worth of stuff is lying with them. And for somehow they're not in love with India. So they've been selling. And what will they sell? What they have, they'll sell. They can't sell what they don't have. So they're selling. So there is a continuous pressure on that. And combined with that, you have whatever is happening in the transition of the bank. So that has depressed the price. Now, if you get the premium bank at 13, 14, 15 PE, how can other banks be any more expensive? The whole sector is under crowd. And the banks are extremely, if you look at their numbers, their gross NPA has never been so low. Net NPA has never been, it is pristine banking system right now. Growing at, you saw the yesterday credit growth, 16%. I think this is the best sector to have. 16% system growth, and you are getting at 12, SBI you're getting for 10p, HDFC over 13, 14p, something like that. You know, all of them are sub 15p, and your credit growth is 16%. I think if you don't make money here, at least my system tells me that you should be making decent amount of money in the next 1 or 2, 3 years.
Okay, we have a query coming in. I just want to see who it's from. Krishna Kumar from Bengaluru. As we are speaking, there's a part where he's saying, big fan of yours, watch your videos regularly. Sir, aapke bahut fans hai jo abhi dekh rahe hain. He's saying, I have 10 lakhs to invest for 9 to 10 months with high risk return. Please tell me the 2-3 shares, not mutual funds. Sir, share to batayenge nahi. First of all that. I want to come to the thought behind the query. Invest with a horizon of 9 to 10 months with high risk, high return.
So I have no idea for 9 to 10 months, guys. I'm telling you. No, I'm all about 10 years.
Is this the worst idea for investors right now?
No, it's not. See, there are million guys, there are million ways of making money. The beauty of the markets are like that. You know, if there are million guys, actually there are million ways of making money. You have found your way of making money, you don't have to bother about jokers like us. You know, so because I have my way of making money. I am at peace. I run a company and I invest. I enjoy investing. So since I have made from zero, I can also be I can be extremely patient guy. You know, I can see a lot of adversity. I have seen a lot of adversity. I have seen 67%, 67% correction in the market in my portfolios. So it doesn't, I mean, the downside, so long the story of the company is right, it doesn't hurt me. It doesn't pain me. It doesn't take my sleep away. No. I am pretty peaceful. But is that the kind of temperament everybody has? Obviously not. You know, so you have to see your temperament and what works for you and how you have been able to in market. It's not that today is day one. So if you are there for 5-10 years, you must have found your way of making money. Just stay with that and keep making money.
If you have actually made money, if it's worked for you. That is the important part.
No, I think in India, there is. I can challenge. In last 5 years back, if anybody has come, if he has not made money, I need to get, and if he has invested, he's not speculated, of course, almost 90% would have lost money. But if he has invested purely, he would have made money, maybe not 20%, 30%, but 10, 12, better than fixed income, he would have definitely made.
I want to ask you a question very, candidly. In the last 5-6 weeks, when all of this war stuff started coming in, we saw crude go up to 110, 119, no idea, people are talking about 150. Was there any point at which the bull inside Ramdeo Agrawal was scared or worried?
No.
Were you worried?
No.
Not one single day?
Why I'm telling you? Because ultimately, we are not in the, this is not our war. We are indirectly impacted. Iran itself is just about 0.3% of global GDP. First, when this kind of thing happens, I go and see the Wikimedia. How big is the country which is under destruction? So Iran is just about $300 billion country. Okay, why it became so serious is because of Gulf of Hormuz, where a lot of this oil comes out and 15-20% of oil moves, petrochemical moves, your LNG moves, your plastics move, helium moves. So those things, I mean, so many rich countries are sending their petroleum products out. So that became a issue, you know, and then oil started climbing. And we are 70-80% energy importer. So directly and indirectly, that is started hurting the company's performances, supply chain, and cost structure. And so like plastic products are up by 30, 40, 50%.
Yeah.
So obviously the packaging cost, so wherever packaging intensity is there, those companies have to pay. And can they pass on immediately? Obviously not. So it brings inflationary pressure. Government is absorbing to some extent petrol, diesel hike, but how long? After elections and all, they will also kind of reconsider this. So that will take away my purchasing power out to whosoever is supplying the energy. So to that extent, they'll be hurt. And hence, the corporate earnings will be hurt. So if my corporate earning was to grow by 15% next year, that might grow at 13%, 12%.
But it didn't bother you beyond that?
Yeah, and market had already corrected. So what is there to bother?
Okay, we're going to mix it up. Kush Bora for our question, and then of course we'll come to others over there. Yes, Kush.
Very good morning, Ramdeo. Two questions, in fact, if I can be a little greedy. One, typically these war-driven or event-driven bottoms, make the base for the next bull run. But with FII participation not returning, do you see that happening in the next 1, 2, maybe 3 years? That's the first part. And the second part is we've already seen that the retail participation, direct retail participation in markets is starting to dwindle. So in part, you've already answered this, but how does retail approach this? You know, typically you see when the markets are rising, retail comes in, and when markets go down, retail exits. So how does a retail participant and individual approach this? Asset allocation, or still continue and have that faith in the markets and still keep on investing?
I don't know. So many questions are there. Which one to? So I'll tell you. See, market is going through a structural change. In last 5 years, say till 2020, it was very FI dominated market, and Indian institutions were not that strong because retail flow was very, very limited. Come 2020, and instead of 300,000 customers, we are getting as a system 3 million customers, 10x, and till last month we got it. Okay, so this is structural shift of the Indian market, and so DI flow is staggering, and it will keep becoming bigger. I don't have any doubts. Maybe for 6 months, 8 months, it could slow down. But if you look at say 5 years henceforth, it will double. If it was 5 lakhs or 7 lakhs this year, it will be 2x of that in 5 to 7 years. So that will keep increasing. There is no doubt about it. Now what FI will do? FI will keep selling. My sense is they'll keep selling till India stays here and the world stays here. Okay, they are the only arbitraging machine between India and rest of the world.
Yeah.
Because we are not allowed to go out. In fact, I wrote to one CIO or somebody that please open we should also be allowed to go out in a limited way through ETFs or something, so that the level here is little lower.
Yeah.
So that FIs don't have any encouragement to go out, and actually they have encouragement to come in. So that you open the two arbitraging machines, one through the FI and second through the domestic, in a limited way. So that is work in progress. So, but then what will happen is that India will remain expensive, and India will keep getting DI in a very, sequential way, increasing number. As the GDP rises, the contribution here will come. Third, what has happened is the interest rates have come down. If you look at your savings deposit, you get about 2.5%, 3%, something like that.
Yeah.
So obviously there is no encouragement. Your inflation is 3, 4%, 5%. There is no encouragement to the people at large to actually go and deposit in banks. And now digital system and the marketing of mutual fund Sahiya is so intense that people are getting aligned to sending money for stock market. So I think we are passing through multiple forces. Most of them positive, except for FI is going out.
But have you observed active retail investor participation coming down? There was NSE data that shows active retail participation has come down in the last year.
I can tell you we run one of the largest broking, active broking that too, with a 98% pin codes all over the country. My March revenue from broking only is 37% higher than last year's March.
What are you saying? Well, that's the data from the horse's mouth. Hiral there.
Hi, Ramdeo ji.
Hi.
I've been following you since years, and I've seen a knack that you have to even pick companies from the unlisted space. You identify gems over there even way before they are in the IPO stage. Now, the unlisted shares market is also something which is growing rapidly right now. Data, obviously, it's unaccounted for. I mean, there is no data to prove as to how big that market is. My question is, for example, a company like Lahori, that Motilal Oswal has, is looking at. A good way to look at a company like that. And in the past, we've seen something like a Manpasand also. Now, a lot of learnings that come in, right? But because of one episode, you cannot stop looking at that sector or a company like that. So if you have to look at both of these scenarios and the kind of knack that you have, what would your learning be to a retail investor who wants to learn to identify companies and learn from their mistakes?
So, do I have to talk about your Manpasand and Lahori?
I want you to talk about the companies.
Yeah.
It's more understanding.
How do you learn from your mistakes?
Yeah. So learn is that, I mean, Manpasand kind of, I personally lost a lot of money.
Yeah.
So, your assessment of the person goes wrong. See, businesses, it's fine. Businesses will go up, down, their tailwind, headwind, margins can go up, sugar prices are up, pricing, that can happen, But when the guys are crooks, I mean, very rarely you get that level of, kind of fraud in your investment. I mean, probably this is the only one of this order. So it happens.
No, but in such a vast history of investment, these examples are going to come about. You're not going to get them all right.
Yeah. So yes. So this was one of them. That doesn't take away my process in the sense that we went through an entire process. In fact, my research in that company was most intensive, I would say, and we were literally talking to all the established investor, private equity investor for 5-7 years, and yet they couldn't catch it. So that's fine. I mean, that happens. This guy must be very smart. But now coming to any other company, see, one of the opportunity in unlisted is that you get access to a lot of data, and the companies are not that big. They are at nascent stage, so you can ask a lot of questions and you can see the path ahead, and then they need a lot of guidance, so you can buy at reasonable prices, and typically they will go public after 5-10 years, so you have buy and hold. See, real investing is necessarily at least 5 to 7 years. If you want to be a true investor, at least few years time has to be given, 3 to 5 years, 10 years. If you're not giving that, then you're kind of a semi-speculator, I would say. I mean, if it turns out lucky, you buy something and it flies 5-10 times in next 1 or 2 years. That's what people love. But that doesn't happen every time. I bought Bharti at $25. In 2 years' time, it went 25x. So, but I didn't buy thinking that it's going to go 25x. I bought it for doubler in 3 years, and I wanted to sit through 25 years. See, starting point, thought process is one, and what really happens later on, because the events you don't have control over the events. So I think you have to have a process of investing, whether it is listed or unlisted. We call it QGLP. So if you follow the QGLP process, there's enough material out there.
What is QGLP, sir?
So quality, growth, longevity at reasonable price.
Okay.
So after doing I'm doing this wealth creation studies every year. So after, I think 20 studies or 18 studies, we wrote in 2014 that we have found our mantra of investing. Okay, that is called QGLP. We quoted it QGLP so that it becomes easy to this thing. And then even now, after 12 years, I can tell you it is a fantastic piece of research. And I use that only. So when I'm looking at a company, I look at quality of business, quality of management, longevity, and reasonable price. That's it. But I don't go to the price. See, the problem is most of the so-called investors, they start with the price without knowing what they're pricing. How do you price?
So there used to be a QSQT, now it is QGLP.
For me, it is QGLP all the way.
Okay, talking about lessons in investing, I'm just going to take a viewer question and we're mixing it up as well. So Ramya Srinivasan has written this question. I thought it was an interesting one, saying, when should an investor consider exiting a position even at a loss? This kind of a decision, I think, is also a mindset decision, not just a price decision. वो दम होना चाहिए.
दम नहीं,
या गट्स होने चाहिए.
हाँ, नहीं ऐसा कितना क्या गट्स. आप 25 पोजीशन लिए हो, उसमें एक पोजीशन खराब हो गए तो क्लीन द डैम थिंग, उसमें क्या है. So Phil Fisher, this is a Phil Fisher dialogue from Common Stocks, Uncommon Profits. He used to give 3 years. He's one of the finest growth investor, I would say, and who talks about investing. Buffett, he talks a lot of big things, but he doesn't give you those, how-to types, So this Phil Fisher says he typically used to buy for 3 years. He will give any thought process you have developed, give a time of 3 years. Say if any company you think it is going to go from, say it is growing at 25%, so in 3 years time it will double. So you buy a bank which is earning say 2,500 crores, and you think in next 3 years it will go to 5,000 crores profit. But 3 years will take 3 years. So you buy today at say 20p or 25p and wait. And then things work out better than your expectation or worse than your expectation. If it works out better than your expectation, you double up position. Because your depth of knowledge will keep increasing after investing. So you have researched to some extent as much as you can, but actually real research starts happening once you have put in money.
Yeah.
Because see, life of the even life of the companies are not in the hands of the promoter.
That's true.
A lot of things happen which
There's
is
so many
beyond
external
you.
factors.
External factors. So external factors, if it turns out to be very, very favorable. If you're in packaging company and suddenly this Iran thing happens, I mean, you never thought that there will be such a problem that raw material prices will go up by 50%, my working capital requirement will go up by 50%, where do I go? So it changes the outlook.
You think MSMEs will take time to recover? Even if we do see some kind of ceasefire extension, etc., fact is crude is still at 95, 96, not at 76, 80 levels. So that some of the damage has already been done?
Yeah, definitely. Every day, every minute is damaging. So in businesses, you miss a quarter, so then it starts calling on your reserves or your margins, existing margin. If you're running 10% margin, it will become to 8%, 7%, 6%, or maybe if you're 5% margin, you're vulnerable. So those things happen. And a lot of the marginal companies, weaker companies will have tough time in, starting now for 6 months.
Yeah, so next 6 months is going to be important. Okay, Mahima there waiting patiently.
Yeah. So you talked about how you're bullish on financials right now. When you say from a 10 years, lens right now, are there any emerging themes that you're looking at? Let's say green energy, data centers, AI, anything particular that you're tracking actively, and you think that in the next 10 years, these are the themes that, would bring in a lot of money?
Yeah, so actually I don't pick stocks directly. Now I invest in my own products, Motilal Oswal private equity or mutual funds, and also I'm not that much on stock picking, but something comes along, I still take interest in reading the balance sheet, meeting the management, those kind of things. But I see growth all over, particularly capital market. Finances, lending is one thing, but because there's 3 million customers we are getting every month, there's a very explosive growth in the capital markets. Explosive, that's the word. It's not even linear growth, it's exponential growth. So your AMCs, broking, depositories, exchanges, God knows how, if the rules, nothing changes, I think they are sitting on a literally, path to heaven.
Are there any overhyped stories you're seeing right now where you think that the optimism is not warranted?
Stock-wise, there could be, but not generally.
In terms of space, sector, is it defense? How much more of an upside? Green energy, for example, idea is good, but ho kya raha hai? Solar. I'm just giving examples.
Yeah,
is there anything like that?
But it's not grossly overpriced or overplayed theme types, Like in 21-22, there was the digital, which was just, so even digital companies, internet companies, they are quite corrected, So I would think that broadly market is very balanced, so to say. So it's not very cheap. At 21 times multiple, it's a fully priced market.
Yeah, but how much quick commerce can grow, for example? How much of these can grow? People are wondering, when will profitability come? You've always been a believer in that space. Yeah. There are enough on the other side who say that, loss-making company bar fund utha rahi hai. What does it really mean?
No, I generally don't buy companies which are making losses, but here I think there is a consumer shift, the way we run our household. I think that is undergoing change, and that is not going to reverse. And the category is very large, and so one has to see how the accounting happens here. They don't have stores, so it's a cost. So there is a cost of acquisition of the customers. How much you have blown? See, you have to see if you are building a 50,000 crore turnover business, how much you have spent. If you do it through the actual stores, how much it would have costed? It would have costed you 15,000-20,000 crores of stores to do those 50,000 crores turnover. Here it has costed you 8,000-10,000 crores of losses to get you all onto the online. So, I mean, it is the way you look at it. And when you build a store gets capitalized. Whereas here, entire thing goes in the P&L. So that's what the loss you see.
Yeah.
If by chance you force the store companies to write off their store also in the P&L, the numbers will look very different.
Oh, yeah, that's a good way of looking at it.
Yeah, that's
Have you
how
seen your own habits shift? Do you order a lot online?
Yeah, I don't order. I see in my home things coming in, but my daughter-in-law runs only on one of the quick commerce.
Yeah, that's completely it.
Yeah, so younger people, they are far more aligned. My staff is far more aligned than we people. But yes, but then I know I have all the app here.
I'll tell you the reason I asked this question. When you are spotting opportunity, do you also take away from observation what you're seeing around you? And then, of course, you have to go and look at what the company is doing, how the management is, the numbers, etc. But how much of a part does that play, the skill of observation?
Yeah, so see, I think observation or common sense, the common sense is, you can't take away common sense in investing. That's the most important part, and that's where you get conviction, and you have I would say conviction. See, like all these companies are making losses, but I have in my portfolio all three of them.
So some of that conviction comes from what you're observing around you.
Yes, if nobody's using quick commerce and then I'm holding the stock, then I'm in deep trouble. But if they're growing at 100% every now and then, we are using it, and crazy things are herbal on this thing on the go. So I think, but it's speculative. It's not a classical my type of investment. I don't buy things unless there is a profit and growth in profit. So this is not my type of investment, but sometimes you take a punt.
Wow. I think ever since you took this punt, it's all proven right so far. I don't think there's anything.
Nothing like that.
At least in this space, it's not been.
No, like we are underwater in what is that other third one? Insta. Swiggy, yeah. So because there is so much of competition and all, so it's not that it has made money or anything like that. It's nothing, but it is very exciting space. See, it's again 10-month and 10-year dialogue. If you are buying for 10 years, I think you could be sitting on some fancy gains, but on 10 months, God knows whether we'll be profitable or loss making.
Yeah, the idea is to have that patience. Varsha.
Thank you so much. Hello, sir. Pleasure to have you. My question is related to valuation. Suppose if a company is available at 80, 90 PE with a growth visibility of over 5 years, should investor invest in that company or should give a pass on? Why I'm asking this is because even if a single bad news comes, the stock will take a massive hit. So what should an investor do in that situation, considering the growth visibility over 5 years?
What growth visibility? What level of growth?
Say the company is going at 35-40% for the next 5 years.
40%, then it can sustain for 90p.
Even if the bad news comes?
Yes. No. But growth should come. See, if the bad news is related to growth only slumping, then obviously the stock will suffer. But if the growth continues, but there is the Iran war or something, then it will suffer for some time. It will come back very quickly. Then the stock deserves to be at 70-80p if it is growing at 40% for next 5 years.
I think the big distinction over there to highlight is that is the bad news because of something endemic to the company, a problem that is within, say, the management or the kind of business or a tectonic shift, or is it an external one which can come and go? I think that is important to differentiate.
Yeah, see, earnings is the core of valuation. If the earnings is not impacted, but external forces are, FI is selling, this is selling, that is selling, but earnings are intact, I don't care who is coming and going. Someday the guy who was going out, he will come in a rush, So tomorrow things may change. India might emerge as the only country to go to. So then what do you do? Then everyone wants to, see, today only DI is buying. Tomorrow if by chance situation comes where DI and FI both want to buy, where are the stocks?
So, just to come back, and you gave very important data points from March as well. Do you think that fear of what will happen with the SIP loyalists is overblown? I was looking at one report today which said Nifty SIP returns for investors are at 0 for the last 3 years.
Yes, it could be.
Not everyone has that patience to stay on.
Yeah, so market can go through further correction. But 10 years hence for the market, where it has to go will be there only. in between, say, so for last 1 year, market has done nothing. For last 2 years, I think it has done nothing.
Yeah.
1.5, 2 years, it has done nothing. Maybe another year of consolidation.
You think another year of consolidation?
I don't
we
know.
should be
I don't
prepared
know.
for?
I don't know. I am looking at my companies which I have invested in, whether they are growing at 20-25% or not. My job, see, this market thing is just a time pass, I'm telling you.
क्या बात कर रहे हैं, sir?
It's complete time pass. It's made for NDTV Profit and CNBC only.
No, it's a lot of people sit and watch what we do. So you're saying market outlook is not something you're worried about at all. If I were to ask you like next 12 months...
Who is going to give me 10 years market outlook?
No, 1 year.
Yeah.
1 year outlook. 1 year
But
outlook
I bought the stock for 10 years.
Okay. You know, there's one, I know we've taken a lot of your time, but there's so many queries coming in. So just a few more I will take. So from Chennai, B. Soumya is writing, what's a sector people are missing today but may dominate tomorrow? Anything that you have spotted which maybe B. Soumya from Chennai has not?
I think capital markets.
Yeah.
People have done well, exchanges have done well, BSE has done well. BSE, for your information, for last 6 years, the fastest growing company. It has grown double every year. Double every year, you imagine. From 9-10,000 crores, it is up to more than 1,10,000 crores or something.
And you're going to have...
And we're just watching like that.
But you know, scarcity premium will go when you have another player which will list.
The game is going to become so much bigger. They're going to mint money. It's all free cash flow machine. All 140 crore Janta are going to trade only in these two exchanges.
You think there'll be a time when 140 crore Janta will trade? Because
right now we have a demat accounts of about 220 million. In 2020 we were 40 million. Now we are 225 million. I think we are going to be 500 million demat accounts in next 5 to 6, 7 years. Will be the more I can bet will be the most crowded retail market in the world, capital market in the world.
Most crowded capital market in the world. Do you think the Indian investor has the stomach to also see losses? My question is this. Usually we used to see, and do you think that's changed as a trend? We used to see the moment there is sign of trouble, people would stop talking about markets. There was a time a few years ago, you know, even in parties and conversations, people are saying, okay, what's happening with their portfolio? That has quietened down a little.
So one of the what do you call new thing is that 80% of the market is new. See, only 40 million demat accounts were there in 2020. So I would assume that they had some legacy, 3, 4, 5 years of the same. The guys who opened the account only in 2020, so they are at best 5, 6 years old.
तो डर तो लगेगा।
हाँ, तो डर तो लगेगा। और अभी क्या, अभी भी पहली बार बाजार करेक्ट हो रहा है। See, हमने तो बहुत correction देखे हैं. Like I started in 1990 when the index went from 700 to 4200, 7x, and then it crashed 50%. Then we waited for 10 years. Then Y2K happened. From there, again it went double and again crashed. Then mother of all the bull run happened, GFC from 2003 to 2008. Again market went from 3,000 to 21,000. Again it crashed by 50%. And from there, here we are. So I think let these guys who are coming now in last 5 years, they must also know market goes down. Who is going to tell them? Unless they go through themselves.
Yeah, market is teaching them.
Yes,
so
market is teaching them.
We have two quick, you know, just in time of what we were talking, Rajesh from Noida is asking, long-term investing versus profit booking.
What to follow?
What to follow?
No, both you have to follow. See, long-term investing doesn't mean that you don't have to book profits. I bought say Bharti in 2003, thinking I'll double in 3 years, but it went 25x in next 3 years. So I had to sell because there were developments which I didn't like. Say scam happened, 2G scam and all those things happened. I said, boss, enough is enough. हमारा 25 गुना होगा, भागो यहाँ से. We sold that. But
no,
I had bought it for long term.
No, but if those developments had not happened and you
I
were sitting
on
25x.
Yeah, I sit in so many companies 20-25 years. Today also I am sitting with companies for 21, 22 years.
Can you name, I know you can't, but anything which
Better
you have
avoid.
20 year...
21, 20, 23 years. And I think it is as cheap as when I bought it 23 years back.
My God. I know you can't give the stock name, but that would be, I'd love to know. Anurag.
Hi, good morning, sir.
Hi.
So we are very young investors. We have just started. So one thing that we have learned is diversification. So in terms of assets particularly. So in these AI-driven economies, do you think commodities are still the place, the safe haven track that we have with gold and silver? Should we still look around that, or equities should be the preferred bets for us?
Yeah, so you do what you understand. See, don't go by textbook and don't go by what this television guys they keep teaching you.
Sir, he works in the television company.
Go by what you understand. I mean, listen to all of them, but you have to, when they say something, all kinds of experts come. Gold expert comes, commodity experts comes, your real estate expert, they'll bring best of the experts. But आपको तो बात उसे समझ में आनी चाहिए ना, आपका पैसा है, वो तो चला जाएगा बोल के, आपने लगा दिया रियल एस्टेट में, मालूम पड़ा आधा हो गया भाव, सो किसको पकड़ने जाओगे आप? सो यू हैव टू गो बाय योर ओन अंडरस्टैंडिंग. जैसे मेरे को खाली इक्विटी समझ में आता है, मैं किसी जन्म जिंदगी में दूसरा कुछ नहीं खरीदने वाला हूँ. आई एम गोइंग टू बाय ओनली इंडियन इक्विटीज. Even to go out of India also, I understand equity. I can go and sit in New York and make some money. But I have to go and sit there to get into American markets. मेरे पास वो time है नहीं. I am pretty happy in India. So I have kept India as a country and only equity. But that is not advice to you. You must go by your own skill. If your father is in real estate and you understand real estate well, go and do it.
Okay. So what about the service class then?
Pardon?
Because what about the service class? We see gold returns like going 100%, but in equity we're going only 10-20%. Then how do we compare and how do we look at the horizon?
Try to buy what is unpopular. Don't try to buy popular.
Okay.
You know, just on the part about you going and sitting in New York, there was a report today quoting a very prominent market voice, and the quote was that his 50% of his portfolio is now outside the country. Not because he's bearish or wants to exit India, but 50% is now outside the country because he's thinking India is kind of tapped out. Do you see any of that?
We'll see after 10 years. Whether he wants to come to India or I want to go to America.
Okay, we will not definitely wait 10 years for our next interview with Ramdeo Agrawal, but I want to thank you profusely. I know we took more questions and more time over here, but you've been very patient. You've answered not just our young investors in our newsroom, but our viewers as well. Thank you so much, Ramdeo.
Thank you.
Thank you.
Pleasure.
All right, we'll take a very short break, but all the action continues on the other side on NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
कुछ बड़ा होने वाला है.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं. बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है. इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं. कैप्री लोन्स फर्ज निभाते हैं.
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
We're teaming off with Dr. Vinod Hayagiri, MD and Director of CKC Jewelers. As a fifth-generation leader steering a 155-year-old legacy, he knows that brilliance takes patience. Watch at these times.
Tamil Nadu votes decisive, uniquely the way it does.
Politics, power and cinema and all of that in an unprecedented Dravidian script.
This is not an election easy to call. It never has been.
And unravel grassroots conversations with the voices that matter.
That's why we travel across Tamil Nadu to get you the real picture. From the OG of Indian elections comes the next big political blockbuster.
Because
Tamil Nadu
votes only the way Tamil Nadu does. Tamil Nadu elections on India's original election voice.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How
The show that sets the prime time agenda.
we'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels,
Benchmarks is off days high right now. Nifty struggles to stay in the green
while the Sensex was little changed. Metals shine, IT and FMCG resilient, but pharma and realty drag. All eyes will be on Wipro, that will report its Q4 numbers today. Modest revenue uptake, stronger margin performance on the cards. Watch out for the commentary on a buyback and outlook on the deal wins. A high-stakes special sitting at the Parliament. The extended budget session takes up 3 key bills aimed at fast-tracking 33% reservation for women in the Parliament and state assemblies, marking a crucial legislative push. Motilal Oswal Financial Services founder Ramdeo Agrawal says India is getting wealthier at double the world's pace. He also urges investors to stay bullish when markets weaken. Think in 10-year cycle and recognize quick commerce as a long-term compounding story. Hello and welcome. You've tuned into Markets at 12 and I'm Nisha Podar. Let's take a look at the markets. And yes, Nifty 50 has really given up all its gains in the middle of the trading session, now inching downwards towards a 1% loss at the current moment. So 24,170 odd levels. And there you can see in the last half an hour or so of trade, the market has let go of a lot of gains. So that's where Nifty 50 is, and turning around 2.2% loss at the current moment. All right, when we talk about the other aspects in the market, take a look at the other sectoral play that's really working in favor of the markets. Well, metals, defense, IT, these are the gainers. Remember, from the IT space, Wipro is looking at really posting its results today, so that will be watched out for very, very closely. But beyond that, all other sectors are showing a downtick. In fact, it's the real estate as well as auto sector which are down in trade today. Also, looking at some of the internals coming in from the composition of Nifty 50, it's Larsen & Toubro from the metal pack, it's Hindalco which is really gaining, Infosys from the IT pack, and ICICI Bank from the pack of the bank. So those are the companies which are doing well. HDFC Bank, that big boy which has been really taking the lead in terms of gains for a few sessions, that is drawing down the most. It's minusing 26 points from Nifty 50 at the current moment. So 0.27% loss when we talk about Nifty 50. IT sector outperforming the key indices. It's also the banking space which is underperforming the index today, 0.4% down on that. And when we take a look at the broader universe, remember yesterday in the market momentum, it's the broader market which actually came out much more strongly and saw a lot of buying coming in. And today also it's the mid-cap index which is really performing better, but now it's in the red tinge as well. So there is some bit of profit booking, and also expiry has a role to play. All right, let's take it straight to an important conversation coming in. Anshul Jain, the Chief Executive India of SEA, MEA and APAC Office and Retail at Cushman & Wakefield, joins in today. Anshul, always a pleasure speaking to you, and welcome to NDTV Profit. Yes. So, Anshul, we're just taking stock in a very uncertain environment where many factors are really paying out for the real estate space, and especially in the commercials rental space. How are you seeing, in fact, your company, you have also authored a report on how the weakness is slowly creeping in. What are the key highlights from the report coming in?
Yeah, Nisha, let me just correct you a bit. I think what we are not seeing right now is the weakness. I think perhaps maybe I can explain some of that data. I think the first quarter was quite outstanding as far as gross leasing activity is concerned. There was almost 22 million square foot of gross leasing activity. This compares well with whole of last year, where the gross leasing activity was, around 90 million square foot, right? So I think it's kind of still tracking to what it did last year. The reports around weakness is largely misinterpretation of perhaps a data point on net absorption, which is the net new space getting occupied. Technically, that definition depends a lot on the new supply coming on board as well. So you can do the deals, but if the supply gets delayed, it's hard to occupy that space, right? So I think the way we measure the market activity is gross leasing, which actually has been doing really well in the first quarter.
Right. When we talk about, Anshul, the absorption, and here I'm specifically talking about this particular space, which is also, remember, the commercial real estate space with rentals, which has really become a very large sector and pocket of growth in the last few years. Even REITs have benefited from that. That particular point and space also is at risk with the global scenario. Are you seeing any important, factors on the ground which is playing out, which is playing to the uncertainties, and also the companies being a little stressed when it comes to their overall economics globally because of the Middle East war?
Of course, the Middle East crisis, the usual oil prices go up, inflation goes up, GDP comes down, right? That has a direct linkage to commercial office expansion and of course, from a capex cycle perspective, as interest rates rises, people are hesitant to put new capex into building out new offices. Having said that, if I just compare it to, let's say, the year 2022, where, if you remember, due to the Omicron wave at that point in time, the offices were shut for 3 months. Even in a scenario where people are working from home completely for 3 months, 3 quarters was enough to get the demand rolling back. So I think Indian markets have a lot of resilience in bouncing back very quick. So again, it really depends on how long this war will extend. I think a couple of months of sort of, tensions, if it kind of finishes, I don't think it'll have an impact on the Indian property sector. Are people a little cautious right now? Answer is probably yes. Are we seeing deals dropping? Answer is no. There's been some delays on the fringe, but don't forget that most of the office markets are undersupplied in India, and most of the deals that are happening, or larger deals that's happening, are for occupation in the year 2027 or beyond. So the office market, from that perspective, the demand still remains fairly robust.
All right, demand still fairly robust. Some bit of delay could be part and parcel of an uncertain environment. But Anshul, to your point on the demand remains higher than the supply. And of course, there was zero new supply in especially areas like Hyderabad as well as Pune in this particular quarter, which your report suggests has also pushed the Hyderabad prices up by over 10%. So what does this really suggest, and how are you seeing the pricing mechanics really working out now for this quarter?
Yeah, so notwithstanding, so let's make a couple of assumptions. This Middle East war is not going to last very long. Let me put it that way, right? It doesn't last for 6-9 months with devastating consequences. So if that doesn't happen, I think broadly what we're seeing is that demand's steadily outpacing supply or consistently outpacing supply over the last 4-5 years. Supply has been in the region of 50 to 60 million square foot. The gross demand's been in the region of 80 to 90 million square foot. We've seen rents rising consistently across the board at 5% per annum. An interesting stat is, for the first time, the rents on a weighted average basis across the key markets that we track are in triple digits, which is 100 rupees per square foot. So that's a very interesting fact. And given the level of demand that we are seeing from interested parties, we think that this demand's likely to continue in the next kind of 3 to 4 years. And therefore, we are likely to continue to see downward pressure on vacancy and upward pressure on rentals in all key markets, particularly if your building is great, particularly from prime asset, because corporates are making beeline for better quality assets and better quality buildings.
That's right. This has become, a very, very critical aspect of large companies to showcase themselves in a good project, and the project which has amenities and is also green in some areas. But you have to agree, Anshul, that Mumbai's market, that is the one which is off the charts, very expensive at the current moment, with the vacancies really being almost full and the demand being high. How are you seeing the pricing power for the developers and the potential growth there?
Mumbai has obviously always been a tight market, particularly when it comes to the key micro markets of BKC, etc., which has become the preferred market. Even markets like Powai, Western Expressway have done well. Navi Mumbai has done well. Parel's kind of bounced back. So I think, and with the sort of, the great infrastructure development ceiling all the way going down to South Mumbai, we're likely to see a revival in the South Mumbai markets as well. So, much like any place else in India, I think you will probably continue to see the higher end of demand, particularly banking, financial sectors, high-end technology sectors still going to Mumbai, and services companies, legal firms, and other accounting services. These will likely to continue to expand in Mumbai. So from an aggregate perspective, Mumbai will not see the kind of demand that perhaps what a Bangalore or Hyderabad does, but it'll see a very high quality demand and therefore the pricing.
Right. You mentioned one thing, Anshul, and being from Mumbai, I would say that the connectivity, road connectivity with coastal road to South Bombay has now become so smooth that will also have an impact. You said that South Bombay is also going to see the demand, where a lot of office spaces got vacated in the past and moved to the other areas. Now, how does the infrastructure, also commuting infrastructure, where also Maharashtra government has paid a lot of attention, and also the connectivity, how is that going to really impact in the long run? How are you seeing that really develop?
What it does is it helps develop other micro markets as well, right? So as you said, South Bombay was out of fashion, South Mumbai, and that now can be back in demand, provided there are good quality buildings available in South Mumbai. And of course, given the lack of connectivity over years, there's not been many new developments in South Mumbai. Land's also pretty rare. But if there is a good quality development there, there'll be massive demand there. And as the connectivity improves, you'll see other micro markets emerging, which is great for Mumbai because, with the kind of commuting distances and new sort of residential markets kind of emerging, you want the city to have multiple business districts. Having said that, a central business district like BKC and Western Expressway, which has been preferred for a lot of multinationals' preferred destination, is going to continue to thrive, but other micro markets will emerge.
Right. And Anshul, out of all this that you said and the perspective that you gave on the overall market, how do you see the REIT scenario really panning out? Of course, business trusts have really developed over 12, 13 years and now have come to a very big, pocket in the market. A lot of important developments have also made it much more acceptable in the overall market as well. But yields have always been still a concern. A quick view on the REITs and how that play as an investment and an asset class really now stacks up.
Look, REITs, in my mind, have actually done very well in India, right? And of course, it went through a perception issue during COVID that people are not coming back to office and whether the yields will hold up, etc. But the reality is most REITs reported in excess of 95% rent collection, very little delinquency, and they've given some pretty good return. Don't forget that REIT is more of a yield product, and you get 6 to 7%, about 6% yield, let's say, back to you. But also what's happened over years is it's given capital appreciation. So in my mind, I think REIT remains a very safe product. You have some great underlying assets behind all the listed REITs at this point in time. The occupancy remains very high. The rent collection remains very high. We're likely to see this market only deepen, and you'll have more REITs hitting across different sectors, office, retail, perhaps industrial in near future. Of course, with mutual funds being allowed to invest in REIT, the market of investors become deepen. And as people understand the product, I do think that REITs in India are set up for a very, very vibrant future.
All right, the very uniqueness of the yield as well as the capital appreciation, the stock appreciation, that combination really works for REIT. Thank you so much, Anshul. It's always a pleasure to speak to you and take your views on the real estate space. Thank you.
Pleasure.
All right, with that, we'll slip into a short breather on markets at 12. More discussion on markets as well as the news of the day on the other side. Stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
Welcome back. You're watching Markets at 12. And yes, market has, Nifty 50 has let go of all its gains in the last half an hour or so of trade. And a couple of heavyweights have really led to this. Take a look at HDFC Bank in the same momentum that heavyweight has really lost and is a key dragger. And that has been a big concern. Sun Pharma has also fallen from the top, and that has had an impact on the market. All right. Now, Dhananjay Sinha, the co-head of equities and head of research and strategy as well as economics at Systematics, joins in. Dhananjay, pleasure welcoming you on NDTV Profit. What do you make of the sudden, sell-off in the market?
So I think market was kind of looking for a sort of easing of the anxiety emerging from the global disturbances, especially in the Middle East, and the sort of talks that was happening between Iran and US. I think that part was something that the market was sort of looking at. The post-discussion feedback that people sort of factored in was that you might actually see a sort of agreement and downscaling of the aggression that is there. So people were expecting a easing of crude prices and the deadlock that has been there. So that was expected to ease. So I think as things are sort of filtering in, I would say that it's still a very ticklish issue. It's very complicated. And what people are sort of realizing now is that while there was an obvious reason for a sort of a pullback from or sort of a revival from the peak level of anxiety, I think people are now realizing that it is something that will be long drawn. We are seeing that crude prices continue to remain at close to $100. And I would say that versus what the level was last year, you are at least 50% higher. Now, the result season is also likely to start now. As a result of that, people are sort of mindful of what guidance companies would give. And clearly, companies are not guided by the way market sentiments move. As a result of that, people are kind of somewhat, conservative with respect to what kind of outlook that would come from the companies. So that is what I think the market is grappling with. So you have episodes of revival, but I think the broader concern continues with respect to the oil prices, the cost of raw material, and we also have the weather forecast, which is telling that IMD is forecasting about 8% deficient monsoon this year. That will have an impact on the rural economy and the overall consumption theme. So people are concerned about this. The market is sort of straddling between optimism on the headline with respect to the war, whereas the underlying fundamentals remain on a weakish side.
That's right, Dhananjay. In fact, on any day in the last few weeks, that we have seen that the crude prices have been below $100 per barrel, and Brent crude today is even below 95. It is estimated that the market will rise. But the two important factors that you mentioned is now starting to play out, except are the earnings, as well as also what kind of a trajectory the market takes in terms of the play on the war situation. So when we talk about earnings in one, that is one big thing that the market will have an eye on. And is it fully baked in terms of at the ground level, how our supply chain as well as cost escalation of raw materials really going to impact which sectors, and how much of that is unbaked in the market and we could see as part of volatility going forward?
So I think if you look at the markets, there has been a sort of lackluster performance for the last 1.5 years. I would say even before the eruption of the war. So essentially, the concern about growth, especially with respect to earnings, is something that the market was already grappling with. So if you look at the Nifty earnings for FY 2026, it is on a trailing basis roughly about 3.5%. And if you look at Sensex, it was just about 1.5%. So from a high levels of compounded growth of 20% till FY24, there has been a sort of a downtrending that has been happening. And last year there has been a issue with respect to the demand scenario, as a result of which the government had announced income tax rationalization and GST reduction in the second half. So clearly that thing, that softness in the demand was something that people were grappling with. There was a sort of episodic bounce because of the GST reduction, and we have seen this in auto numbers and select consumer names. But now the market is grappling with the effect of the war and the impact it would have on the supply chain, the cost of raw material. All those things will be relevant, and we have the El Nino effect also. So there is a compounded headwind that is there from a softer demand to these two other events that are there. So I would say that in terms of how the sectors will be impacted, we see that at a broader level, what we did was to really understand the sensitivity of the non-finance companies' margin and profitability in the context of rising crude prices, because we need to account for the fact that when crude prices rise, all of the raw material prices rise and the logistics costs increase, all those things happen. So roughly what we found is that for every 100 basis point rise in crude prices, the raw material cost goes up by almost like 50 basis point, and the top line, while there is some pass-through of rising costs, it rises marginally by roughly about 25 basis points. So clearly, if you have $100 kind of a scenario, let's say $90 to $100 scenario for crude, you might actually see margins compressing from 15-16% to 10%. So I think that is something that I would say is not still baked in.
Right. A lot to be baked in there. Thank you so much, Dhananjay. But keeping an eye out on the markets, and volatility really continues despite the crude oil prices being at softer levels today. But then other pressure points probably building, as Dhananjay was mentioning. But take a look at Reliance Industries and Bharti Airtel. Both in tandem are weak in trade today. And those two heavyweights are really putting pressure on the market, even though they are in similar space only as a commonality of telecom, but also remember for Reliance Industries, the upcoming Jio DRHP filing is something that is building the momentum on Reliance Industries and also the results at the later part of the month. So keep an eye out on these counters along with HDFC Bank. All three are putting pressure on Nifty 50. All right, moving on to Groww. Groww is quietly pulling ahead in the slowing broking landscape, even as the retail trading cools and active investors really fall. In fact, Groww continues to gain market share, driving the Q4 growth. Meanwhile, Zerodha, Angel One, as well as Upstocks lose ground, while the traditional brokers regain traction, signaling a clear shift from breakneck growth to industry consolidation as regulation and volatility push out low activity traders. Nimit joins in with all the details on what's really happening with Groww. It's the billion brains garage ventures that we are talking about. Nimit.
Yes, absolutely. And like you said, true to its name, Groww is one of the only companies today in the broking space, in the discount broking space, that's still gaining market share and is growing despite a 7% fall in FY 2026 in active investor numbers. The NSE reported that the active investors have fallen about 35 lakhs from data from 2025 to 2026. Now, while most of this came from steep discounting brokers falls, for example, Zerodha dropped to 15.08% from 16.3. Like you said about Angel One and Upstocks have the same numbers. Groww, for that matter, rose from 26.26 to 28.31%, adding 2 percentage points to its market share in a contracting market. A substantial feat indeed. Now, broadly, like you said again, that there has been a shift, a clear shift in the way how these broking industries are looking at the market. The rapid consolidation phase is over. There are more active investors now and serious trading going on in the market. Of course, derivatives have driven a substantial amount of that, but because of the recent FNO curbs as well as market volatility, the low activity investors are moving out. It's going to be high activity, intense active investors moving forward, and Groww is seriously capitalizing on that right now.
All right. Thank you so much, Nimit, for giving us that roundup of the numbers and who gains traction in the broking business. In fact, let's take it to Parth also with all the top buzzers at this hour. Which stocks make it to your list, Parth, today?
Thanks a lot, Nisha. So there are three stocks that are in focus today. The first one is Tejas Networks, which reported its Q4 results yesterday, and they have actually reported their 5th consecutive quarter in losses. The revenue was down 82.6% year-on-year to reach 333 crores, while the company reported an EBITDA loss of 118 crore versus a profit of 121 crore last year. They also reported a loss of 211 crore versus just 71 crore last year. So they have almost tripled their losses in this quarter. The second one is Indian Metals and Ferro Alloys, which has updated the status of its ongoing projects. Their Greenfield Ferrochrome project is in the final stages and is expected to be done by the September month of this year, while their Kalinganagar acquisition is done and all the 4 furnaces in that plant are now operational. Their ethanol project, however, is slightly delayed and is expected to be commissioned by the July of this year.
All right. Thank you so much, Parth, for getting us all the lists which are the buzzers in trade. With that, completely out of time on this edition of Markets at 12. Thank you so much for tuning in and keep it with NDTV Profit. Thank you.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
We're teaming off with Dr. Vinod Hayagiri, MD and Director of CKC Jewelers. As a fifth-generation leader steering a 155-year-old legacy, he knows that brilliance takes patience. Watch at these times.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Heera Aldadia and Sharad Dubey, standing at the NDTV Profit market pit with all the action in the markets today. Sharad, an interesting day of trade right now. If you have to look at Nifty 50 as well, I mean, slight under pressure, but what are you looking at? Because we've slightly given up the gains.
Right. Good afternoon, Hiral. And yes, you are right. There is a technical pause, to be honest, in the markets. A profit booking also coming in. But yes, the sell-off did intensify over the last 15 odd minutes, and the markets are trying to figure out where will be the next support level. Let's look for Nifty Bank also. What's the situation, and we'll see the reversal which is happening is there pertinent for them also, but the sell-off is slightly more than Nifty going ahead. But what happens on this Thursday is very much important. There is a technical pause at play. Nothing much to be majorly concerned about. Profit booking is happening from the recent rally which we have seen, and its analysts suggest it's a technical healthy pause. Unless more fall happens, then we'll be looking at different levels as well. Overall, value buying still continues in small and mid caps, and that's a very good news, to be honest, especially if you look at the broader indices. The up move is still there. Mining, metals and select defense stocks are seeing a good buying, good volumes. Of course, some news flows are also there. Some broking upgrades are also coming in, but nevertheless, remember, Sensex expiry is also at play, so there will be volatility going ahead as well for the next 1.5 to 2 odd hours as well. Apart from this, largely we see most of the asset classes are stable, and the risk of sentiment is still reducing because of the development of the optimism which has come in, and which we have seen that in European markets, your Asian markets, and even US futures today. So largely the markets, if there is, you could say the triggers are on the positive side, but we should be focusing on the Q4 earnings, Angel One, HDFC AMC, HDFC Life, and the IT biggie. We are talking about Wipro earnings, as well as an important buyback announcement which should be coming in. So you should be targeting all these stocks as well. So stock specific news is something you should be watching out for, Hiral. But yes, today there is a technical pause at play.
Okay, technical levels at play, but let's quickly look at the watch list. Premier Explosives, the DRDO news that has come in, that is positive. Likewise, you have Apollo Micro also that is buzzing in trade. Moving on, you have GMDC and OMDC. The mining stocks are seeing a rally in today's session. Let's see if there is some announcement that could be on the anvil. Sonata Software, First Source Solutions, strong volumes. HDB Financial, a strong Q4 is what the company has reported. There is an operational update that has come in for IMFA, that is Indian Metals and Ferroalloys, which is strong, and that's the reason why the stock is up in trade. And you have a Gallant Ispat and Kiaran Heat Exchange that have hit an all-time high. Suraj Developers, they've acquired a land parcel in Mumbai, so that stock is in focus. On the negative side, Astral and Supreme, the PVC prices have now fallen by 10 rupees per kg. You know, in the last couple of weeks, we were covering both these counters from a perspective of the PVC prices, which were increasing, and now we've started to see that correction reflective of what's happening in crude prices. Tejas Networks, again, weak Q4 earnings is what you're focusing on, and that's the reason why the stock is under pressure. But let me head across to Sharad to take the rapid fire with Osho Krishnan of Angel One.
Thanks a lot, Hiral, for that. Osho, good afternoon. It's always a pleasure to have you. We'll start our rapid fire segment, especially the defense-related companies. If I talk about Apollo Microsystems and even Premier Explosives, good DRDO-related announcement has come and a good up move in both these counters. How do you see this developing, and do you see more, momentum going ahead for these counters?
Very good afternoon, Sharad. Firstly, thank you for having me at the show. Well, yes, no doubt defense counters are looking very positive. There has been a very strong technical pullback in major of the counters. Apollo Microsystem has seen a decisive surge of nearly 30% in the month, and it is currently hovering around 200-day simple moving average. But I'm expecting that in the short-term period, the counter can see some kind of a strong upside movement. 270, 280 is the first target. Once it crosses the zone of 280, then we need to review the counter for medium-term.
Right, and the next group of stocks are the mining related stocks, GMDC and OMDC. Both of the stocks are doing really well in the trade, and volumes have also picked up. Any kind of a profit booking move we can expect, especially in GMDC, Osho?
See, GMDC today has given a very strong breakout. Near about 20% has already rallied in the counter, but there has been a technical breakout in this counter. So on the higher end, the first target that is expected is around the zone of 720. So it is obviously above the zone of 720. So one should trail profits around with a stop loss of 720 and try to ride the momentum. So overall, there is a technical shift, and I am quite bullish in the counter.
Okay, so stay with it, ride the momentum. Okay, apart from this also, Osho, I just want you to understand, we discussed GMDC, OMDC also, but we need to discuss the technical up move which has happened in Sonata Software. Select IT stocks, good buying is happening across the counter, especially the small cap cash counters. Your views on Sonata Software?
For Sonata Software, I'm not very much optimistic on the technical perspective, but there might be some kind of technical bounce that might be seen in the short-term period. The first and very crucial target is of 300, 310 odd levels. So in the short-term period, that is the target that one can expect. But again, from those levels, the counter has given a breakdown. So one should be cautious around those levels, that whether there will be continued momentum or the counter can see some kind of further correction from those levels. But from here onwards, another 30 points of rally can be seen in the counter.
And the next stock is SDB Financial Services. Strong Q4 earnings coming in. A little bit of breakout levels also coming on short-term basis. What are the key levels to watch out for, Osho?
For this counter, 700, 720 is a very strong resistance level. So I will be waiting for these levels to have a strong breakout, and only after a sustainable move above 720, one can get some kind of complacent bullish bets in the counter. At current levels, it will be advisable to maintain a cautious stance with strict stop loss of 675.
Right, Osho, there's a short build-up happening for both Astral and Supreme, and earlier Hiral had mentioned about the PVC price fall as well on that, but just wanted to get on this, more short positions can be taken for these two counters, and if yes, any important stop losses?
For Astral, the counter is having a kind of a very strong support around the zone of 1540, 1550 odd levels. So if there will be a further correction below the zone of 1540, then one may look for a selling opportunity for a target price of nearly 1400 to 1420 from very short-term point of view. Overall, there will be kind of a strong consolidation in the zone of 1400 to 1540 odd levels. So I am expecting that in the short-term period, one may look for selling opportunity, but wait for a decisive and sustainable move below the zone of 1540 odd levels.
Right, and the next stock is Tejas Networks. Weak set of quarterly numbers coming in. Is there further pain in this counter?
Overall, the technical structure is still very bleak. The counter is hovering below the long-term moving average. So there is no strong respite or no technical pullback that is being evident in the counter. So better to stay sideways from this counter until it breaches the zone of 500, which is the 200-day simple moving average. Above 500, only one can look for buying opportunity in this.
Right, so that's the end of rapid fire. But over to you, Hiral. What are you gathering from the Google Trends?
So this is an interesting aspect on the show that we have, because you get to know what are the stocks that investors are actually searching for to get answers to. Tata Power, LIC has been on the block over the last 2 days. Suzlon again
and a Reliance Power. So it's the power pack which is buzzing in trade. Osho, Tata Power, Suzlon, Reliance Power, anything on the charts that you like?
Tata Power is looking very positive. It has given a very strong breakout in last trading session, and there has been a strong weekly or monthly structural breakout in the counter. So 400, 405 was a very strong resistance level, and after a decisive move beyond these levels, I am expecting that from here onwards, another 25 to 30 odd points of rally can be seen. So 440, 445 is the target for Tata Power. Overall, the power sector is looking very positive. Again, Suzlon Energy has also surged nearly 10% in the week, and it is still looking very positive on the technical chart. So I'm expecting a target of nearly 54, which is the 200-day simple moving average. That might get tested in the coming period. But again, for Suzlon, one should maintain a cautious approach and try to trail their profits for a target price of 50.
Right, but of course, let's move on to the Q4 earnings also. Important previews and two important earnings would be there. HDFC Life Insurance, if we talk about it, largely the AP numbers are expected to go up by 3%. But there is some stress when it comes to the value of new business margins as well. Margins are expected to be impacted because of the GST related announcements which came in during the quarter, and also importantly the retail protection would be growing, but it's insufficient to save from the weak volumes as well. And also apart from HDFC Life Insurance, HDFC AMC is in focus. Sequentially the numbers might not be that good, and PAT is expected to see a downtick of almost 15%. So weaker numbers is expected from HDFC AMC also. And to decode these companies, we are joined in by Mahesh Hoja. Good afternoon, Mahesh. It's always a pleasure to have you here. I was talking about two important previews from the house of HDFC AMC and HDFC Life Insurance. And of course their numbers are due in some time during the trading hour, and some maybe post the closing. Your views on either of these two stocks, which is better placed, because the street is not liking HDFC AMC's preview numbers, but there might be some respite when it comes to the life insurance.
Definitely, but if you're looking from a life insurance or AMC perspective, I think AMC placed very well. But we will watch out on lower level if numbers are, as you said, the number expecting some lowers. I think some consolidation can't be denied in HDFC AMC. But if you're looking to, if it is available near 2,400, 2,450, I think that is a good buying level. We are hope the 3,200 to 3,300 level could be achievable in a 1 year horizon. But yes, some consolidation we are expecting in HDFC AMC as well. But if you're looking from a HDFC Life perspective, the life in a limited upside we can see in life that could be a 740, 750 in a 1 year horizon. So both of the counter are slightly upside, but in near term some consolidation can be seen in both.
Okay, so consolidation that could be seen in both of these HDFC companies as well. But ICICI Lombard is another one which has actually delivered an overall strong fourth quarter, driven by healthy premium growth and improved underwriting performance. The stock is at the day's highest levels as we speak. We spoke to Gopal Balachandran, the Chief Financial Officer at ICICI Lombard, about the quarter gone by and the outlook going forward. Let's listen into a bite of that conversation.
I think what we've always spoken about is to say that whenever we see market getting rebound in terms of industry growth coming back, ICICI Lombard is well positioned to capitalize the opportunity of growth across segments. And this is exactly how things have played out, particularly in the second half of the year, largely aided by a lot of reforms that has been done at, let's say, governmental / the regulatory front. Now that has obviously kind of rekindled growth even from a market perspective. And obviously, as I said, in our context, we have been able to leverage that growth potential. And that's the reason if you look at the second half of the year, for example, the industry growth was roughly at about, I would say, close to about almost about 11%. And ICICI Lombard had grown at almost about 15%. So we had an outperformance of almost about 400 basis points at an aggregate level. And if I were to distill it down to the quarter gone by, now that delta between our growth versus the industry growth has been almost about 700 basis points. So in that sense, I think it has been a great quarter for us, aided by growth in lines of businesses which we think are viable from a profitability standpoint. and that is what has aided in terms of the overall beat when it comes to, let's say, top line revenue numbers. And exactly to your point, absolutely, bottom line combined ratios again is an area which we have always focused on, and we have always maintained that from an ICICI Lombard standpoint, we would want to continue to see how we can see an improvement in combined. And that's also reflective in the Q4 combined ratios, which has seen a drop by almost about 150 basis points.
Right. Mahesh, what is your view when it comes to ICICI Lombard?
Definitely, the numbers are very good, and I think the stock can do well in the upcoming time. If you're looking from our perspective, 2,350, 2,400 level could be achievable in a 1 year or more than 12-month horizon. So it's a very good level to add ICICI Lombard. But yes, there is a regulatory hurdle in the sector. So we are optimistic for some more upside, but yes, with cautious approach.
Speaking of optimism, Trent is also one of the top gainers in the Nifty index in a market in which Nifty has turned red. Just to understand what are the key takeaways from the recent broking report, we're joined in by Mahima. Mahima, what's there in the broking report that Trent is up 2%?
So, ideally they've cut the target price for Trent and has given a target price now at that 4,800 mark versus that of 5,300 earlier. But I think the commentary largely coming in is very neutral, if not positive. What they're saying is that there's comfort that they're seeing on growth setting in. The achieving of 200 stores addition for Zudio for FY26 has been possible, and this is despite of productivity moderation, and this gives visibility going ahead in FY27. Performance triggers are sustained at that 18 to 20% mark, which has been the case in the last 2 to 3 quarters for Trent. No negative impact from cannibalization and competition is something that they've said, which is not the case that a lot of brokers are kind of penciling in. They estimate a 4% like-for-like growth for Zudio in FY27, and top-line growth will be the key trigger going ahead is what they've said. So this is the reason as to what's causing that just 1% rally now in Trent.
Thanks a lot, Mahima, for that. And Mahesh, I just want to get you on Trent. Is there a further round of up move possible for Trent going ahead, or are you thinking that the valuations are expensive for this counter?
No, if you're looking from a trend perspective, after many days, we have seen some kind of upside in trend. So I think that momentum can be continued till the 4,400 level. But if you're looking from a 6 to 9 month horizon, I think 4,600, 4,700 level could be achievable. And if you're looking from a Zudio perspective, I think they can do well in upcoming time. So valuation are looking good, and I think some upside can come in this counter.
Okay, so that's with regards to where Trent goes. Let's pull up a Sun Pharma on the screens. If you can just have a 1 week or a 1 month chart to understand the kind of movement that stock is at the day's lowest levels as we speak today as well. But let's just see a 5-day chart. You know, the last couple of days have been weak, but since yesterday it's seen a pickup, and now again that correction that is coming in. And this is because Sun Pharma and Germany's Grünenthal are set to be eyeing for the US listed company, which is Organon. Now, these are among the firms eyeing New York listed women's healthcare company, and this is according to source-based information. This would be India's biggest pharmaceutical firm, and closely held Grünenthal are working with advisors on potential bids for Organon that they may or will be submitting in the coming weeks. Apart from this, if you have to talk about the acquisition, the plan is for a $12 billion bid that you're talking of. This would be the largest global M&A by Indian pharma company, and the bidding offer is expected in coming weeks. The deal size is pretty large versus the actual size of the company, and that is what is worrying the markets right now. There is a debt burden legacy issue when you talk about Organon, and some of the segments are seeing pretty weak growth. Now, there could be international, globally integration challenges that one could be seeing, and the competitive intensity, which is actually increasing in the generic and the biosimilar space in the global markets, becomes a key concern on the back of this acquisition for a Sun Pharma. It does not really bring a strong pipeline of products for Sun Pharma, and also does not really enhance the company's R&D pipeline. So all of these are the concerns that the street is watching out for, and hence the kind of pressure that you're seeing on the counter. Mahesh, your view when it comes to Sun Pharma and all the buzz around the acquisition that they're looking at?
The debt concern are higher than any other. So I think market is concerned for that, and stock can consolidate further. After outcome of these all, then we can see full and final view. But from current view, I think some consolidation can be in stocks can be seen. I think 1,620 level can come in near term. After that, but we can review the further.
Right. I will just take the conversation forward from the pharma space as Hiral had picked out Sun Pharma. BofA has come out with its report on Dr. Reddy's, and interestingly, they have maintained buy, but the target price has been hiked from 1480 to 1540. And they have stated, of course, that they are assessing the resilience and the risks in the defensive sector, and there is a buy on the diversified drivers and a semaglutide catalyst as well. So sort of a mixed tone coming in for Dr. Reddy's, but slightly on the positive side as well. The cost reduction levers in case of revenue delay is likely to still keep the margins above the 20% mark. I just want to get Mahesh, your views on it for Dr. Reddy's, at least on the medium term prospects. How is the stock looking like?
Technical setup is positive for Dr. Reddy, and stock can touch at least 1,280 to 1,300 level. So overall, stock Dr. Reddy looks positive. In any dip nearby 1,160, 1,170, that could be a good buying from current view.
Okay, so that's with regards to where Dr. Reddy's is concerned. But moving on. Now, the Bihar liquor ban policy is something which is in question and in focus as questions are rising over the ban to be lifted as their new chief minister faces the liquor ban test. The stocks, Global Spirits, Home Distilleries up, UBL is trading under pressure. To talk to us more on this, Sanjeet Padi, CEO of International Spirits and Wines Association of India, which is ISFI, joins us now. Welcome to the show, Mr. Padi. Always a pleasure to speak to you. My question coming to you is, since the time the ban has been in place, how are you seeing it in terms of a potential for the ban to be lifted? Are you hearing, murmurs around it? Is it that this is going to be one of the mandates with the new, team coming in? Mr. Padi, are you able to hear me? Okay, so I think we'll have to just fix his audio because that is something which is not clear. But categorically, what we're talking about over here is that with the new CM taking, that's the chief minister coming in, there is a lot of murmur with regards to the beer ban that could be lifted in Bihar. Now, this could be beneficial when you talk about companies which are in focus as we speak. If you have to look at names, you have United Spirits, Radico Khaitan, all of these companies are the ones which are in focus in today's day of trade. We will have to wait and watch in terms of what happens once the number has come, once the information or the news has come in. Mahesh, let me take a quick question with you. If the Bihar liquor ban, which is under review, is lifted, how big a benefit is it going to be to all of these liquor companies?
So many companies will get benefited if liquor ban lifted. So I think Som Distillery, Global Spirits, and Radico Khaitan, these are the most beneficial company, and we will prefer Radico Khaitan over all these companies. So I think ban lift could be a good positive for Radico Khaitan.
Okay, so Radico Khaitan is something, and that's the only stock which is seeing those gains of 2.5%, 3% as we speak. But moving on, we have Mr. Sanjeet Padi, who's again, I think we've just got him now. Mr. Padi, are you able to hear us? I think, there are some audio concerns that we have been looking at as we speak right now. Tejas Networks is another one. Now, they've reported the 5th consecutive quarter of losses, and that's the reason why you're seeing the kind of pressure. Little over 4% is the kind of downtick in terms of the stock. Order book, again, that remains at around 1,500 odd crores, so nothing changes from an order book perspective. Revenues down 82%. They've seen an EBITDA loss of little over 118 odd crores and a loss of 211 crores. Is what the company is sitting on. Mahesh, any view when it comes to a Tejas network?
Currently, we have a neutral view on Tejas network because there are a lot of losses in the books and order book are good. So currently on these level, we are neutral. If any dip, then we can review for the same.
All right, that's an interesting development coming in. But let's just check IMFA how the overall operational updates have come in, and that shows a good movement, especially on their overall plants, the amount of movement which is happening over here. And the street seems to give a very strong thumbs up as well. The stock itself is up more than 7% in the day's trade. Mahesh, IMFA, largely this counter moves very few times on the volumes, but this time it seems like the operational update is pretty much strong, especially on their ongoing projects which the company has given, and the street is liking it. Do you think there is a further chance of an up move from this counter, or this is just a news-based move and then what happens is again the stock comes back on the lower volumes?
I think that there is chances of up move. At least 1,650 level could be come in this IMFA. So it's a little bit, I think some kind of upside can come because company is doing very good. And I think after surpassing 1,650 level, we can further review. From current view, I think some bullishness can come further.
That's with regards to Indian metals as well as we speak. So clearly, it's an interesting day of trade that we are watching out for. But thank you, Mahesh, so much for joining in. The markets are at the day's lowest levels as we speak. Let's just pull up Nifty 50. Then we look at Bank Nifty and the sectoral heat map to understand what is putting pressure today. In terms of Nifty 50 as well, cuts of around 0.5% coming in there. Bank Nifty also at the day's lowest levels, down of about 0.7%. Moving from there on, if you see in terms of sectoral indices, it's the metal IT pack which are staying afloat in trade today, but auto, one of the top losers, followed by the PSU bank index. You have the private banking space which is also putting pressure. Oil and gas, infrastructure consumption, all the others are down to the tune of almost 0.7% on the upside and around 0.4% on the downside. So that's what we are picking up so far. But very quickly, some flashes at the bottom of your screens where the Supreme Court has allowed banks to declare Anil Ambani account as fraud. That's what we are picking up from the Informist. And apart from that, the Supreme Court has refused to stay the bank's order from here on. So this is going to be some bit of a negative development that is coming in for Anil Ambani group companies, where the banks are allowed to declare Anil Ambani companies as fraud. And that's what you will see in terms of the stock prices as well. That would be putting pressure. But completely out of time. With that, it's a wrap on this edition of Trending Stocks. Lots more lined up on the other side. A thank you from Sharad, the team that put the show together, and myself. Stay tuned to NDTV Profit.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated-listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
We're teaming off with Dr. Vinod Hayagiri, MD and Director of CKC Jewelers. As a fifth-generation leader steering a 155-year-old legacy, he knows that brilliance takes patience. Watch at these times.
Tamil Nadu votes decisive, uniquely the way it does.
politics, power and cinema and all of that in an unprecedented Dravidian script.
This is not an election easy to call. It never has been.
And unravel grassroots conversations with the voices that matter.
That's why we travel across Tamil Nadu to get you the real picture. From the OG of Indian elections comes the next big political blockbuster. Because
Tamil Nadu
votes only the way Tamil Nadu does. Tamil Nadu elections on India's original election voice.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
As well, metals shine, IT and FMCG resilient, but pharma and realty drag. As well, metals shine, IT and FMCG resilient, but pharma and realty drag. And all eyes will be on Wipro that will report its fourth quarter numbers today. Modest revenue uptick, stronger margin performance on cards. Watch out for commentary on buyback as well as outlook on deal wins. And a high-stakes special sitting at the Parliament, the extended budget session takes up 3 key bills aimed at fast-tracking 33% reservation for women in Parliament and state assemblies, marking a crucial legislative push. Motilal Oswal Financial Services founder Ramdeo Agrawal says India is getting wealthier at double the world's pace, also urges investors to stay bullish when markets weaken. Think in 10-year cycles and also recognize quick commerce as a long-term compounding story. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top bazaars at this hour. All while you grab lunch. But first things first, very quick look at the markets right now. When you talk about Nifty 50, it's actually close to the day's low right now as we speak. And when you talk about Sensex as well, you're seeing some weakness also come in there. In fact, you do have that weakness that you've seen sharpen in the last few minutes. When you talk about the sectoral picture as well, you do have a bunch of sectors that are holding on to a tinge of red right now. Something like autos, PSU banks, Nifty Bank, oil and gas, rural consumption and pharma. Those are some of the sectors that are in the red right now. Metals still holding on to some amount of resilience. Same can be said about IT. So that's broadly the kind of picture that you have in terms of the losers and gainers on a sectoral basis. But even when you talk about the entire picture for stocks as well, something like a SCI or Sonata Software, First Source, those are some of the counters that are holding up quite well for themselves with that double-digit gain also coming in. But when you talk about the entire Nifty 50 pack as well, you're looking at a bunch of counters that are still resilient even in a market that is taking quite a little bit of hit in the last few minutes as well. So something like a Hindalco, Eternal, Trent, Adani Ports, Adani Enterprises, BEL, L&T, Infosys, those are some of the counters that are holding on to a tinge of green and holding on to a little bit of strength right now. But what's not holding on to some strength is something like an Apollo Hospital. From within the Nifty 50 pack, even heavyweight HDFC Bank is also trading with a cut of about 1.5%. ONGC, Bharti Airtel, HDFC Life, Sun Pharma, Quality Walls. Those are also some of the stocks that are down anywhere between 1 to about 2%. That's the entire outlook that you're looking at in terms of some of the sectors and the stocks that are making it to our radar at this point in time. Of course, we'll be discussing at greater detail why some of the likes of HAL or something like a Tejas Networks, why some of these counters are also buzzing away. But before we do that, quick look at the world of commodities as well, and you're looking at oil prices that are managing to remain largely steady with those peace hopes very much in the spotlight. When you take a look at Brent crude and WTI, you've made some bit of recovery, but not really back up above those 98 levels also when you talk about these two contracts as well. And when you talk about oil prices, largely steady, but gold on the other hand actually has made a rebound. Little bit of strength really returning back into the picture when it comes to gold as well. And you do have that commentary also coming in when it comes to Trump and Powell, that little bit of policy uncertainty that you could also be penciling in. That should also be making it to your radar as well. But Ajay Kedia, Director, Kedia Advisory, is joining us with all of those insights to make sense of all of these headlines. Mr. Kedia, a very good afternoon to you. It seems like it is at least a good afternoon for gold. Can't say the same about oil right now.
Very good afternoon, Shansi. Yes, in last couple of days, we have seen prices has moved slightly more towards $5,000 mark. In last 45 days, we have seen whenever there is a geopolitical concern, generally we presumed gold would be on a positive side. But because of the global sell-off, we have seen sell-off in equity, commodity, and property everywhere. Because of that, gold prices were under pressure, and we have seen prices moving to the level of 4,100. And now it seems that as ceasefire news has been going smoothly, we can see prices moving closer to $5,000 mark. But I think this is just a retracement because still the concerns between Donald Trump and Fed chairman is still going on. So it would be more important how Fed would be moving from here, either rate cut or rate pause, or it could be a rate hike, because there is a 50% rise in the energy prices that has been seen in last one month. So that can impact the economy growth, as IMF has stated. So I think closer to $5,000 we can see, and some consolidation for gold.
Absolutely, and that's something that you're looking at in terms of the broader outlook right now. But Mr. Kedia, I also wanted to try and understand what you think about the higher for longer oil prices right now, because as Qatar and some of the other nations have also indicated at this point in time, some of the damages that have been done to key oil infrastructure that could last well into months to years. So how are you looking at that entire supply side of the picture? How are you looking at higher for longer oil prices? Is that something that you're also penciling in?
So I think, Janji, we have got an upper price and lower price also. As the conflict has started, we have seen crude prices went as high as $120. Last in 2022, we have seen high of 130 when Russia-Ukraine conflict has started. So we have got the upper hand because at 120, we know that Strait of Hormuz was being closed. Now, as soon as last week, the talk of ceasefire has started, we have seen 23% fall in a single day that made a base of $90 for Brent. So I think we have got both the lower side and upper side. So I think there should be a consolidation, because if the war stops, then also the logistic part would remain slightly choke point. Secondly, this whatever the infrastructure damage has been seen in Qatar, in Iraq, that will take months of time, as you have rightly stated. So I think prices would consolidate between the range of $85 to $100 as of now. But in Q4, maybe possible, looking to the demand and supply situation, prices can again come down to the level of $70, $73. But as of now, for Q2 and Q3, we can see prices will be on elevated level with a range of $85 to $100. As of now, with the current scenario, we expect prices should be in this range.
No, absolutely, and that makes a lot of sense in terms of what could be happening to prices when you talk about oil. But when you're looking at gold as well, couple of things that really make it to my radar in terms of the haven bids returning. There's a couple of concerns here. One is that Trump and Powell clash really coming back into the spotlight. Other than that, you have that entire headline also, bunch of uncertainty also sustaining when it comes to the war. Do you think that the haven bid really is making a little bit of a comeback? We've not seen much of that for most of the war right now.
See, I think, yes, you have rightly pointed out the things. I think gold is just waiting how the new Fed chairman would be pulling up the rate. And secondly, the equity market, there is very surprised that despite of this war-like situation is going on, US equity is rebounded and making a new highs. So that clearly shows the investors are now looking towards the more opportunity where they find in equity rather than gold. So maybe this could be the point we can see some consolidation in gold and silver prices. Even if we take a reference of 2008 and 2022, we have seen multiple of time whenever there is a geopolitical tension or war-like situation, generally gold correct and maybe we can see a time correction in 2008 also from Feb to October 2008 we have seen some consolidation, then gold has started moving to the record high of 1920 in 2011. Similar kind of movement in 2022 we have seen where gold was corrected to the level of 1600 and from there we have seen a high of 5600. So maybe some consolidation could be seen for gold till September. Afterwards, I am sure that we can see a new high coming back in gold prices.
No, absolutely, and that makes a lot of sense in terms of what is really happening with prices. I also wanted to try and understand what you think about silver as well in terms of what has been happening for the last few weeks. Now, we have broadly seen that silver prices have been moving in tandem with gold, and that used to be, you know, the trend a few years ago. That's really back in the spotlight yet again right now. When you talk about gold and silver, do you see that sustaining right now?
So to track silver, I think gold-silver ratio it will be the better barometer. Last year, exactly this time only when gold-silver ratio was around 106, 107, that time silver was very cheap and we know this is the 7th year where silver is in deficit. Industrial demand is improving because of clean and green energy. But right now, in the month of Feb, we have seen the ratio has tumbled down to the level of 44 and currently it's around 60. That doesn't show that silver is very cheap right now. With the increase in the energy prices, I think the industrial demand would be slightly tapering down. A range of $70 to 85 we are expecting for next couple of months. Once we get a level like 70 is good, but slightly be cautious because I think looking to the gold-silver ratio, we are more bullish on gold rather than silver. Immediate support would be 70 and maybe if suppose sell-off scenario comes again, we can see a base towards $55 also. But whatever the expectation of silver last year was built up, this time we don't expect this type of momentum would be there for next at least couple of months. Once the industrial demands restart, renewable energy demand restart, then definitely we can see silver prices moving again.
No, absolutely, and that's one of the other triggers as well that you're looking at when it comes to silver as well. Very quickly before we let you go, I just wanted to get a quick word in terms of what you think about all of the optimism around the peace talks as well. If there's any progress that is there to be made, where do you see the immediate reaction coming in within the entire commodities complex?
So right now the focus would be on industrial metal where we have seen copper prices has shown a very good recovery currently on LME trading very well about 13,000 level mark. There are a couple of things which are being supportive. First of all, we have seen the supply concern from Indonesia and Chile is still going on. Demand for clean energy, green energy is going to support copper. And one more thing is this sulfuric acid ban from China. In couple of days after this news, we have seen the production concerns are still prevailing and prices has got a boost. Here I am expecting around prices might go to the level of 15,000, 15,500 in next couple of months. I think the opportunity lies in copper.
No, absolutely, and thank you so much for summing that up really brilliantly when it comes to the entire industrial metals complex also in terms of what else to watch out for. Thank you so much for taking time out and joining us this afternoon, Mr. Kedia. And there you go, that's the entire verdict coming in as far as something like copper is also concerned. But of course, the oil market and the gold market right now is really listening into one person, and we're going to listen into that exact person right now. White House Press Secretary has said that the US had not formally requested an extension of the ceasefire with Iran. She's also added that there are discussions about more talks being held. Of course, you do have oil prices reacting to this commentary and all of this optimism. So let's go across and listen into this bit of commentary.
I saw some reporting, again, bad reporting this morning, that we had formally requested an extension of the ceasefire. That is not true at this moment. We remain very much engaged in these negotiations, in these talks. You heard from the Vice President directly and the President this week that these conversations are productive and ongoing, and that's where we are right now. I've also seen some reporting about the potentiality for in-person discussions again. Those discussions are being had, but nothing is official until you hear it from us here at the White House.
On that note, then, it's time for a very quick break right here on Lunchtime Trades. On the other side, there's a bunch of stocks that we've lined up that we're going to be talking to you about, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Presenting the all-knowing, all-powerful.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at some of these counters that are buzzing away in trade. Right now, of course, you do have HDFC Life that is trading with a cut of about 1%. And the margin hit is something that you're really penciling in when it comes to Q4 numbers. HDFC Bank also about 1.7% downtick coming in. Titan Company and Apollo Hospital also down just a tad bit. But what's holding up quite well, and you know, something where you're seeing a little bit of weakness, though, Tejas Networks is something that's really down right now on the back of its numbers as well. In fact, there's a bunch of counters that are making it to Parth's list right now. Something like a Tejas Networks, Infra, HDB Financial Services is what makes it to the top of your list as well, Parth as well.
that investors need to keep in their watch list. The first one is Tejas Networks, which has reported its Q4 numbers, and the company actually saw its 5th consecutive quarter in losses. The company's revenue was down almost 82% and was at around 333 crores, and they saw an EBITDA loss of 118 crore versus a profit of 121 crore in the same quarter last year. Their net loss also almost tripled at 211 crores versus a loss of 71 crores in the same quarter last year. So this is the main reason why the stock is down in trade today. The second one is Indian Metals and Ferro Alloys, which has updated the status of its ongoing projects. Their greenfield ferrochrome project is in the final stages and will be done by September of this year. The company's Kalinganagar acquisition is completed and all the 4 furnaces in the plant are now completely operational. However, their ethanol project is slightly delayed and is expected to be commissioned by the July month of this year. The last one is HDB Financial Services, which reported a very strong Q4 in terms of profitability. The company's net profit jumped 41.4% to reach 751 crores. The company saw an improvement in its asset quality, which led to lower credit costs, which further in turn drove profits for them. The company has also approved a borrowing of around 32,825 crores via the debt route. So these are the 3 stocks that people should keep in focus for today.
No, absolutely, and that makes a lot of sense in terms of some of those counters that are also buzzing away in trades. Look at that HDB Financial Services stock as well, about 7.5% uptick that you're looking at on the back of the results. Tejas Networks, on the other hand, down about 4% right now. But let's also take a look at some of these other news updates also that we have for you right now. The Telangana High Court has ordered a probe into whistleblower allegations concerning Canfin Homes, directing the Central Vigilance Commission to examine the complaint as well. In fact, Nimit Dixit is standing by with all of those important details. Nimit.
Yes, the High Court in Telangana has ordered the Central Vigilance Commission to probe into Canfin Homes, the housing finance company, which is 30% owned by Canara Bank, and Canara Bank is also promoter of the company. Now, this comes on the back of a whistleblower complaint filed by one of their HR general managers, who basically said that the company had unfair and preference in recruitment policies. What they said, that there were the large-scale recruitment irregularities across Canfin Homes. They also accused of pushing preferred, unqualified candidates and mark sheets allegedly being altered. Also, the whistleblower complained that he was transferred days after raising this complaint about the recruitment irregularities. Now, what the court has said that since this is a matter of public interest, because Canara Bank officials have been named and are involved in this probe, then it cannot be said, as Canfin Homes wants to say, that this is a private dispute. The court has held that this is a public dispute and it must be taken into account while ordering these investigations into it by the CVC, and the RBI has also been asked to look into this. Now, we will understand what inaction comes out of this RBI and CVC report as this case goes on.
No, absolutely, and thank you so much, Nimit, for joining us with all of those updates when it comes to Canfin Homes as well. Of course, the stock is not doing all that much, but you do have that particular update also coming in terms of the whistleblower and what the court then had to say. But let's also talk about something like a TCS. Employees at TCS's Nashik office, in fact, have been instructed to work from home amid allegations of sexual harassment and religious conversion. NDTV correspondent Sujata joins us with some more details here.
New shocking and chilling details now emerge with each passing day in the Nashik TCS syndicate, where now on one end it is Nita Khan, the mastermind accused, who is still on the run and is likely to apply for anticipatory bail through her legal team if she is arrested. And secondly, it is several investigative agencies like the NIA who have now stepped in to figure out how exactly and how big is this entire plot of religious coercion that was underway in Nashik at TCS, where more than 12 FIRs have been registered. Several complainants are likely to come forward and register their FIRs because their counselling sessions are underway. whereas it is also the TCS company's internal team which has now begun an investigation into the entire matter to figure out how exactly was it that the entire syndicate was working without the top authorities even knowing about it. And since 2021, as an eyewitness while speaking to NDTV, stated that there were these activities carried out where vulnerable victims were targeted, they were suppressed and they were forced to be in their loneliness, distancing them from their social and family circles, and henceforth forcing them to practice Islamic religion and follow its protocols, because of which one victim came forward, took a decision, register FIR, after which we saw multiple of them coming forward. So far, 7 accused have been arrested, out of which the main HR, which is Ashwini Chenani, is in police custody, the rest of them being in judicial custody, and likely the custody is to be extended because there are several other scales which needs to be investigated from the SIT and other investigative agencies, whereas it is also the Women Commission who has now raised their voice and asked for a stringent action against the culprits into the matter. Not only that, officially on the administrative front, it is the government who's thinking of launching an helpline number, as there are multiple complaints that are coming forward of women who are narrating their ordeal in the case, stating that in their particular company, similar of such instances have happened. So it remains important to watch what more developments take place and how is it that the police and the investigative agencies, they ensure that the entire syndicate and its extent to which it is connected is busted out.
Chilling details that have really emerged out of this case right now, Sujata. Thank you so much for getting us that update. But let's also watch out for Wipro as well when it comes to the markets. That's one counter that you're really looking forward to. In terms of fourth quarter earnings, so you do have expectations of a modest revenue uptake. Also, stronger margin performance is also something that you could be penciling in. Deal wins, and that entire bit of commentary is something to watch out for as well, Puneet.
Most certainly, and expecting not too much in terms of flair, at least in quarter 4 results, just a 1.7% growth in revenue in INR terms. EBITDA as well will largely be continuing to be at 16.7%. This is a growth from the same time last quarter actually, where you saw the labor code impact, but continuing to see 2 key aspects from the results. One is, of course, what will be the quantum that the company will announce in terms of buyback. Now, it's the first time the company was one of the first companies to come out with a buyback announcements for this particular quarter. Cyient also has followed through, but the quantum of the buyback will be something to watch, could enthuse the street at least in the near term. And the second key aspect will be on the constant currency growth. Now, expectations are for quarter 1 of FY27, the company will give a guidance of a very bearish sentiment, just -2 to 0%. And that is the estimate from most brokerages. Jefferies is the only one expecting a guidance of 0 to 2%, but Morgan Stanley and JP Morgan expecting a weaker picture. All eyes will be on the buyback number, as well as what could be the commentary for the company in terms of the impact of AI amongst others, and the models released by Anthropic as well as ChatGPT. But at this point of time, a lot more details on what could be on some of the key aspects, barring the numbers for quarter 4 for Wipro this time.
No, absolutely, and thank you so much, Puneet, for joining us with all of those expectations. So there you go, that's something that you're penciling in, and that's something to watch out for when it comes to something like a Wipro as well. But that's all that we could pack for you on this edition of Lunchtime Trades. Thank you so much for tuning in. Soumit Sarkar, as well as Mahima Vajrajani, take all of the action forward on the next show.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
YouTube doesn't have a favorite news channel. It has three. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Saigal. What's actually how
The show that sets the prime time agenda.
we'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5 only on NDTV 24/7.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360.
Good afternoon, you're watching Small Cap Bazaars on NDTV Profit with me Somit Sarkar and my co-anchor Mahima Vachhrujani. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade. So firstly, let's see what's on the show today. Firstly, we'll be speaking with the management of Blue Spring Enterprises. Now recently, they made an announcement of acquiring a company called LSG Skychef, which is into catering service for the airline company. So how does that lead to their growth plans going forward is something that you will get to know from the management first on the show, that is Small Cap Buzzers. Apart from that, we'll be also covering stocks like Carraro India. Now that stock has been gaining for the last couple of days. It's up nearly 27%. Have valuations become now more attractive, and that is the reason why the stock has been gaining, is something that we'll ask our fundamental guest on the show today. Apart from that, we'll also be speaking about Suraj Estates, and the stock has been gaining on the back of new land acquisition that they have done. Now this gross development value of this land is expected to be around 100 odd crore rupees. We'll be also speaking about the company called Oriental Aromatics. At one point of time, the stock had hit an upper circuit of 20%, and in the last 1 month, the stock has gained nearly 40%. And lastly, when it comes to Hindustan Composite, that stock has been gaining in the last 5 days. It is up nearly 30% on the back of strong volumes. If you look at the volumes, even today, it's nearly 15 times its 30-day average. Now, if you look at the market, After the stellar rally that came in yesterday, we are seeing some kind of profit booking coming into trade. We did open in the green. 24,400 acted as a resistance, and currently 24,100 is acting as a support, down around 110 points from yesterday's closing point. If you look at the sectoral indices, it's the Nifty Metal Index, which is the top sectoral gainer, while on the losing side, we have Nifty Auto and banking names, which have been the draggers overall for the market as well. But when it comes to the Nifty Small Cap Index, that is still managed to be in green despite the fact that the benchmark has come down. So, Mahima, which are the stocks that have been buzzing there?
Right, so Somit, as you rightly mentioned, the small cap 250 at least still trading in the green, up by about 0.3%, but almost at its day's low point is what we speak. The mid cap 150, of course, has turned into the red. But some specific name in the small cap space, India Bulls, yet another day of gains coming in for this one, trading around 18% higher. You have Orissa Minerals, which is also seeing gains for 16-odd%. Surat Estate, as Somit mentioned earlier, on the back of the land acquisition that they've made, is trading around 14% higher. Oriental Aromatics also trading 14% higher. You have STL Networks, which is also trading around 14% higher, and something like CCCL is also trading around 12% higher. Other than that, IndiCube Spaces, Aztec Life Sciences, LG Rubber, Jinkushar Industries are some of the other names that are trading in the green in that range of 10 to 12-odd%. But on the flip side, you have counters like Johnson Control, which is down by about 5-odd%, seeing profit booking today. You also have something like a TTK Health, which is down about 4-odd%. DMCC Spec-Chem is seeing profit booking today down by about 4-odd%. And something like Pratap Snacks is also down by about 2-odd%. So that's with regards to where some of these names go in the small cap space. But as promised, Blue Spring Enterprises, has been in focus, and this is on the back of the news flow coming in. Now, this company was demerged from Quest Corp in March 2025 and is basically India's integrated infrastructure service provider company, and operates across food services, facility management, and hospitality. The recent news coming in, of course, they are now entering into aviation catering via acquisition of LSG Sky Chefs India. And to take this conversation ahead, to understand what this acquisition means for them, what lies ahead of the company, we're joined by Kamalpal Hoda, who's the Executive Director and CEO of Blue Spring Enterprises, joining us now. Sir, thank you so much for taking out the time. My first question to you is with regards to your recent acquisition coming in. This marks your foray into aviation catering, if I'm not wrong, through LSG Sky Chefs. Just want to understand as to what this means for the company. What does this bring onto the table, and what is the kind of revenue potential that you're looking at from this acquisition?
Sure. Thank you, first of all, for having me on your show. And yes, it's been a very important acquisition that we've just announced. In fact, we've actually announced 2 acquisitions in last, less than a month, and happy to share update on both the acquisitions, starting with LSG Sky Chefs, which operates, aviation catering kitchen at the Bangalore Kempagoda International Airport and caters to, 1 domestic airlines and 3 international airlines. It is a segment which has got an entry barrier, and Blue Spring, as you mentioned, is already into food services. So we do have food services right now in various industries, starting with, very large premium education institutions where we cater to, students. We also have presence in 100+ hospitals where we do patient food. We also work with very large industrial houses where we do, industrial canteens, food for the labor that they work there. And also through central kitchens, we do food at large corporate houses. And now, obviously, in a premium entry barrier segment and a niche segment, which is aviation, we've got entry through this acquisition. So food as a portfolio with this acquisition should do close to around 500 crores of annualized revenue. This particular acquisition will come in with around 120 crores of revenue. So in total, it'll be 500 crores of revenue and high single digit or low double digit EBITDA margins. If I talk about the second acquisition that we did, which also we announced within the span of last 1 month, was another German company which was selling its Indian business, which is Stiag, which is an operating and maintenance partner for very large Indian companies in the power plant space. So they manage close to around 7 gigawatts of power plant operations, and through very high technical competence, they operate again at very good double-digit EBITDA margins. So both these acquisitions add up to the Blue Spring capability in the industrial space and also in the food space, which have been areas where we've been interested to grow. On the back of these 2 acquisitions, we believe we should in FY27 be a 4,000 crores plus revenue company. Our EBITDA margins, which we were reporting prior to these acquisitions at around 3.5%, should be close to around 5% EBITDA margins.
Right, sir. Right. Okay. Now this is all about this acquisition. Now, if you could just take us to the contours, the financial contours of this deal. 129 crore, I believe, is the enterprise value. What is the equity value and how much debt is coming into the books of Blue Spring?
Yeah, so see, these acquisitions, both of them are going to be partially funded through debt and internal accruals. Specifically talking about LSG, we are yet to do the closing. We've just signed the SPA. So right now the enterprise value is 129 crores. The company, like I said, at 120 crores of revenue, does close to around 20 crores plus of EBITDA. And, the equity value should probably be in the range of the enterprise value only. However, like I said, closing should take another 60 days when we'll have, very exact values.
This is largely a debt-free company? Largely?
Yeah. This company comes with, a starting cash of around 20 crores. So yeah, it's a debt-free company.
Okay. And you said the operations are in Bangalore. So just wanted to understand this. Do you plan to expand LSG's operation to other major airports as well?
Yes, of course. That's the intent, and that's why we've entered this segment. So, Bangalore itself has got two kitchens, and one is with obviously competition, and the other one is what was available. So we took it, and on the back of it, not just other airports, we want to get into aviation kitchens. We also want to get into lounges, which is also a very premium business. We also want to gradually getting into aviation also allows us to have a look at the MRO services, which is also a very big market, and which is something that we have not done. So we have an engineering business. Which is also back of this TAG acquisition should now cross 1,000 crores in revenue. And, this entry into aviation then, exposes us to one more adjacencies in expanding.
Sir, with regards to your core segments, facility management and security, etc., are traditionally low margin businesses. But when it comes to your guidance, you've said that, your services like security services could go from 2% to 6%, anywhere near that 6%. Just want to understand from a slightly long-term perspective, let's say 2 years down the line, where do you see your margins go, considering all of these acquisitions also into consideration? And if at all you're penciling in a growth, would that be a structural change that would come in?
Sure. Thanks for this question. See, security, since you mentioned that, let's start with that. It's been a low margin business for us. But last year itself, post the demerger, we worked on our margins and moved from 2% to 3%. And very hopeful that, in the coming year, we should probably move from 3% to, let's say, 3.5% to 4%. On an overall basis, we had given a guidance when we did our demerger and got listed last year that, by FY30, the target is to be a 6% margin company. And, these two acquisitions rightly set up for that. Like I said, we should move from the overall consolidated operating margin of 3.5% with these two acquisitions and integration done. We should be touching close to around 5% EBITDA margin. So we are there in our trajectory of reaching 6%, especially with these two acquisitions. And also on the organic businesses, there's a lot of digital integration being done to, push for margins. Since we spoke about security with now almost 24,000 security guards, a lot of digital security surveillances that we are doing, which are better margin businesses. Also mapping our entire employee base of 91,000 people digitally and monitoring them digitally, their attendance digitally, is also bringing down our cost to serve clients, and which is also helping us margin. So on a combined basis with these two efforts of acquisition and the organic efforts, we should move more near to 5% once both these acquisitions are fully integrated.
Okay. And trailing 12 months, you're right now sitting at a top line of around 3,300. What is the kind of internal guidance that you have in terms of FY27 top line growth?
See, FY27, internally, we want to cross 4,000 crores. And FY28, we want to cross 5,000 crores. So those are the two milestones that we have on top of our mind. And those are the numbers we are targeting.
Thank you, sir. Thank you for joining us and giving us the way forward for Blue Spring Enterprises. Let's also welcome in our fundamental guest, Tapan Doshi, research analyst at ca.tapan.in. Tapan, you heard the management, good growth in FY26, FY27, also a stable growth targets that the management has given. And with this acquisition, they're also expecting the margins to inch up higher. How are you looking at this counter at the current valuations?
Yeah, good afternoon, Sumit. See, but the only thing is, the stock has already run up in last 2-3 weeks, And as you already told, then already quarterly losses are there. Again, the margin issue is there. Now new acquisition is there, so we have to see how the margin is going to pan out. Even though the management is quite optimistic, again they are saying then better margin will be there in future. Even industrial contracts shifting on the outcome base, so that is also a positive thing. Security facility demands remain good, but overall as at a P&L level, I want to see that conversion. I want to see more profitability and margin improvement, because currently what is happening, there is a working capital stretch and no low interest coverage ratio is there. Even the free cash flow is negative. So my take is, as the stock has already run up, this is not a buy call at this level. We have to wait for 1 or 2 quarters and let the stock come down, then only take an entry.
Okay, all right. So that's the view coming in on Blue Spring Enterprises. But it's time to look at the FNO space. And we've Sharad joining by to give us a perspective. Sharad, I think tides have turned since we last spoke.
Exactly, that's the right point. But of course, remember, it's a technical pause. Sensex expiry is also at play. And we had started at 10:45. We had seen 80% of the screen was in green. But now, I think the reds have taken over the greens. But nevertheless, Adani Ports, Eternal, Trent, BL are still holding. And remember, it's like a technical pause. That's what the analysts are talking about. But yes, in case any positive news flows come, we can see a kind of a recovery as well. But net, if you're on a medium-term basis, still the signals are bullish as well. But let's just look at the key long build-up, how things are panning out. And of course, this is the Bankex we are seeing here. But overall, the structure is definitely there. And stock-specific news flow or something which you'll be watching out for. But yes, today metals and mining stocks are doing well, and these are the important stocks.
Well, before we go on to
The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Tamil Nadu votes decisive, uniquely the way it does.
Politics, power and cinema and all of that in an unprecedented Dravidian script.
This is not an election easy to call. It never has been.
And unravel grassroots conversations with the voices that matter.
That's why we travel across Tamil Nadu. Comes the next big political blockbuster.
Because Tamil Nadu
votes only the way Tamil Nadu does.
Welcome back. You're watching Small Cap Buzzers here at NDTV Profit. The next stock that we're going to talk about is Kararo India. Now, this particular stock has been up 27% in the last 2 days. And we have Puneet joining by to give us a perspective whether valuations are looking attractive as compared to peers, or it is now very expensive to play that catch-up role. Puneet, over to you.
Well, thank you for that. Some gains are being cooled off during the day today, but largely been stock was in upper circuit of 20% yesterday, and hence the last 5-day return is up 23% for the company. Now, largely, the key question on valuations. Before that, we've seen that the company is largely in a couple of key segments there, and it is a global MNC, so you have the technology advantage of its global company as well. Transmission systems, which is used in tractors as well as construction vehicle, is one of the main businesses for the company, and the other one is axles, which is a main vehicle, of course, and main instrument for the proper functioning of tractors as well as for commercial vehicles. So these are the two key verticals that the company operates in. When you look at the 9 months, revenue growth has been strong, up 21%, but the EBITDA growth is up 28% with profits rising to almost 89 crores, which is almost a 38% jump. So in the 9 months, the last 3 quarters have been very strong, which has led to the share price movement as well. But there have been 2 key highlights that the company highlighted over the last couple of quarters, which are important. The first one being a new capex being approved of 62 crores. The current utilization is almost 90% for axles, so this will help the production for the same. And the second one is the shift, which is tectonic in one way. From 2-wheel drive tractors, we're now moving to 4-wheel drive. And with that, you need engineering excellence, which Carraro India does provide with its product, given that they have technology advantage of its global peer. Now, stock is up 100% just in the last 1 year. And even in the volatility of this year, stock's up 15% with that as well. But because of that, stock's trading at 30 times price to earnings for current multiples. Doesn't have any kind of coverage from analysts as well. But given the high base for FY26 for tractors as a whole, growth will be something to watch, and commentary in Q4 will hence be very crucial.
All right, Puneet, thank you so much for getting us those details on Carraro India. Stock almost trading at its day's low point. But Tapan, any view on this particular counter? I mean, you heard Puneet talk about it.
The stock is doing quite well now. If you see, even the guidance looks good, and if you see the axle capacity is going to increase almost 1.54 lakh, around margin expansion is also they are focusing a lot. I think 4 service center they are going to open in next 1 year. The utilization, if you see, it is almost 90%, so almost done. Now they are going to do some plant expansion. So we have to see at the debt level. But I think looking at the valuation, because the stock has gone up a lot, no, I think this is not the level to enter. But the stock is good, so I think it will be a buy on dips category.
Right. Suraj Estate is the next counter that we'll be talking about, and this is largely on the back of the land parcel that they have acquired, which has a gross development value of nearly 100 odd crore rupees. What is the overall project plans that Suraj Estate has? Let's get in part 2 with more details.
Thanks a lot, Somit. So, Suraj Estate is a company that develops real estate and real estate projects which are both commercial and residential. They mainly focus on the South Central Mumbai region, where they hold a market share of 8% in redevelopment projects. Now, the reason why the company focuses on this one region is because it's a very lucrative micro market in the Mumbai real estate market. It has a large pool of old buildings. It has proximity to key locations. It allows the construction of both residential and commercial projects, and it has improving infrastructure thanks to multiple government projects that are happening in the region. Now, the reason why the stock is in focus today is because they have acquired a new land parcel in Dadar West for 18 crore rupees, and the company will be undertaking an redevelopment project there. This plot has a sellable carpet area of 18,000 square feet with a gross development value of more than 100 crores. This will further strengthen the company's presence in their core South Central Mumbai market, and will enable them to increase their market share in the region. This is the reason why the stock has gained over 10% today. In fact, in the last 5 days, the stock is up over 21%. But still, in the longer time frame, if we have a look in the last 1 year, the shares have lost 15% of their value. So a lot of developments coming in, but let's see how they execute in the coming time.
Tapan, any view on Suraj Estates, given the fact that they have done this acquisition?
Yeah, see, most of the development is coming into South Mumbai. Of course, there the demand is on a higher side. Even if you say guidance is almost 25 to 30%, they have a strong pipeline of almost 3,500 crore GDV. So margin improvement is expected, and new launches are also going to come. The only thing is there is a high working capital cycle. So we have to see, is there any execution delay, then there will be impact. But as the stock has already fallen a lot from the top, at current valuation, one can hold this stock.
Okay, so that's the view with regards to where Suraj Estate goes, and it's upheld the gains that it is seen since the start of the day today. The next small cap buzzer that we're going to talk about is Oriental Aromatics. Now, this one has seen an uptick of around 40%. Since past 1 month, and volumes are also very strong, coming in 18 times its 30-day average is what we're seeing. We have Varsha joining by to give us a perspective on what's causing that spike in the counter. Varsha?
Well, yes, absolutely. So the reason why the stock is buzzing, of course, on the back of volumes, and this company, what does this company do is they are a specialty based aroma chemical player, also manufactures camphor and flavor and fragrance products. While talking about the key triggers, I would say one is the outlook and guidance for FY26. Well, FY26 is the revenue growth is expected at 8 to 10%, but FY26 called it as a consolidated year for the company and not launches per se. The cycle and capacity fill will drive the recovery over time. Onto the Mahar, which is a future earning lever and not a problem for the company. If you see, it's currently a margin drag, but management gave a clear ramp metrics. One is the production, of course, started in June 2025, so operating at 30-35%. Well, the profitability is linked to 250 tons run rate. Onto the margins overall, if you see, the buyers market is leading to persistent pricing pressure. The Mahar greenfield facility was causing a near-term drag, but management is expecting a growth in margin as well. Onto the key triggers to track, one is of course the pricing recovery in aroma ingredients and the Mahar utilization moving towards more than 30 to 35%, and of course the conversion of Mahar customer sampling into commercial orders. So overall, the Mahar, which was seen a problem for the company or was a margin drag, is expected to move or expected to have a growth perspective overall, which will head to margin growth for Oriental Aromatics.
Okay, Varsha, thank you so much for getting us those details on Oriental Aromatics. Tapan, any view on this particular counter?
Well, this is the segment of a lot of competition is there, and the margin expansion they are thinking, but still it is difficult to come. Again, demand recovery is going to be there in FMCG and personal care, and they are saying that no, capacity utilization will be good in next few years. But the only problem which I feel is that the pricing pressure is always there in this segment, and high raw material volatility is there. Again, working capital stretch we can see on the company also, and you can see the profitability is not so great. So I feel that margins is not suitable for us to get into it. So my take on this stock will be avoid.
Right. The last counter that we'll be talking about on the small cap bazaars is Hindustan Composite. Now this stock has been gaining for the last couple of trading sessions, and if you look at the volumes, they are quite strong. In fact, today as well, the volumes are nearly 15 times its 30-day average. Let's get in Jasmeet to understand what does this company do.
Well, thank you, Samir. As rightly said, the stock has been buzzing on the back of volumes and today's off the day highs. Now, if you look at what the company operates, it operates as a manufacturer of the friction equipments for the auto sector. So it deals with auto, railways and other sector as well. They provide brake pads and other braking instrument as well. What interesting is to see that the overall stock performance, the stock has rallied nearly 25% in last 5 days, and over last 6 months the stock is up nearly 7%. And if you look at over last 1 year, the stock has traded nearly 8% from the gains. Now in terms of the interesting aspect comes is the overall business portfolio. The company is split into the manufacturing of this braking equipments and also into the treasury business. So they have a treasury business where they invest their surplus cash into equities, and even that business is doing well for the company, and also a large chunk of revenue comes from that business. Now in terms of the other key highlights, the board is set to meet on April 23rd to discuss their overall dividend and Q4 performance, something to watch out for. While in terms of key financials, the revenue see a healthy addition in Q3. We saw it uptick 15% reaching 94 crore, but the overall profit is on 25% YY basis. Now if you look at the 9-month figure, again the revenue has done really well for the company. It's up 14% at 270 crores, but in terms of the overall profit, that's down 33 crore and stands 19 crores. That's something to watch out for. How does the overall treasury business goes ahead, and how does it add to the overall top line after this run up of 25%? If there's still value in the stock left, it's something to watch out for.
Right. Tapan, quickly your view on Hindustan Composite, given the fact that the company will be announcing their results and dividend in next few days.
Well, Sumit, this company has already run up a lot, but a good company, the demand is steady across auto and industrial sector. Margin stability is there. I think gradual growth will be there in the niche area. The only thing is EBITDA margin, we have to see whether they are able to improve or not. Cyclical is there little bit due to auto demand. But as the stock has already gone up a lot, I think one has to wait to little bit come down, then only enter.
Well, thank you Tapan for joining us and giving us your perspectives on the stocks that we discussed. Well, with that, it's a wrap on this edition of Small Cap Bazaars. Stay tuned and keep watching NDTV Profit.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's happening.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just...
Shall be unraveled.
Bro, no.
Welcome to the town hall with Ramdeo Agrawal, Perma Bull, someone who has always been very positive on Indian markets. And I would say, first of all, Ramdev ji, welcome to the NDTV Profit Studios.
My pleasure.
We think it's been too long since you made it to our studios, but we're happy to have you here. And of course, our team is here to ask you questions as well. We've opened the lines to our viewers as well. So whoever wants to ask you questions has the opportunity. I hope that's okay with you.
No, that's fine, but please don't ask me about any individual stocks. That's about it.
That, of course. We know the rules. So we know the rules, guys. You know what questions to give. Ramdev ji, very warm welcome. And I think it couldn't be a better time to talk to you right now because you've always been optimistic, bullish about the Indian markets. And in the last 10 days, those who had faith have been rewarded. Would you say?
Yeah, I mean, see, in anything that is most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal. What's the big deal about it? I mean, market is up 3%. If you are not on the buy side, even if you are short, you say I'm bullish. You know, so you have to be bullish when chips are down.
No, but were you bullish, say, 10 days ago when chips really looked down? There was a point at which we thought we were brink of maybe a nuclear war. And इसमें अजीब सा ये था कि युद्ध इतने देशों के बीच में हो रही है. India seemed to have been suffering the most as far as equity markets are concerned. Were you bullish even then?
Yes. See, because there are two types of dialogue. When you have 10 months dialogue, it's a very different thing. When you have 10-year dialogue, in your own mind, different things will come up. You know, if you want to be right or wrong in 10 months' time or 3 months' time or tomorrow or day after, then, I mean, God knows what to see, probably just about who's buying, selling and those kind of stuff. But when you are buying for 10 years, 20 years, I typically think that I'm buying for 25 years. You know, I mean, it's different that I'm not right every time. But I always buy thinking that it's 20, 25 year kind of bet. So the dialogue is very different, actually. In my mind, dialogue is very different. And that keeps me, if you see my last wealth creation study, which we did just now, see, what is the summary of the report? The summary of the report is the world is becoming wealthier year after year. If you see last 50 years, 75 years, world is becoming wealthier. India is becoming wealthier at double the speed. World is becoming wealthier at 7% dollar, nominal dollar. We are becoming wealthier at 14% nominal dollar. Now 14% is not double of 7%. If you take a 10, 15 year profile. So India is emerging very rapidly. Of course, other countries are also emerging like
it's
China.
It's also our base case, which is the reason why India is emerging more rapidly.
That is also one of the same. That also allows me to be emerging for next 50 years.
Yeah.
You know, so it's a very long story, and there are very few compounded predictable countries. Because one is, of course, nothing can beat US. US is one and the only one. You know, like in last 15, 20 years, US has gone from 30% of total global market cap share to 50%. You imagine, the world is growing at 7%. In that, US went from 30% to 50%.
Sir, FIIs ये सब क्यों नहीं देख रहे हैं?
See, they are for 10 months. They want to be right in the next 1 year, 2 years. I don't care. I want to be right on 10-year basis.
So you're saying that the average investor should not worry about the FII figures today. We were earlier this morning speaking with a prominent market voice, and he said exactly this, that the conversations he's having with his friends who manage India for global funds is that हम office आए नहीं आए कोई फर्क नहीं पड़ता है. No one is looking at India right now globally.
Yeah.
Why aren't they seeing all of these points that you are talking about?
I mean, India for them is very small. Say, like, if there is one micro cap where a lot of excitement is happening, I don't care. Because in my scheme of things, that 100, 200 crore company or 300 crore company, I cannot buy enough. So I don't bother about what's happening in that company. India, in their mind, is something like that. And particularly if you're sitting in US, which is now $70 trillion market cap, where single companies are bigger than India. Well, would you bother about an NVIDIA? Or would you bother about thousands of companies in India? So it has become like that, and US is doing extremely well thanks to this AI and AI-led capex and whatever is happening there. It's crazy. I mean, it looks scary. I mean, if they have 55, 60% of the global market cap, can they go to 70, 75% types? That's the kind of run. If you look at internet-based businesses, they're the only guys. There's nobody.
From a 10-year perspective, how are you looking at AI? Are you looking at it at the next big thing? We should be worried because, you know, that's the horizon. Or is it something which is being overestimated right now?
It's very tough to say for me, but it's a very big development. These kind of times happen every 15, 20 years. I mean, we saw the mobile phone coming in, then we saw internet coming in, then we saw the internet and mobile coming together. That exploded everything out here. I mean, literally everything, payment and scheduling and your road, everything is out here, and more things are coming. So we have seen that advent, and now AI will do its own magic. In what way? Consumer AI we have seen, you know, where you can get your essays right for your son, you can get your letter well written. Those kind of things are done. But the enterprise AI is a very different ball game, and that's where enterprise and government AI is not that easy nut to crack. It's not that easy as people are talking about. That will also require a lot of intelligent people to run it. You can write your own essay on your own, but you can't run a company with, you can't give one instruction and the company will be run. So yes, you might do your things faster, but it's also not the situation that requirement of AI or software are limited. One of the funny thing or best thing is when things become cheaper, particularly software becomes cheaper, demand is unlimited, literally infinite. So say today, if there are 1 million projects are there in the system, and the 1 million projects could be say 20% or 30% faster in execution, there are 10 more million projects waiting to happen. So what do you do with that? So I think eventually demand will explode. That's my sense. Right now, for a year and a half, there'll be readjustment to the old model and new model, and then eventually the new model will explode. I mean, once the software is developed, once the way enterprise will adopt AI, if that is clear, I think all the projects will be done by the same services companies.
So you think IT companies will survive, thrive, and come out smelling of roses?
Survive for sure. How much they'll thrive, it depends on their own adaptability and at what pace diffusion of the technology happens through enterprises.
Okay. So, in fact, we have viewer queries coming in. I'm not going to hog all the questions from Ramdeo Agrawal, so don't worry. All of you viewers will get a chance. So will our team over here. But there is one quick query which has come in while we were talking. If you had to hold only 5 stocks or sectors for the next decade, what would they be? And Ravi specifically saying, is it a right time to invest in IT space given the AI disruption? Nothing stock sector specific. But there's always a debate about IT, and we get both views.
Yeah, so in IT, I've been saying for the last 2-3 years since the advent of this AI that it is headwinded. See, I met somebody very senior from Microsoft. He said the era of headcount-driven model is over. See, if you have 500,000 people working for you, you don't need another 500,000 to double now your revenue. So, one part of the engine of Indian IT is kind of gone, where they used to add people at 15-20% every year. So that's gone. So will they be able to increase the productivity of the people or profitability per person at that pace? But I'm not competent to answer that. So I would still say the sector is headwinded. I would be very cautious unless I have extra insight. I would not put in more money.
Okay, cautious on IT. Let's get some questions in-house. Alex is starting off first.
So, Ramdeo ji, always a pleasure listening to you. And the question I have is more strategic in nature or tactical in nature, which is that oftentimes over the course of the last decade, we've spoken about fill it, shut it, forget it, patience, etc., and looking at the long-term horizon. But that the reality is that we remember the winners of that strategy. To say that in the 90s you had an Infi that came in and now look at what Infi has done, right? But you don't remember those that have fallen by the roadside. Is there a pitfall holding on to companies that have been relative underperformers valuation-wise, because they can have a hole in your portfolio as a result of that? When do you pull the plug?
You have to see, fundamentally in investing, you have to understand what you're doing. You know what stocks you're buying, why you are buying, what is the source of value, where is the price and where is the value. That understanding is constant, not constant, because the value is continuously changing. As the company is growing, the value of the company is growing. Say like when we got listed, we were 1,000 crores. Today we are 40,000 crores. And we are growing at 25%. So my value, I hope I am able to grow my value. So, so long as the value of the company is growing, you are pretty comfortable even if price is fluctuating a little bit. If the value of the company is not growing, then obviously you have to take your call.
But even blue chips, you're happy to sell. And
forget about blue chip, red chips. I'm talking about your company. So let's.
I'm going to actually take you up on that. Forget about blue chips, red chips.
Yeah.
Do you think that classification and definition has changed over the last few years? You have mid-cap companies which are at huge market cap and value. And that old way of just looking at blue chips with the depth of the Indian market right now is also changing?
Come again.
My point is, should we look at blue chips with the same awe that we used to? Just taking from the point that you made about blue chips and red chips.
So I think one of the big differences is the availability of data. Now markets will become far more aligned to data rather than this. See, when you had scarcity of data, so you are saying, okay, you are a Tata, you are an FI, you are a what is that, multinational company, because they were known for terrific management and markets were generally reasonably priced. If the market is at 12, 13, 14 P and you are a multinational company, Colgate, Lever, underpenetrated categories and all, so your management was never a concern. So you made a lot of money because of aligning with them. But now, because those quality has been so much, thanks to Buffett, the quality has been so much overpriced, irrespective of the growth, that they have been stuck at 50, 60, 70 P multiple. Whereas I am getting the company, they will not make money. They cannot make money at 70 P. If they don't grow at 25, 30%, there is no hope in hell to make money. So even if you are the bluest of blue chip, and if the valuations are upwards of 50, 60 times, and the companies are glorifyingly growing at 5%, just run.
That's the big one. I think that's the clearest answer we can get to blue chip and red chip. Puneet has a question there.
Actually, on continuing your point, because within the Nifty, you've seen IT and FMCG, both those counters haven't performed well in the last 5 to 6 years, and the growth hasn't been there. So, continuing your point, are these largely dinosaurs essentially in that sense, and will you see that change, or should people or investors look at the broader end of spectrum, and how do you look at from that perspective?
Yeah. So there are no dinosaurs in these companies, but there are phases of tailwind and headwind. In every business, while they are growing, say HDFC Bank. I mean, I'm just giving an example. Like they came in 85, they were 1,000 crore company. When they got listed, it was less than 1,000 crore company. It got listed 40 bucks, 200 crores of equity, so it was definitely less than 1,000 crores or 1,100 crores kind of market cap. Which in next 25, 30 years, it became a 12 lakh crore company, almost became number 2 company of the country, and it was a pride of the world in terms of banking system. Okay, so they had a continuous tailwind from the management side and from the business side. Tailwind is still there in the business side, but there is a management transition, so it is taking a breather. It doesn't mean they have become dinosaur. They will, I mean, once everything transition is over, they'll again get the growth path. So, I mean, what do you do now? You made a lot of money out of them, or they look cheap relatively. And what do you do? So those are difficult things,
Yeah, no, but please answer that question. That is, sir, you
company are specific.
No, company question, company specific, nahi, but those difficult questions have to answer, because I'll put it in context. I'll put my question in context. The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years, and for no fault of theirs. These are things that are out of our control. Should you be looking at them with fresh eyes?
That is what. You should have independent mind. Market is going this side, left side, you should go right side. Because the data and valuation is telling me that there's a tremendous opportunity in banking side. What has happened is the private sector banks have been bought by foreigners. Almost 40 to 50% of the banks have been bought by them. Literally, they own the private sector banks. I think 45 or 48% of HDFC, which is like almost 12 lakh crores, so 5-6 lakh crores worth of stuff is lying with them. And for somehow they're not in love with India. So they've been selling. And what will they sell? What they have, they'll sell. They can't sell what they don't have. So they're selling. So there is a continuous pressure on that. And combined with that, you have whatever is happening in the transition of the bank. So that has depressed the price. Now, if you get the premium bank at 13, 14, 15 PE, how can other banks be any more expensive? The whole sector is under crowd. And the banks are extremely, if you look at their numbers, their gross NPA has never been so low. Net NPA has never been, it is pristine banking system right now. Growing at, you saw the yesterday credit growth, 16%. I think this is the best sector to have. 16% system growth, and you are getting at 12, SBI you're getting for 10p, HDFC over 13, 14p, something like that. All of them are sub 15p, and your credit growth is 16%. I think if you don't make money here, at least my system tells me that you should be making decent amount of money in the next 1 or 2, 3 years.
Okay, we have a query coming in. I just want to see who it's from. Krishna Kumar from Bengaluru. As we are speaking, there's a part where he's saying, big fan of yours, watch your videos regularly. Sir, aapke bahut fans hai jo abhi dekh rahe hain. He's saying, I have 10 lakhs to invest for 9 to 10 months with high risk return. Please tell me the 2-3 shares, not mutual funds. Sir, share to batayenge nahi. First of all that. I want to come to the thought behind the query. Invest with a horizon of 9 to 10 months with high risk, high return.
So I have no idea for 9 to 10 months, guys. I'm telling you.
No,
I'm all about 10 years.
Is this the worst idea for investors right now?
No, it's not. See, there are million guys, there are million ways of making money. The beauty of the markets are like that. If there are million guys, actually there are million ways of making money. You have found your way of making money, you don't have to bother about jokers like us. So because I have my way of making money. I am at peace. I run a company and I invest. I enjoy investing. So since I have made from zero, I can also be I can be extremely patient guy. I can see a lot of adversity. I have seen a lot of adversity. I have seen 67%, 67% correction in the market in my portfolios. So it doesn't, I mean, the downside, so long the story of the company is right, it doesn't hurt me. It doesn't pain me. It doesn't take my sleep away. No. I'm pretty peaceful. But is that the kind of temperament everybody has? Obviously not. You know, so you have to see your temperament and what works for you and how you have been able to in market. It's not that today is day one. So if you are there for 5-10 years, you must have found you're making money. Just stay with that and keep making money.
If you have actually made money, if it's worked for you. That is the important part.
No, I think in India, there is. I can challenge. In last 5 years back, if anybody has come, if he has not made money, I need to get. And if he has invested, he's not speculated. Of course, almost 90% would have lost money. But if he has invested purely, he would have made money. Maybe not 20%, 30%, but 10, 12, better than fixed income. He would have definitely made.
I want to ask you a question, very candidly. In the last 5-6 weeks, when all of this war stuff started coming in, we saw crude go up to 110, 119, no idea, people are talking about 150. Was there any point at which the bull inside Ramdeo Agrawal was scared or worried?
No.
Were you worried?
No.
Not one single day?
Why I'm telling you? Because ultimately, we are not in the, this is not our war. We are indirectly impacted. Iran itself is just about 0.3% of global GDP. First, when this kind of thing happens, I go and see the Wikimedia. How big is the country which is under destruction? So Iran is just about $300 billion country. Okay, why it became so serious is because of Gulf of Hormuz, where a lot of this oil comes out and 15-20% of oil moves, petrochemical moves, your LNG moves, your plastics move, helium moves. So those things, I mean, so many rich countries are sending their petroleum products out. So that became a issue, you know, and then oil started climbing. And we are 70-80% energy importer. So directly and indirectly, that is started hurting the company's performances, supply chain, and cost structure. And so like plastic products are up by 30, 40, 50%.
Yeah.
So obviously the packaging cost, so wherever packaging intensity is there, those companies have to pay. And can they pass on immediately? Obviously not. So it brings inflationary pressure. Government is absorbing to some extent petrol, diesel hike, but how long? After elections and all, they will also kind of reconsider this. So that will take away my purchasing power out to whosoever is supplying the energy. So to that extent, they'll be hurt. And hence, the corporate earnings will be hurt. So if my corporate earning was to grow by 15% next year, that might grow at 13%, 12%.
But it didn't bother you beyond that?
Yeah, and market had already corrected. So what is there to bother?
Okay, we're going to mix it up. Kush Bora for our question, and then of course we'll come to others over there. Yes, Kush.
Very good morning, Ramdeoji. 2 questions, in fact, if I can be a little greedy. One, typically these war-driven or event-driven bottoms, make the base for the next bull run. But with FII participation not returning, do you see that happening in the next 1, 2, maybe 3 years? That's the first part. And the second part is we've already seen that the retail participation, direct retail participation in markets is starting to dwindle. So in part, you've already answered this, but how does retail approach this? You know, typically you see when the markets are rising, retail comes in, and when markets go down, retail exits. So how does a retail participant and individual approach this? Asset allocation or still continue and have that faith in the markets and still keep on investing?
I don't know. So many questions are there. Which one to? So I'll tell you. See, market is going through a structural change. In last 5 years, say till 2020, it was very FI dominated market, and Indian institutions were not that strong because retail flow was very, very limited. Come 2020, and instead of 300,000 customers, we are getting as a system 3 million customers, 10x, and till last month we got it. Okay, so this is structural shift of the Indian market, so DI flow is staggering, and it will keep becoming bigger. I don't have any doubts. Maybe for 6 months, 8 months, it could slow down. But if you look at say 5 years henceforth, it will double. If it was 5 lakhs or 7 lakhs this year, it will be 2x of that in 5 to 7 years. So that will keep increasing. There is no doubt about it. Now, what FI will do? FI will keep selling. My sense is they'll keep selling till India stays here and the world stays here. Okay, they are the only arbitraging machine between India and rest of the world.
Yeah.
Because we are not allowed to go out. In fact, I wrote to one CI or somebody that please open we should also be allowed to go out in a limited way through ETFs or something, so that the level here is little lower.
Yeah.
So that FIs don't have any encouragement to go out, and actually they have encouragement to come in. So that you open the two two arbitraging machines, one through the FI and second through the domestic, in a limited way. So that is work in progress. So, but then what will happen is that India will remain expensive, and India will keep getting DI very in a very sequential way, increasing number. As the GDP rises, the contribution here will come. Third, what has happened is the interest rates have come down. If you look at your savings deposit, you get about 2.5%, 3%, something like that.
Yeah.
So obviously there is no encouragement. Your inflation is 3%, 4%, 5%. There is no encouragement to the people at large to actually go and deposit in banks. And now digital system and the marketing of mutual fund Sahiya is so intense that people are getting aligned to sending money for stock market. So I think we are passing through multiple forces. Most of them positive, except for FI is going out.
But have you observed active retail investor participation coming down? There was NSE data that shows active retail participation has come down in the last year.
I can tell you we run one of the largest broking, active broking that too, with a 98% pin codes all over the country. My March revenue from broking only is 37% higher than last year's March.
What are you saying? Well, that's the data from the horse's mouth. Hiral there.
Hi Ramdeo ji.
Hi.
I've been following you since years, and I've seen a knack that you have to even pick companies from the unlisted space. You identify gems over there even way before they are in the IPO stage. Now, the unlisted shares market is also something which is growing rapidly right now. Data, obviously, it's unaccounted for. There is no data to prove as to how big that market is. My question is, for example, a company like Lahori, that Motilal Oswal has, is looking at. A good way to look at a company like that, and in the past, we've seen something like a Manpasand also. Now, lot of learnings that come in, right? But because of one episode, you cannot stop looking at that sector or a company like that. So if you have to look at both of these scenarios and the kind of knack that you have, what would your learning be to a retail investor who wants to learn to identify companies and learn from their mistakes?
So, do I have to talk about your Manpasand and Lahori?
I want to talk about the companies.
Yeah.
How do you
learn from your mistakes?
Yeah. So learn is that Manpasand I personally lost a lot of money.
Yeah.
So your assessment of the person goes wrong. See, businesses is fine. Businesses will go up, down. Their tailwind, headwind, margins can go up. Sugar prices are up. Pricing, that can happen. But when the guys are crooks, very rarely you get that level of fraud in your investment. Probably this is the only one of this order. So it happens.
No, but in such a vast history of investment, these examples are going to come about. You're not going to get them all right.
Yeah. So yes. So this was one of them. That doesn't take away my process, in the sense that we went through an entire process. In fact, my research in that company was most intensive, I would say. And we were literally talking to all the established investor, private equity investor for 5-7 years. And yet they couldn't catch it. So that's fine. That happens. This guy must be very smart. But now coming to any other company, see, one of the opportunity in unlisted is that you get access to a lot of data. And the companies are not that big. They're at nascent stage. So you can ask a lot of questions and you can see the path ahead. And then they need a lot of guidance, so you can buy at reasonable prices, and typically they will go public after 5-10 years, so you have buy and hold. See, real investing is necessarily at least 5 to 7 years. If you want to be a true investor, at least few years time has to be given.
ARPOP Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन में देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Aisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Aisha Sehgal, on Prime 5 only on NDTV 24/7.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa, Guru?
Good afternoon. You're watching India Market Close and you're seeing the screen in the red at 0.25% down on the Nifty, but one shouldn't be disheartened by it because if you look at the advance decline ratio, your advances are still up. Broader markets are still doing okay. A spot of profit booking in the Nifty and the Bank Nifty, and because of the weightage of banks perhaps on the Nifty, you're seeing that number down. Alex, is looking like an interesting afternoon because there is no real geopolitical twist of events to get the markets down. A bit of a breather perhaps coming in there.
Yeah, you said it. I think that is exactly what is playing out. In fact, the story might just be told if you pull up the intraday chart for the IT index, because this is an index that outperformed in trade yesterday. But after that initial spike, it actually cooled off quite dramatically, and I think some money being taken off the table. That's where we stand right now. It's up about 0.6% or so, but the frontline IT companies are perhaps seeing a little money taken off. And we'll probably see that if you pull up the heat map for the Nifty 50, because you will likely see quite a bit more red on the screen than you did yesterday, and that indeed is the case. And you will see still that there are a few names from the metal pack that are doing okay. You have Eternal once again that is in the top 5 gainers. Adani Enterprises has been doing okay. Larsen & Toubro building on its 3% gains from yesterday, also doing well. But then quite a bit that is in the red. ICICI Bank, one of them.
A lot of push in your top 5 from, I would say, positive brokerage views. HSBC on Trent, for example. There's a CLSA note on Eternal today, which is quite constructive. L&T has been seeing a lot of commentary from brokerages, so maybe that boosting it as well. Just because we were talking about IT in the town hall we had with Ramdeo Agrawal, one clear stance he took was that he still sees headwinds for the IT companies and maybe not the best time to dive head on. Just let's take a look at the broader markets as well. I think a good point that Alex was making, that the broader markets are still up in the green, about 0.3% up on the Nifty mid cap 150, actually beginning to show some recovery. Likewise for the small caps actually 0.75% up. The sectoral heat map will also give a clearer picture of what's working and what's not. On the losing side is oil and gas really, which is coming off. Autos also losing some speed, as are private banks. So because you're seeing an outsized impact of that possibly on the Nifty. Metals continuing to shine. India defense looking strong as well, and IT is not half bad. Still maybe off its highs, but not half bad today when we look at it on closer look.
And even those two indices that you pointed out, right? The private bank index, the third biggest losers with cuts of just about 0.25%. HDFC Bank is probably the reason why that is, because it's down over 1%, and Reliance Industries not doing too much will be weighing on the oil and gas index.
100%. Top gainers and losers in the broader markets will also give you a picture of where the action is this afternoon. On the losing side, of Supreme Industry or Mahindra Life. Tejas, of course, because of its numbers more than anything else. Updates from GMR Airports has not been too positive. So that's at least on the losing side of things.
Yeah, absolutely. And a few standouts here. By the way, the entire mining counters have been doing particularly well. You probably won't see that on the screen, but maybe if you pull up something like a GMDC, it's been buzzing on significant volumes as well. At one point was up 16.5%. I wonder, it's 19.2% right now. So it's building on those gains, not going anywhere. The rest of the mining pack also in focus. It's something buzzing.
Something buzzing. You know, we've been talking about how aluminum, very positive note on aluminum this morning, and how aluminum and the whole mining space is going to see more and more interest coming in. I want to see what a Dixon is doing today. Let's see what a Suraj Estates is doing. Another stock that was on our radar. Dixon come off its highs, but still about 1.5% on that PLI 2.0 scheme. Suraj has been a winner with that Dadar East redevelopment project. It has about 14% up. And Brigade, let's just pull up Brigade Enterprises very quickly.
7,000 crore rupees of gross development value practically.
It's a township that they're building.
Enterprises lost,
It's come off, but it's just flat actually. Nothing major happening there. So here's the recap sort of for the afternoon. Profit booking after a stellar rally yesterday. Resistance now at 24,400. Support seen around 24,100. It's a decisive closing that we need. A decisive closing above the 50-day EMA to move towards 24,500. The market trend is still in a buy on dips phase. Value buying is continuing in small and mid cap. Bank Nifty continues to remain weak for a second consecutive session. Key resistance at 56,700 to 56,800. We need a sustained move above this to see a rally towards 57,300. Immediate supports at 56,000, 55,800 and 55,700. All right, let's get to our conversations this morning. Gurmeet Chadda with us, Managing Partner and CIO at Complete Circle. We're joined by CA Rudra Murthy, Founder Director of Vachna Investments. Welcome to both of you. Gurmeet, I'm going to come to you first. I think as much as the fatigue of the war is being seen on the participants in the war, it's also there in the markets who want to move on to other matters, isn't it?
Absolutely. In our issue, Tamanna, has been more, persistent FI selling along with, the negative headwinds of energy shock, etc. Even in today's price action, if you just see the price action in a Reliance or a Bharti or Bank Nifty. So that, the selling probably continues there. And I think that is where, some value is emerging. I think the market would want to look at more clarity in terms of once the supply picture emerges from Hormuz. And I think what are the alternate channels of oil which are picking. I think these are two triggers which markets would like to watch. But I think there are a lot of pockets which are in a very good value zone. Look at Bharti, for example, 60,000 crores operating cash flow, free cash flow of almost 35,000 crores. And stock also has been hammered with very little correlation with, let's say, an energy shock or the war. So I think there are good pockets of opportunity now, especially in large cap. And I think at some point of time, you will see a lot of institutional interest in, the top few names.
We're already seeing some part of that. And good afternoon to you, Gurmeet. Murthy, I'll come to you on the charts and on the benchmark in particular, but I'll also throw in the Bank Nifty, because just over the course of yesterday and today, it's been a relative underperformer sectorally. The benchmark also cooling off from the high point of the day. I wonder whether for now, those gains might just be capped.
Alex, good afternoon. And let me tell you, yes, as you have clearly pointed out, last 2 days we have seen some amount of underperformance from Bank Nifty, but we should not forget from levels closer to the 22,200 on Nifty, we have seen a 2,000 point kind of a move in last 2 weeks. And similarly, Bank Nifty has also given a move of over 5,000 points. And after this, we are seeing some amount of small profit booking and consolidation, which is very healthy. But I'm very crystal clear that this market has turned from sell on rise to buy on dip. And this, I even spoke in the last time when we had our conversation, that this is not a market to sell on rise. Now it has clearly turned. The whole market is now a buy on dip kind of a market. Yes, you have some sectors which are showing relatively more strength. For example, you look at sector like either defense, metals, or even for that matter, consumer durables, and NBFCs, power and energy. So these are some select sectors where you have relatively more strength. And yes, for me, this market can even correct, and Nifty levels closer to 23,800 to 24,000 will be the next zone where people who have missed the bus earlier, they have to start buying. So I am very clear this is a buy on dip market, and those who have already bought in, yes, hold on to your long position, and those who are yet to buy fresh, you can add between 23,800 to 24,000 on Nifty spot. And similar levels for Bank Nifty for me is closer to that 55,000 to 55,300. So between 55,000 to 55,300, there is a great support which should hold. So for me, this market is a buy on dip market. And look at these spot levels of 24,800 to 23,800 to 24,000 on Nifty, and around 55,000 to 55,300 on Bank Nifty.
Okay. What are the picks this afternoon?
So for me, defense looks very strong. It's a choice between BEL and HAL. So for me, BEL looks very strong, and one can definitely buy BEL at current market price. I'm giving a longer target on this stock available in futures. One can look at buying BEL at current market price. Yes, the all-time high levels on BEL at around 470 should come immediately. And beyond that, the stock can even move towards 500, 520 zone. So I will be a buyer at current market price, looking at targets of 480 to 500. Keep a strict stop loss of 435 for this long call. And from metals, Hindalco looks very strong to me. In fact, the entire aluminium pack looks very strong. Hindalco has given a clear breakout, and in market like today also, there is lot of relative strength in this counter. So for me, Hindalco is a buy. Any investor looking for next 1 to 2 year, you can definitely buy Hindalco, Nalco and Vedanta. I won't be surprised to see a return like 50 to 100% in the next 1 to 2 years in Hindalco. So at current market price, even for a trader, Hindalco is a buy. Look at targets of around 1,400 to come, and you can have a stop loss of around 950 for this long call. So a great risk reward to buy metals, defense, and some names I've already given.
All right. So a whole host of stocks that are buzzing in trade that Murthy is looking at positively on. But stocks that are not doing too well, in fact, we've picked as our stocks in news, or rather our stocks of the day. And they are related to the PVC prices that have been in focus. And Astral, Supreme, both under the hammer in trade today. Astral losing as much as 4%, Supreme Industries down about 4.2%. Let's bring Puneet on to tell you about what exactly the development is and why they're getting affected. Puneet, we've chosen this as stocks of the day, so we'll have to add an S there. But what are we talking about today?
Well, most certainly price cuts is one of the key aspects that's affecting and, literally hammering the mood today for all the PVC price players. So you're seeing Astral as well as Supreme both down 4%, and the reason being a 10% price cut has been announced for PVC effective April 16th. This is the second time a price cut has been announced in the month of April, and hence mood definitely dampening at this point of time. Back-to-back price cuts because of cheaper imports coming in from China. Now, when you look at the price cut, it's a tale of two halves essentially of what's happened in quarter 4 and what's happened in quarter 1 of FY27. Price was roughly around 66 rupees by the end of December, jumped to 79, and by March end it jumped to 100. So if I'm Astral and Supreme, I bought the pipe raw material at 66, and when it's at 100, I have a lot of inventory gains. So quarter 4 will show inventory gains. But once I've bought it at 100 and price start to correct yet again in quarter 1 to 90, that's when I start to see inventory losses. So it's a tale of two halves across quarters. For quarter 4 specifically, you've seen inventory buying. Essentially, whoever's bought it in the last week of March and in April is currently suffering inventory losses, and hence you're seeing that impact on the stocks today as well. you're also seeing that this will start to impact any player that built up excess inventory post mid-March, and hence seeing that impact on the prices as well. Now, total price increase since January, though, if you see, it's been an increase of 22.5%, but as I mentioned, tale of two halves as well. Now, finally, when you look at Q4 expectations, now, since I mentioned about the inventory gain, you will see a massive increase in profits as well as volumes for all piping companies. So, for Astra specifically, you're seeing a 30% volume growth on a YOY basis. Supreme shows a 26% YOY growth. Prices are up 65% because I showed you the graph at 66 rupees. Now it's touching a 90 as well, post coming down to 100. So there has been the volatility, but Q4 will show you big bumper gains in profit. Nuvama specifically expects that plastic piping manufacturers will have strong inventory gains, and hence this is again, as I mentioned, tale of two halves. Stocks reacting today back of Q1 inventory losses, but watch out for commentary that comes in post the Q4 results for the companies.
I wonder what will be the impact of input price increases for pipe companies as well, because key components have become expensive. Gurmeet, is this a space that you're looking at?
So we are evaluating Astra more from a long-term perspective. I agree there will be some hiccups. There might be some gains in one quarter and be offset by high costs. I think what we're looking at is a huge opportunity in terms of supply chains getting pivoted again once this crisis settles. I think the globe would want not to be too dependent on one particular state. And from that point of view, maybe it's too early to look at it. But for now, we do not have this in the portfolio. But we are watching this. I also met the management I think sometime in February, and they spoke about their bathware division doing very well. They started with doing one tower each for large builders like Godrej, etc. And now they are getting repeat orders. So other than pipe, the other big businesses now also are meaningfully contributing. It's a pretty well run company. A strong balance sheet. So at some point of time, maybe yes, but not now in the portfolio.
Just wondering how you're even looking at banks today, Gurmeet. Some very interesting data out about credit growth in the system at 15-16%, and that is what has made the banks exciting overall. Bank Nifty, of course, taking a tumble middle of the day, some profit booking there. But are you feeling excited about banks ahead of the key results this weekend? How are you looking at the big two private banks?
No, I think it's the one pocket of immense value with growth in the overall market. I think if you see all banks private banks are at almost 2 price to book, ICICI, HDFC included. On a P basis, you're getting them at 12 to 15 times. So it doesn't get really better. And credit growth has been pretty strong, even on the stress, which market was a little worried on Mudra and SME loan hasn't really played out. So it's the best balance sheet quality you may get. And PSU banks have done better than private banks. I think some bit of mean reversion may happen. So our top holdings are ICICI, HDFC, Federal, and we have a bit of RBL as a tactical play. There are also some news of more FDI interest in few other banks, including, let's say, some of the more tier 2 banks. I think one of them, which has been keenly watched, is Karnataka Bank. Other than that, there is another bank, Bank of Maharashtra, which has done pretty well quarter-on-quarter numbers. So this is one basket we are now adding on dips. As I said, provides a lot of value. We are also adding some of the NBFCs on correction, especially like a Chola or a Bajaj Finance.
So that's the entire NBFC and banking pack for you. But specifically, Gurmeet, I remember we spoke soon after the results on TCS, or rather TCS results when they were broadcast, right? And quite a bit came through from the management commentary, and we spoke to them as well. We're speaking ahead of the Wipro numbers. And so I'm curious what you think about the IT pack as things stand right now. The jury is still out.
So if you look at the Goldman Sachs comments on enterprise software cannot be fully replaced and IT companies are needed as system integrators, we are actually have a slightly contra view, at least in the short term on IT. I think looks way oversold. You have an AI narrative where a shoe company is going up 6-7x, becoming an AI company. I think people have forgotten .com bubble. I think people will get a bit of a reminder. May not happen with the top 4-5 players, but but a lot of them, I think there's a lot getting priced in without actual monetization happening in the terms of capex being done. And a lot of these names are available at 15, 16 times. So, so that's pretty reasonable. So we've added HCL Tech in our portfolio. We have KPIT, which we have added around 600 levels more. So we have like a 4-5% weight on IT. We're not really overweight, but we have kept a small contra position there. And we are looking at more opportunities if there's further correction in, let's say, any large cap names, and especially 2 mid-cap names we are tracking, which is, Persistent and Coforge. If we get, let's say, a meaningful correction, I think that's something we would like to add. I think the IT commentary as we end into the earnings season may actually positively surprise.
IT commentary was positive, but are you feeling positive enough to lay fresh positions right now, Gurmeet?
Adding, so it's not like we are thumping the table and adding, Tamanna, but we've been adding defense names, as I was telling you. So if you see today's statement by the DRDO chairman of Missile and Strategic System, he's saying that we are transferring full production to private companies, which is called a DCPP model, which is talked about. It's a huge, so I'll give an example. We need about 5,000, 6,000 ballistic missiles. Our inventory level is in 3-digit. And the entire ecosystem hardly makes about 100 a year. So an army will have a missile unit as we speak. And so this is a huge opportunity for next 4 or 5 years. So, there's a lot of good companies in it. So defense is something we are adding. Bharti is something we are adding. And as I mentioned earlier, banks is something we are adding.
Okay, stay on with us, please, Gurmeet. And of course, Murthy will come for a quick view to you. But time to go across to Somit Sarkar for everything that he's hearing on the street. This is a must-watch segment on this show where you get all of the chatter from the street. Somit, what are you hearing today?
A host of stocks that remain in focus. Firstly, it's Sona BLW, Sona Comstar. Now, there are buy flows on the large HNI desk at lower levels that we are seeing for this counter. And the buzz on the street is there could be a supply tie-up with one of the large global EV companies, what the buzz is. When it comes to Spark, there are buy flows on the large HNI desk again. Buzz of some positive news flow related to one of its key drugs. So keep an eye out for Spark as well. For Diamond Power, the buzz on the street is that there could be a potential fundraise announcement that could come in from the company's side, and this might as well happen at a higher price level. For Sunflag, multiple dealing rooms are suggesting buy calls to their clients, and this is a positional buy calls that has been suggested to their clients by dealing rooms. And lastly, when it comes to Havells and Polycab, dealers are recommending a paired trade between these two counters. They're asking their clients to buy Polycab and sell Havells based on Q4 earnings.
Quite a few interesting names. Polycab Havells is well standing out there, and I'm just running through the list to essentially ask Murthy whether he would suggest a buy on any one of them. Murthy, you've listened to the list that Somit just put out. Does anything stand out to you?
Yes, Alex, definitely Havells has given a clear breakout on charts, and if you see 7,800 has been that zone, and once it closes above the 7,800, which it is most likely today, I see this stock moving towards its all-time high levels, which can go till 8,600. So the risk reward is very good, very favorable to buy Polycab at current level. And yes, stock looks very bullish to me. But if I have to even see the charts of Havells India, yes, this stock is also consolidating, but momentum compared to what we saw in the previous one, Havells may not have that kind of a momentum. So for me, if you want to buy between Havells and Polycab, I will prefer Polycab.
You prefer Polycab. Gurmeet, I'm just wondering whether you have an opinion on this data that came out on active investors, right, and capital market plays. If indeed the equity markets have bottomed out, and nobody's brave enough to call that, but the data that you saw in the month of March was heartening for the mutual fund industry as a whole, right? So if some of these plays come back into the fold, and you also saw, for example, the AMC companies come out with their numbers, it's not terrible, right? Would you say that some of these companies should be looked at again?
Oh, 200%. I think it's a very structural story. You may not get immediate rewards, but if market turns around, this is also a high beta play. We've seen that with Grow. good updates, and the stock actually made a new high. And other brokers actually who have lost active base actually have actually seen some correction. I think AMC is the preferred way because that's a fee model, and it doesn't really get impacted too much by transaction play. Very asset light as well. So let's say an HDFC AMC, the authorized capital would be 100 crores, and it makes like 3,000 crore PAT a year. I mean, that's like an infinite ROE. And even the AMCs have seen positive equity inflows. The commodity inflows have been very positive. Some of the gold ETFs now as a category is crossed like 1 lakh crore plus already. If adding gold and silver, it's almost like a 2 lakh crore. Even there, you earn a little bit of a fee. So I think that AMC. So we have Birla and HDFC in our portfolio. Birla is obviously cheaper, and with I think the CIO changing, Harish coming in, all equity funds have seen a remarkable turnaround. And we have something like a Grow, which we call it a new age in this business. I think at some point of time, the exchange and by an exchange I mean NSE, not BSE. BSE has already made a new high. Some of the broking outfit also will become more reasonable. But for now, I think AMCs and wealth management makes more sense. And then gradually you can get into the CDSLs and the transaction-driven businesses of the world.
Immediately after the numbers, you had iPro AMC that cracked a little bit, but most people seem to agree that it was more on account of the way that the stock had performed in the run-up to the numbers. Do you think that is, and you didn't mention it because I'm assuming that the valuations are not necessarily something that you'd be comfortable with.
We have more. I added Birla because that's like 30-40% cheaper vis-a-vis a Nippon or a HDFC. And it had a lower equity mix versus others. And now equity mix is improving. Plus, there'll be a multi-asset and commodity ETF and index plays. And SIFs. A lot of SIFs are getting launched by the top fund houses. That, I think, will be one category one should watch out for. That could garner huge AUM over a period of time, because mostly what you're seeing is debt plus kind of funds. And because of change in taxation, somehow debt and fixed income as a category has seen a lot of reduction in flow. So SIF can actually help shore up that part of the AUM.
By the way, some interesting updates. You were talking about Grow, Gurmeet, and we have this data that my colleague Nimit pulled together, and it's actually gained in active investors, even as NSE has seen a decline of as much as 7%. You've actually seen a rise in share to 28.3% from 26.26%. In the last financial year. It's added as much as 2 percentage points of share in a contracting market. You've actually seen active investors as a whole for the National Stock Exchange fall 35 to 40 lakh in FY26, and the active client base has actually slipped to 4.55 crore. Retail trading participation is also cooled. But long story short, while certain other players like Zerodha and Angel One perhaps have lost a little bit of share, Grow actually has garnered a little bit of share in that time frame. Murthy, if you've got a specific comment on any of these capital market plays, would they be good to buy based on the technical levels right now?
Yeah, Alex, for me, Grow looks very strong. 193 has been that breakout zone. Once the stock has crossed decisively that level of 193, so for me, at current market price and on any dips to those 193 support zone, I will be a buyer in Grow. And a very important point, I will put my neck out and say, see, in today's market, even though overall index is just showing some profit booking, see the broader market, mid and small cap are relatively very strong. India VIX is coming down when we have the second rounds of talk in terms of war front. You have positive advance decline ratio today. You have FII selling which is going down. Earlier it was on an average 7,000 to 8,000 crore. That is now coming down. In fact, they have started buying FIIs. Brent is always in check and below $100 per barrel. Rupee versus dollar is also relatively okay. So for me, these are all clear points indicating that this market has turned from sell on rise to buy on dips. Use every dip as a buying opportunity. Keep the war news aside. Market has already shrugged it off enough. And I feel this market will definitely move up. You may not see a V-shaped recovery or hitting all-time highs very soon. I understand the damage what war has already caused. But still, I'm clearly telling market is a forward-looking animal, and it is definitely a buy on dip market. And all these factors, whatever I have shown, clearly tells to me from current level or on any dips to those strong support zones of 23,800 to 24,000 Nifty, I will be a buyer in relatively strong sectors like either metals, defense, consumer durables. All these looks very strong to me. So it's a buy on dip market.
Yep. Okay. Thank you so much, Murthy, for joining us this afternoon. He's talking about defense, and Paras Defense and Space Technology is in focus. They've entered into a long-term agreement, and Mahima is joining in with more details.
Right, Tamara. So they've signed a 10-year deal with US-based North Star to supply support to North Star products and Indian Armed Forces, and this is for Indian Armed Forces, and to kind of take this conversation ahead and to understand as to what this means for the company, we're joined by Mr. Amit Mahajan, who's the director at Paras Defense, joining us now. Amit, thank you so much for taking out the time. Can you help us quantify, this entire deal, which is a 10-year deal that you've signed, and give us some sense in terms of what revenue potential can this bring to the company?
Firstly, thank you for having me on this show. What we have signed right now is an agreement between two companies. There is a company based out of US, and this company is extremely well-versed and experienced with air-to-air refueling systems and support systems for this particular technology. Now, Paras has a quest to get into avionics and also get into cutting-edge technologies. In avionics, there are very many technologies. But if you see, air-to-air refueling is a very, very critical technology. And we have signed up this agreement with this American company for bringing air-to-air refueling systems for the existing customers right now, and also then subsequently set up a complete maintenance, repair, and overhauling facility for this particular technology. And over a period of time, also manufacture these here in India. So this is it's a long-drawn process. It's a aviation critical technology. And what our intention is to bring a critical technology to the country, get satisfied by an agreement like this. Now, the potential of this particular agreement goes far and beyond, because one, the requirement for air-to-air refueling is huge, and there are certain systems that our country has. They need servicing, they need local support. So we start with something like that. We also start building, bridging the gap of what the user requirements are. We first fill those gaps and then subsequently keep servicing those gaps. So this particular requirement runs into millions of dollars.
Got it. So, Amit, what kind of margin profile are you looking at? Do you expect this partnership to be different from your existing business? How does that fare?
Whatever is on the land is at X cost. Whatever is in air is at least 5X cost. So the margins over here are not based on the raw materials that we use, but it's more so what to do with the certification and its performance capabilities, its reliability. The margins are built into the quality aspect of the supply. And hence, if you are delivering quality over a period of time and you have a heritage of doing aviation systems, then the margins are really, really lucrative.
Got it. Do you already have confirmed orders from the Indian Armed Forces under this agreement?
So this particular business will be done under our subsidiary called Paras Avionics, which we recently established. Now, what we did before signing this was both companies as Recce, as we say, we went to all the customers and we explained that we are coming out with some idea like this. This is a process that we do with every new venture of ours, that we first do the Recce of the market, understand the suitability, viability of business, and then enter into an engagement like we have entered into right now. So we have done an understanding of this. We have a requirement funnel already. The opportunity funnel is already in place. Now, what we're doing after signing of this agreement, we'll start working on each and every line item for those opportunity funnel. And the current opportunity funnel itself is in excess of some 500 crores. So you can imagine even without starting business, we have a huge opportunity.
Got it. So then, Amit, do you think that because of signing of this deal, there is any revision in terms of your revenue guidance or order book guidance that you've already given? Let's say not for FY26, but for FY27?
I have to be very, very frank with you that if at all it has any impact on the revenue this year, I'll be very, very happy about it. But when you're looking at aviation systems, we have to be a little patient when it comes to getting the business and then turning it around. So we need to have that much patience with this particular business. Some part might come on this financial year, but not very significant. Maybe next year onwards, we will start having this built into our guidance.
Got it. Amit, just one last question from a macro lens. Are you seeing any near-term risks persist in the form of execution delay in large programs or dependence on global supply chain for critical components such as engine, electronics, etc., or any kind of mismatch of approvals between actual order inflows and how you're going to execute them because of this entire West Asia war conflict?
We have not had any negative impact of whatever is happening around the world. We are quite self-sufficient. We also have a good visibility of our supply chain as well as our business. So we have no negative impact.
All right, Amit, thank you so much. All right, okay, so that's, of course, the management of Paras Defense. I think, Tamanna, the biggest takeaway from this is that this deal that they've signed could run into millions of dollars is what they've indicated going forward in terms of revenue potential. So I think that's the key takeaway for me in this conversation.
Yeah, a bit of a spike in that stock as well. As you were having that conversation, Mahima, I want to look at Hindustan Aeronautics as we speak. There's some orders there in action. We were talking about how defense is going to be on top of focus, even with Gurmeet Chadha. So that is one sector. But I think IT really is continuing to stay steady. This I find interesting, a week after the results have come through. All right, while we focus on markets, let's listen into Prime Minister Modi, who is addressing the lower house on the bills introduced by the government.
आदरणीय अध्यक्ष जी, राष्ट्र के जीवन में कुछ महत्वपूर्ण पल आते हैं और उस समय की समाज की मनस्थिति और नेतृत्व की क्षमता उस पल को कैप्चर करके एक राष्ट्र की अमानत बना देती है, एक मजबूत धरोहर तैयार कर देती है। मैं समझता हूं कि भारत के संसदीय लोकतंत्र के इतिहास में ये वैसे ही पल है। आवश्यकता ये थी कि 25-30 साल पहले जब से विचार सामने आया, आवश्यकता महसूस हुई, हम इसको लागू कर देते और हम आज उसको काफी परिपक्वता तक पहुंचा देते हैं और आवश्यकता के अनुसार उसमें समय समय पर सुधार भी होते हैं और यही तो लोकतंत्र की ब्यूटी होती है। हमारी मदर ऑफ डेमोक्रेसी है, हमारी हजारों साल की लोकतंत्र की एक विकास यात्रा रही है और उस विकास यात्रा में एक नया आयाम जोड़ने का एक शुभ अवसर सदन के हम सभी साथियों को मिला है और मैंने प्रारंभ में कहा है कि हम सब भाग्यवान हैं कि हमें ऐसे महत्वपूर्ण और देश की आधी आबादी को इस राष्ट्र निर्माण की नीति निर्धारण प्रक्रिया में हिस्सेदार बनाने का सौभाग्य मिल रहा है। ये हम लोगों के लिए सौभाग्य है और मैं चाहता हूं कि मेरे सभी माननीय सांसद, मैं इधर उधर की आज बात करना नहीं चाहता हूं, हम सभी सांसद इस महत्वपूर्ण अवसर को जाने न दें। हम भारतीय सब मिल करके देश को नई दिशा देने जा रहे हैं। हमारी शासन व्यवस्था को संवेदनशीलता से भरने का एक सार्थक प्रयास करने के लिए जा रहे हैं। और मुझे विश्वास है कि इस मंथन से जो अमृत निकलेगा वो देश की राजनीति की भी उसके रूप स्वरूप को तो तय करने ही करने वाला है, लेकिन ये देश की दिशा और दशा भी तय करने वाला है। इतने महत्वपूर्ण मोड़ पर आदरणीय अध्यक्ष जी, 21वीं सदी में भारत एक नए आत्मविश्वास के साथ आगे बढ़ रहा है। विश्व में भी आज भारत की स्वीकृति हम सब महसूस कर रहे हैं और ये हम सबके लिए गौरव का पल है। एक समय हमारे पास आया है और इस समय को हमने एक विकसित भारत के संकल्प के साथ जोड़ा है। और मैं पक्का मानता हूं कि विकसित भारत का मतलब केवल उत्तम प्रकार के रेल, रास्ते, इंफ्रास्ट्रक्चर या कुछ आर्थिक प्रगति के आंकड़े सिर्फ इतने से ही विकसित भारत की सीमित कल्पना वाले हम लोग नहीं हैं। हम चाहते हैं कि विकसित भारत जिसके नीति निर्धारण में साच अर्थ में सबका साथ सबका विकास का मंत्र समाहित हो, देश की 50% जनसंख्या नीति निर्धारण का हिस्सा बने, ये समय की मांग है। हम पहले ही देरी कर चुके हैं, कारण कोई भी होंगे, जिम्मेवार कोई भी होंगे, लेकिन इस सच्चाई को हमें स्वीकार करना होगा कि जब हम अकेले मिलते हैं तब मानते हैं हाँ यार, लेकिन जब सामूहिक रूप से मिलते हैं, मुझे याद है कि जैसे इसकी प्रक्रिया चली थी, सभी दलों से मिलना हुआ है, एक दल को छोड़ करके जिन जिन से मिलना हुआ है हर एक ने सैद्धांतिक विरोध नहीं किया है। बाद में जाकर के जो कुछ भी हुआ होगा, राजनीतिक दिशा पकड़ी जा रही है, लेकिन जो राजनीतिक दिशा में ही सोचते हैं, मैं उनको भी एडवाइज करना चाहूंगा, एक मित्र के रूप में एडवाइज करता हूं और सबको काम आएगी। हमारे देश में जब से विमेन रिजर्वेशन को लेकर के चर्चा हुई है और उसके बाद जब जब चुनाव आया है, हर चुनाव में महिलाओं को मिलने वाले इस अधिकार का जिसने विरोध किया है, जिसने विरोध किया है, देश की महिलाओं ने उन्हें माफ नहीं किया है। उनका हाल बुरे से बुरा किया है। लेकिन ये भी देखिए,
Okay, some important points there being made by the Prime Minister on 3 bills that are being introduced, the women's quota one among them. And just to the point that the PM was making, of course, the women's reservation bill is a very complex subject, so many nuances to it, but just on the role of the woman voter in the Indian electoral landscape, it has gotten enhanced dramatically. There is no political party worth its salt that can dare to ignore the woman voter right now.
You saw it in the last election, didn't we? We saw it in the last state election.
The last several elections, I would say. At least the last 2 general elections, if not 3, and at least the last 8 to 10 state elections have been focused on schemes for women voters. And I think that's why the timing that way for a bill which has been hanging fire for decades maybe is right for the women's reservation
absolutely. And quite a bit is going to hinge on what happens over the next rather 7 to 8, actually 10 days, right? Even in terms of policy, in terms of, I think, you'll have to watch out for the strategy on fuel immediately after that election gets done. We were speaking about it this morning, about the fact that the price of the till has not changed, and generally what we see is after elections, things come to the fore.
It will, but I doubt they're going to pass on 18 rupees a litre on petrol or 36 rupees a litre on diesel, because
some increase
yeah,
would be.
because just that the capacity to absorb that doesn't exist. Hopefully by then prices will cool off as well. Very
The company announces its public issue of secured rated listed redeemable non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Sell Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
politics, power and cinema and all of that in an unprecedented Dravidian script. This
Welcome back. You're watching India Market Close, and we are shuttling actually very close to yesterday's close on the benchmark Nifty 50. Just about 0.1% or 0.2% of a cut. You're seeing a little bit of a wobbly trend at the end of today's session, but the broader markets are looking pretty good, I must say, because you have the mid-cap index that's now trading about 0.7% higher, and you have the small-cap index that's heading towards gains of about 1%, and the advanced decline ratio will actually look better than it did even about half an hour back. So it would have widened. There you go. So it's actually widening quite considerably right now. Let's talk about some of the individual counters with Rajesh Palvia, who's Senior Vice President, Technical and Derivatives Research at Axis Securities, as well as Devin Choksi, Managing Director of DR Choksi FinServ. Thank you so much, as always, to the both of you for taking the time, and good afternoon to you. Devin bhai, I'll come to you. I don't think that there is an immediate trigger, at least not that we know of, but the entire mining pack has been buzzing in trade today. And one stands out. You have GMDC that's up, what, 19% at this point. From what you've heard of the entire rare earth policy and various other measures that the government is looking towards, is this a pack to look at very, very closely?
Yes, Alex, good afternoon. Certainly, I think two reasons. On one side, you have got the metal commodity prices are firming up in the global market because of the supply side constraint now, particularly for white metals. And on the other side, I think the mining prices are also, mining material prices are also getting adjusted to the rise in the final commodity prices. So there is one spread, I think, which we always maintain, is basically now catching up, and that's where some of the mining stocks which up till now have remained corrected, I think are now showing some signs of recovery at the same time. Yes, I think the rare earths is important part of it, and definitely I think it is still time to go. Government's policy has been in place now, and they are basically rolling out, including state of Orissa. So from that perspective, certainly we feel that I think it's a long run game. Over a period of time, it will materialize. But as of now, largely the factor is the metal commodity price is firming up. Along with that, I think the iron ore mines and others, I think, are firming up at the same time.
Deven bhai, what is it that you are finding exciting right now ahead of what is going to be an important weekend for BFSI as well? Are you looking at private banks positively, or are you more focused, I would say, on the crude impact kind of stocks? Now that crude seems like it will settle around the 95, 96 mark.
Not so early, Tamanna. I feel that I think the crude oil prices and how it gets settled, etc., is still a long call, according to me, because I think the way in which America is playing with the policy every single day, including sanction and not sanction, etc., on the purchase of Russian crude or for that Iranian crude, I think those policies are not easy to give any kind of direction for the crude oil processing companies, refining companies. So not immediately on that front, at least my viewpoint would be. My current focus stays with, I think, some of the BFSI companies where the valuations are comforting. You have the companies like NDFC staying between 1.5 to 2 times price to book value. Similarly, many other companies are around 2 times price to book value. And at the same time, if we are seeing the growth in the AUM, that growth in the AUM is distinctly 16% kind of a growth that we saw in the last month. So from a perspective of looking at, I think, this entire space, we believe that Indian economy with the growth of 10-11% continues to basically command higher amount of growth as far as the credit offtake is concerned. And as long as the interest rate remains relatively lower, I believe that I think it's a good space to be in. So yes, I think we are seeing distinctly improved performance, including from some of the NBFC companies like HDB Financials, I think, which came up with a good set of numbers. Expected to see, I think, better set of numbers coming from even Bazaar Finance. So yes, I think we look at some of these companies which are having the stronger ability to execute at a faster pace.
All right. So a whole host of stocks to keep an eye on. By the way, also in the financial space, this is a stock that is in focus because of a statement that was made not too long back about ownership. But I'm not going to tell you about the story. I'm going to let my colleague Sharad tell you the story. And I must tell you that he was humming a song on the way to studio. I could hear him all the way from out there. And it went like what?
फिर भी दिल है हिंदुस्तानी.
You've got to sing it, yaar, Sharad.
No, I don't know the entire lyrics. But in my childhood, there was a song by SRK, and this was a pretty interesting song. And now it's very important for Paytm. Why? Let's talk about it. Of course, there is an ownership shift happening. But now they are saying they are having fully Desi ownership, at least in terms of majority. Let's see how that mathematics actually stacks up. Interestingly, let's see what the important announcement has come in. There was, of course, Paytm says it's now an Indian-owned and controlled company. That means the stake is more than 50%. The DIs, which of course includes the retail also, and also the promoters. But remember, there is no definition as such. That holding is at 50.3% stake coming at the end of the fourth quarter, or the new shareholding pattern which is there. Now, why this is important? The more institutional participation can come in after this majority Indian ownership announcement has come in. And remember, a lot of approvals are there in the RBI and their various wealth arms and different businesses, which will augur well going ahead as well. So that's one of the key reasons why Paytm is in focus. But there are other reasons also which should be there in your radar. Motilal Oswal, Mirae, Nippon and Bandhan, these are the mutual funds having the largest stake in Paytm as well. Now, what's working for Paytm? What are the key growth triggers? It's important. The RBI approval is expected for their wallet business. Also, strong Q3 numbers were delivered. We had seen that it was a turnaround quarter. And interestingly, PhonePe has paused its IPO plans as well due to the geopolitical conflicts. It's a peer, and of course, Street is expecting a valuation catch-up for it. And recently, Haitong also came out with its report where Paytm's GMV, which is your gross merchandise value, that's expected to go up by 25% CAGR in the coming 3 years. But what may be a risk for the stock is the removal of RBI's Payments Infrastructure Development Fund. There was some impact in the numbers, and of course, there is technological and regulatory risks as well. But let's also take important commentary from the promoter himself. He had stated that he's more sure of a high growth and high margins business going ahead, and the focus would be mostly on the core business. There's a huge upside also left for the merchant business, and there's an offsetting the subscription revenue. There is cross-selling as well. And lastly, there's a promise to bring back Paytm Wallet. But Kya Delhi bahut dur hai? That's the big question. Let's see the stock reaction of what has happened. From the IPO price, Paytm is still down 47%, but from its lifetime lows, it's up 234%, and the stock has been gaining over the last 1 year as well. And analysts are most bullish on the stock as well. 95% of 25 analysts have either a buy or a hold rating, and the 12-month target price is 1360. That means a 19% return potential coming in. So this is the entire story of Paytm which we have got for you.
Okay, fantastically put, and I think also putting into perspective of the pain that those who subscribed in the IPO would be feeling. Although it's come a long way, no doubt about that. Rajesh, first I'll come to you on Paytm on charts.
Yeah, hi. So Paytm was in corrective mode, but since last couple of weeks, we have seen a smart recovery from the lower level. This is the third consecutive week where stock is making higher high-low formation. It's a sign of sustained buying action is taking place after this corrective move. Looking at the near-term structure, stock is comfortably holding above 50-day moving average. So I think if it continues to trade above 1100 mark, I think the next leg of rally towards 1200 to 1220 we may see in the positional perspective. So those who are already on the long side of trade can hold the position with the stop loss of 1100.
Okay, stop loss of 1100, but you can hold a Paytm. Devin Bhai, how are you looking at Paytm?
Well, I think the path is clear for increasing the stake in this company by some of the funds. I think that's what I take as a first point. The other part of the business fundamentals, I think they remain as they are. I don't see, I think, an immediate change happening because of any of this ownership-related change happening. But yes, I think the overall the business environment, I think, is conducive enough. So whether I think one could possibly add significantly purely based on the business prospect ahead, answer may not be immediately yes, because I think it is all factored into the valuation. But yes, if you are looking at the liquidity getting infused into the counter, and for which I think the stock price could go up, the answer should be yes. So technically the answer is yes. I think fundamentally I would say it's fairly priced.
Okay, all right. Let's talk about, and I began by talking about IT, but I want to speak specifically about Wipro. Because the numbers will come out in just a short while, and there are several key expectations that are building in, of course. Let's go across to Jasmeet to put all of this into perspective, and of course also talk about the buyback that's lined up. Jasmeet?
Well, Alex, thank you for that. As rightly said, the major focus remains on the overall buyback that the company is planning to do. While brokers are estimating a buyback of roughly 18,000 odd crores, but a wait and watch of how does that pan for the company. Now, if you look at the other key things that will be in focus is the overall revenue. We expect the top line to grow by 2% and EBIT to see uptick of 15% and cross the 4,000 mark. In terms of net profit, we expect a healthy addition of 10% in this particular quarter. Now, if you look at the overall CC growth, that's an interesting one. Given that it's expected that a company will report a net loss at their CC level, it's a degrowth for the company in this particular quarter, but the overall acquisition the company has done in the previous quarter should add up and take the overall CC growth between 0.7 to 1%. Apart from that, the focus remains on the overall acquisition the company has done in this particular quarter. The Olam Group, where they're acquiring one of their IT arms, that will be in focus of how that deal pans out for the company going ahead. And also the commentary on the overall deal win and the health sector, given the health sector faced certain disappointments in the previous quarter of how that pans out going ahead. Now, in terms of the guidance, even that remains a key, given that a brokerage is estimating a guidance to be between -2 to 0% for the Q1 in the next quarter, but their free brokerages are estimating a guidance of roughly 0.2%. So how does the management see the Q1 is something which will be in focus for a lot of IT players as well, of how the macro environment is going on at this point in time. So all in all, we expect a good addition in terms of the revenue and deal wins, but a wait and watch on the overall buyback commentary.
Buyback in focus. Devin Bhai, what are you expecting from Wipro? What are you looking out for in his buyback, the top headline for you?
They have a balance sheet cash of around 38,000 crores. And I think if you look at, I think their past history, invariably around 1.5 to 2 years, I think they would go for distributing this particular cash. I think that's what they did about 18 months or plus, I think, back when they distributed around 12,000 crore worth of money by way of a buyback. So yes, I think in a way it is a good stabilization factor as far as I think the investors are concerned. They are getting the price stability along with. Other than that, the fundamentals of the business, I think one is hoping that the company, I think, starts reporting relatively better numbers. They have been winning systematically, I think, some of the larger contracts, as we saw even in the last few days, when they ended up winning $1 billion contract as well. So from that perspective, the expectation remains definitely very, very high from the company. But the quarterly results are unlikely to show major change as I see it, unlike TCS. TCS definitely, I think, is leading the pack as far as the IT business is concerned in this environment. So we'll have to wait and see what commentary comes out from Wipro, but nothing major expected from it at this point of time from my side.
Rajesh, Wipro view and any BTST call if you have. Not that there's much time to do anything on it, but the Wipro view?
So Wipro is recovering from the lower level. Now stock is negotiating at 50-day moving average supply area. I think if his stock's able to defend this 205 level for next couple of days, I think this upward trajectory may extend further towards 220. That's the next level where stock can move. So at this juncture, 205 needs to keep as a stop loss those who have bought at lower level. For BTST point of view, Polycab is looking attractive. We believe that way stock managed to give breakout. I think the next target for Polycab, we are projecting around 8,000, 8,050. On the downside, 7850 needs to keep as a stop loss. And whole power space, power sector stocks are doing good in last half an hour of trade. So Tata Power managed to give fresh breakout. So here also one can deploy BTST trade on the long side. Upside target, we are projecting of 438 to 440. Stop loss has to place around 422.
Indeed, power is shining. Thank you so much, Rajesh and Devin Bhai, for speaking with us. As we close down this Thursday evening, you're going to close mildly in the red, but frankly, nothing to complain. I don't know if the last 2 or 3 minutes changes that. The advanced decline ratio has improved. Mid-cap is holding up. I think the dip in the Bank Nifty is also improved. Let's just pull up the intraday of the Bank Nifty if we can very quickly for you, and also the intraday for the IT charts. All right, so still in the red, but like off the lows at least of the day. Nifty IT has shown some improvement as well from the lows of the day, 0.75% up, and the Nifty heat map will give you a picture of what really is working today as we go into the close of trade. Adani and Hindalco, Trent are your top gainers. Eternal continues to be there. HDFC Bank taking a bit of a knock as we close off. It was already 1% down. Can we pull up the intraday chart of the HDFC Bank, please? And just see if there is a bit of a dive that it took till close. And yes, it kind of has. Brings me to the point that Ramdeo Agrawal also made today. FIs will sell what they own. And FIs do own private banks in large numbers. It's also coming ahead of their results.
It is. And so therefore, heading into the end of the week, certainly one to track. I'm quite happy with the way that the broader markets have performed. So pull up the small cap index really, because that is a gauge that is done really well. Pull up the intraday chart as well, because we're ending not too far away from the high point of the day with gains of about 1% or so. Really, the spike at the start was the highest point of the day, but we've made quite the comeback from the low point, haven't we? And a similar move for the mid-cap index as well. You will see we're ending not too far away from the high point of the day, that initial spike, of course, notwithstanding.
Yeah, I want to pull up BHEL. Let's pull up the intraday. Let's pull up Tata Power, which we spoke about. Some of the other power stocks as well. BHEL also, this huge spike. Buzz coming in of maybe big institutional buyers nibbling into BHEL. We saw Tata Power also with that kind of a spike. Top gainers and losers is what we will pull for you as soon as we close off market. 6 seconds to go. This Thursday afternoon is a bit of a breather. We don't need so much excitement in our lives all of the time, is the message that
don't get used to 300 points a day.
Yeah, or even 150 points a day. Closing flat is not a bad thing. Loser, Supreme Industries, top loser there, Mahindra Life, Tejas, Astral is actually, it's surprising that it's lost some steam over there. GMR, Airports also looking a bit weak. But on the gaining side, we mentioned all power stocks, even an Adani Power zooming up 6%.
And a few late entrants, right? BHEL makes it to the top of the list. Of course, HEG always reacts in fits and starts, so don't go too much by this. The electrode manufacturers, graphite would be not too far away. They move in tandem. But you have a few. Sonata Software has been buzzing since morning today. You have FSL that's been buzzing since morning. NLC is not doing too badly as well. And the entire mining pack, GMDC, OMDC, a few others, there is buzz that something is going to take place there with regard to policy on rare earth corridors or otherwise. So these are stocks that are, it's ending at high point of the day. In fact, at upper circuit.
At upper circuit.
ONDC not doing
so
too
much NMDC. So yeah, an interesting mix of stocks that we're seeing today. What is it going to look like tomorrow? Well, we don't know if there is a date for talks. So that is of course there. But if all things remain exactly as they are now, that's not going to be half bad either, as long as there's no escalation. And even if we're at status quo, I think the street will take it right on, and then we can shift focus to corporate results and more humdrum, mundane and regular stuff. But for now, that's all the time we have on the show. From Alex, me and the team that put the show together, thank you so much for watching. Stay tuned. Market Express up next.
The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Sell Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
YouTube doesn't have a favorite news channel. It has three. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened?
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that helps you get up to speed in terms of everything that has happened in terms of the trading session as well, but also news and updates from within the country as well as across the globe. But first things first, let's quickly take a look at what the markets were up to today. So markets in fact ended the day in red as benchmarks saw profit booking after early gains. When you talk about Nifty, that ended below 24,200 while the Sensex also closed 800 points down from the day's high on expiry play, and that's something that you were looking at when you talk about the sectoral picture as well. Metals and IT were leading gains. On the flip side, auto, oil and gas were dragging. So that's largely the sectoral picture that you're looking at as well. But let's also, with that in mind, get straight into stocks, talk about some of the sectors and the stocks that were buzzing away in trade. So Paris Defense, that has signed a long-term strategic agreement with US-based Bandhak Aviation as well, also known as North Star. It's a global leader that you're talking about in air-to-air refueling systems. Under the pact, Paris is going to be supplying refueling systems, accessories and life cycle support to North Star, targeting the Indian Air Force. The partners will also build local MRO and sustainment capabilities in India, strengthening domestic defense manufacturing as well. Now, when you talk about this particular agreement, in terms of duration, you're looking at about 10 years here. So it does really add some long-term visibility when it comes to the aerospace portfolio for the company. Let's also move on and talk about mining stocks that were shining bright on Dalal Street. So stocks like GMDC, OMDC, they are the ones that make it to this list, buzzing on expectations of supportive government moves, especially around the rare earth corridors. In fact, when you talk about the volumes as well, they picked up with strong H&I buying, recent pacts as well in the rare earth space that are adding to optimism. You do have faster environmental clearances and signs of a Q4 turnaround that are extending. And that's really a powerful surge coming in for the rally as well, putting mining stocks firmly back on investors' radar. Let's also talk about PVC prices on the flip side that are back under pressure. And that's really keeping pipe stocks in focus. So Astral and Supreme Industries, they have in fact announced another 10 rupee a kg cut that is effective April 16, driven by competitive imports, especially from China and ongoing geopolitical uncertainty. This is raising concerns of inventory losses in the first quarter. And you do also have pipe players that had stocked up when PVC prices were quoting above 100 rupees a kg levels. So now they're closer to 90. That said, Q4 should be remaining strong. Robust volume growth is something that you're looking at. Inventory gains, restocking-led demand also something that you should be adding to your list as well, even as near-term volatility really stays elevated. Let's also move on and talk about something like an HDB Financial Services reporting a strong fourth quarter and profitability. Look at that 6.5% surge also coming in terms of the stock as well. Largely powering this, you do have a better asset quality that you were looking at. But not just that, you do have lower credit costs supporting earnings. Even as loan growth remains on the softer side, Net interest income improved sharply, helping boost profits, while the board also approved plans to raise funds through debt to also support future growth. Let's also talk about something like an HSBC that remained positive on trend but also turned more measured on valuations. The brokerage, in fact, maintained a buy rating, though it trims its target price to about 4,800 rupees from 5,300 rupees. And that's citing recent stock performance. HSBC is saying that growth visibility remains strong, led by steady store additions at Zudio and sustained momentum over the medium term, with no major pressure coming in from competition or cannibalization. Let's also talk about something like Tejas Networks that posted another weak quarter, also coming in extending its loss streak despite stable order visibility as well. So the revenue, in fact, when you talk about this particular counter, declined sharply on a year-on-year basis. Losses also widened, and both the operating and net level, that's something that you were looking at. The company reported its 5th straight quarterly loss, though the order book remains steady, offering some comfort when it comes to medium-term execution. Let's also talk about Indian Metals and Ferroalloys update in terms of the market coming in on the progress of its key projects. Now, the company has said that its greenfield ferrochrome project is now in the final stages, while all furnaces at Kalinganagar are fully operational. In fact, the company is also flagging a delay when it comes to their ethanol project timeline, but continuing to focus on steady execution and capacity build-out. Let's also talk about something like a Rubicon Research that was buzzing away in trade. Look at that 5.5%, nearly 6% surge also coming in for this particular counter. They've entered the Indian CNS formulation space through a majority acquisition. The company bought a 85% stake as well in Arena Life Sciences, marking a strategic push into specialized and chronic therapies as well. Now, when you talk about this particular deal, it's valuing the company at about 200 crore rupees, underlining their focus as well on expanding domestic formulations portfolio. Let's also talk about something like a John Cockerill India that bagged a major domestic order as well. The company is winning a contract worth about 300 crore rupees from JSW Steel Coated Products. The project involves setting up a new galvanizing line at JSW's Khopoli plant. Moving on, then let's talk about something like an Aurobindo Pharma that was in focus after its subsidiary expanded its biologics partnership with MSD. When you talk about the subsidiary, they've signed an additional product schedule with MSD Singapore and planned a greenfield mammalian manufacturing facility to also scale capabilities just a tad bit. The move is strengthening their long-term contract manufacturing presence when it comes to biologics, backed by a sizable investment in core and downstream infrastructure. Moving on, then let's talk about Bank of America that remains positive on Dr. Reddy's, retaining its buy rating while raising its target price to about 1,500 rupees from somewhere close to 1,480 rupees. The brokerage is saying that the stock offers comfort through diversified earnings drivers, even as the sector faces geopolitical and revenue risks. When you talk about BOFA, in terms of the commentary coming in, they're talking about how cost controls provide a little bit of a cushion if there are delays when it comes to key launches, helping support margins over the medium term. Let's also talk about Sun Pharma that is set to be in the race to acquire US-listed women's healthcare firm Organon as well. And you do have media reports suggesting that Sun Pharma, along with Germany's one particular company, is also working with advisors on potential binding bids that could really come through in the coming weeks. If it goes through, the move could really be strengthening Sun Pharma's presence when it comes to specialized and branded healthcare segments globally. Let's also move on and talk to you about Citi in terms of their reiteration of the buy call on HAL with a target price of close to 5,500 rupees. And in terms of the word also coming in from the brokerage, they're talking about how the recent headlines around the GEF 414 engine strengthen confidence when it comes to the company's medium-term order pipeline. In terms of the key focus here, they're talking about how that is really on commercial formalization timelines and execution risks as well, even as visibility improves for orders linked to Tejas Mk2. Citi is also seeing a potential strategic upside, noting that these developments could pave the way for HAL's participation when it comes to the AMCA fighter program, reinforcing its long-term growth trajectory. Let's also move on and talk about Macquarie that has upgraded Indian hotels to outperform rating as well, raising its target price to 770 rupees from 760 rupees, citing improving revenue visibility and an attractive valuation. The brokerage, in fact, is pointing to strong and expanding hotel pipeline. And they're also talking about managed properties as well, growing faster, which should really be supporting a steady improvement when it comes to margins. In terms of some other commentary as well, they're highlighting the company's robust balance sheet, saying that it provides ample flexibility when it comes to inorganic growth, but also potential M&A strengthening their long-term growth outlook. Let's also talk about how there's no immediate resolution in the Kalyani family dispute. Bharat Forge chairman Baba Kalyani has continued to oppose formal mediation, while his sister renewed her call for a negotiated settlement before the Bombay High Court. The court, in fact, has urged both sides to meet personally and explore an out-of-court resolution, also signaling its preference for an amicable settlement in the long-running battle over family assets and business interests. The matter remains open, with the High Court set to review the issue on April 28th. And markets, of course, watching very closely due to the link with Bharat Forge, the group's listed flagship. Moving on then, the Telangana High Court has directed the Central Vigilance Commission to investigate a whistleblower complaint against Canfin Homes. The complaint alleges irregularities in the company's hiring practices. And Canfin Homes is a subsidiary, mind you, of Canara Bank, has not commented yet on the matter, but the court has asked the CVC to really submit its findings within a stipulated time. And when you talk about this particular case, it highlights the growing scrutiny over recruitment and governance practices in public sector financial institutions. Let's move on and talk about TCS Nashik controversy that is deepening, with fresh explosive claims emerging from an employee in an exclusive conversation with NDTV as well. The employee has alleged that the primary accused, Tausif Atar, along with associates, created a deeply hostile and inappropriate work environment, using vulgar language and allegedly also subjecting female employees to obscene conversations at the workplace. Meanwhile, you do have TCS that has asked employees at the Nashik office to work from home, even as police have detained multiple individuals. Moving on then, let's talk about Singapore Airlines CEO as well, who's scheduled to meet senior Tata Group executives this week. Air India's mounting losses are expected to be a key agenda item during the discussions. The meeting comes as the Tata Group continues its turnaround efforts for Air India following its acquisition as well. Singapore Airlines is holding a 25% stake when it comes to Air India and is a strategic partner when it comes to the airline's revival plan. Sources, in fact, are saying that the discussions are going to be also covering operational synergies, fleet strategy and long-term collaboration between the two carriers. Let's move on and talk about Ola Electric that plans to significantly expand its presence in the national capital following the announcement of the new EV policy by the Delhi government. In fact, Bhavish Agrawal, founder and CEO of the company, welcomed the policy and said that it's going to be accelerating the adoption of electric two-wheelers in the national capital. The company aims to increase its sales network, but also charging infrastructure and service touchpoints across the national capital. This is a move that is part of Ola Electric's broader strategy when it comes to strengthening its key position in key urban markets as well, and really supporting the government's push when it comes to cleaner mobility. And moving on then, let's talk about global silver demand that is expected to decline by 2% in this year itself. And according to the Silver Institute, that's the word coming in from them, the fall is mainly due to lower industrial offtake and softening jewelry demand. Despite the drop in demand, the silver market deficit is likely to widen further due to constrained mine supply. And the institute, in fact, is noting that silver continues to face structural supply challenges, which could support prices in the medium term. Industrial applications, particularly in solar panels and electronics, remain the largest driver of silver consumption. And Apple and Google have been criticized for allowing nudify apps on their platforms despite having policies against non-consensual intimate content. These apps use AI to generate explicit images from regular photos, often without the subject's consent as well. And you do have reports that show that several such apps are still available on the App Store and Play Store, raising serious concerns about privacy and misuse. While both companies claim to have strict guidelines, enforcement appears inconsistent. Moving on, then, the BBC has announced plans to cut up to 2,000 jobs as part of a major cost-saving drive. The public broadcaster aims to save 10% of its budget over the next 2 years. The job cuts will affect various departments and are expected to include both voluntary and compulsory redundancies as well. And when you talk about this particular move, it's coming amid financial pressures, declining license fee revenue, and the need to adapt to changing media consumption habits. When you talk about the broadcasters' comments as well, they're talking about how the reductions are necessary to ensure long-term sustainability while also continuing to deliver high-quality public service content. Moving on, then, let's get you some national news. The centre has reintroduced the Women's Reservation Bill in the Lok Sabha, a big political and legislative push during the special session of the Parliament, formerly called the Nari Shakti Vandan Adhiniyam. The bill seeks to reserve 33% of seats in the Lok Sabha and state assemblies for women, a move that could significantly reshape India's political landscape. The Lok Sabha is expected to expand significantly from its current strength of about 543 seats to 850 as well. Within this expanded house, 1/3 of the seats, around 283 of these, are going to be reserved for women as well, marking the first time that such a quota is implemented at the national level. Moving on, then, the Supreme Court has declined to interfere in the proceedings classifying Anil Ambani's companies as fraudulent borrowers by banks. The court backed the bank's action, allowing the ongoing probe to continue. Separately, you do also have the Enforcement Directorate that has arrested 2 former executives of the Anil Ambani Group in a bank loan fraud and money laundering case. The arrests are linked to alleged diversion of funds from loans worth thousands of crores. And Maharashtra police seized 140 commercial LPG cylinders during a raid at Domino's Pizza outlet in Thane. The raid was conducted after complaints of black marketing and illegal storage of cylinders. Officials, in fact, are saying that the cylinders were being used beyond permitted limits and some were suspected to be diverted for commercial sale as well. No arrests have been made so far, but an investigation is currently underway. The action is part of the state government's crackdown on LPG black marketing amid supply concerns caused by the ongoing Middle East war. Moving on, then, a massive fire broke out in Lucknow's Vikas Nagar slum, destroying over 300 shanties. At least 2 people have unfortunately been found dead. The fire, which started on Wednesday evening, was brought under control today morning after a major operation involving over 20 fire tenders and 120 personnel. Several LPG cylinders exploded during the blaze. Chief Minister, in fact, has directed immediate relief and rehabilitation for the affected families. Police and rescue teams are assessing the full extent of damage and checking for any other missing people. Moving on, then, let's get you some international news now. The United States has decided not to extend the sanctions waiver that allowed some countries to import Russian and Iranian oil. When you talk about this particular move, it could directly impact India, which has been a major buyer of discounted Russian crude and has also imported Iranian oil in the past. The waiver was originally intended to prevent global oil market disruptions, but is now being discontinued amid heightened geopolitical tensions. Indian refiners may face higher costs, but also supply challenges if they're forced to shift to costlier alternatives. Moving on, then, a fresh diplomatic threat is emerging in the Middle East, but with mixed signals. President Trump says that Israel-Lebanon talks are set to take place following a rare high-level engagement in Washington, the first since 1993. Israel is pushing for Hezbollah's disarmament, while Lebanon is seeking a ceasefire and humanitarian relief amid the fallout of the wider conflict. While Washington is, in fact, also insisting that Lebanon is not formally tied to Iran talks, it hopes progress there can help stabilize flashpoints at this point in time, even as Beirut says that it is unaware of any confirmed contact with Israel, underlining how fragile this diplomatic push really remains. Moving on, then, veteran investor Mark Mobius, credited with bringing emerging markets like India to the global investment spotlight, passed away at the age of 89 in Singapore. Mobius spent over 3 decades with Franklin Templeton Investments, where he became a leading advocate for investing in developing economies across Asia, Africa, Latin America, and Eastern Europe. NDTV Profit pays a tribute to his legacy.
Sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Saigal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5, only on NDTV 24/7.
Presenting the all-knowing and motherboards, shelves and motherboards, shelf.
Presented by Canara Bank. Together we can.
Nifty ends in the red after a high point opening today. Nifty ends below 24,200. All Nifty sectors end on a mixed note. Broader market outperforms the benchmark. Crude prices fall amid hopes for talks between US and Iran. Crude hovering around $96 per barrel as of now. All eyes on Lebanon and Israel talks that are expected to happen today, reports suggest. Oil pressure returns after a 30-day waiver ends. US denies further sanctions waiver on Russian or Iranian crude oil, reinforcing uncertainty across energy markets. Russia says that they will minimize sanction impact on oil sector.
In an exclusive conversation with NDTV Profit, Motilal Oswal Financial Services founder Ramdeo Agrawal says India is getting wealthier at double the world's pace. Also urges investors to stay bullish when markets weaken. Singapore Airlines CEO is likely to meet senior Tata Group executives. Key meet after losses blow and leadership vacuum Air India. TCS Nashik woman employee reveals more horrors. Undercover ops expose workplace web, soft targets, secret syndicate, HR training nexus under the scanner. No relief for Anil Ambani. The top court refuses to interfere in fraud classification proceedings. Apex Court allows banks to proceed accounts with fraud tag. Delimitation women quota bills tabled in Lok Sabha. Fiery centre versus opposition war of words erupt. Congress says constitution being hijacked while Amit Shah hits back. Vote in Lok Sabha tomorrow at 4 p.m. Hello and welcome viewers. A very good evening. This is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest updates on national, international as well as the markets. Let's begin with first checking how the markets fared today. The D Street settled in the red after a high point opening today. Benchmarks especially continued to descend through the course of the session today, with Nifty ending below 24,200 odd levels. Clearly, we saw profit booking and expiry at play. Broader markets did relatively better, with the small caps particularly outperforming the front row index by almost 1%, but a mixed picture sectorally, where majority of the indices plummeted with the bears. My colleague Varsha joins with all the market action. Varsha, over to you.
Well, yes, Nifty 50 ends in red, down over 0.15%, ends below 24,200 mark. HDFC Bank and OMGC are the top losers when it comes to Nifty 50, both down over 1.5%. Broader market, though, outperforms benchmark. Mid-cap 150 ends in green for the second day in a row, up over 0.5%. NLC India and Bharat Heavy Electricals are the top gainers when it comes to Nifty Mid-cap 150, both up over 5.5%. When it comes to small cap, 250 ends in green for the second day in a row, up over 0.5%. GMDC and Shipping Corp of India are the top gainers when it comes to Nifty Small Cap 250. GMDC hits upper circuit over 20%, followed by Shipping Corp of India up over 13%. All sectors ends on a mixed note, though defense is the best performing sector, up over 1.5%, ends in green for the 10th consecutive day. Aqueous and Mishra Dhatu Nigam are the top gainers, both up over 5%. When it comes to Nifty Bank, is the worst performing sector, down over 0.5%. HDFC Bank and Kotak Mahindra Bank are top losers in Nifty Bank, both down over 1%. Nifty Metal, Nifty IT, Media, Realty, FMCG, Pharma ends in green for second consecutive day. Nifty Energy ends in green for the 8th consecutive days.
So much, Varsha, for wrapping the market action for us. But at a time when uncertainty has triggered a risk of bias in the markets, Ramdeo Agrawal, chairman and co-founder at MOFSL, spoke to us about the gifts of staying bullish. In the special town hall chat with our managing editor Tamanna Inamdar, he spoke extensively on India's growth story, especially substantiating on the long-term game of investing. Take a look at a brief portion from that chat.
When you are buying for 10 years, 20 years, I typically think that I'm buying for 25 years. You know, I mean, it's different that I'm not right every time. But I always buy thinking that it's 20, 25 year kind of bet. So the dialogue is very different, actually. In my mind, dialogue is very different. And that keeps me, if you see my last wealth creation study, which we did just now, see, what is the summary of the report? The summary of the report is the world is becoming wealthier year after year. If you see last 50 years, 75 years, world is becoming wealthier. India is becoming wealthier at double the speed. World is becoming wealthier at 7% dollar, nominal dollar. We are becoming wealthier at 14% nominal dollar. Now 14% is not double of 7%. If you take a 10, 15 year profile. So India is emerging very rapidly. Of course, other countries are also emerging, like
it's
China.
It's also our base case, which is the reason why India is emerging more rapidly.
That is also one of the same. That also allows me to be emerging for next 50 years.
Yeah.
You know, so it's a very long story, and there are very few compounded predictable countries. Because one is, of course, nothing can beat US. US is one and the only one. You know, like in last 15, 20 years, US has gone from 30% of total global market cap share to 50%. You imagine, the world is growing at 7%. In that, US went from 30% to 50%.
Sir, FIIs ये सब क्यों नहीं देख रहे हैं?
See, they are for 10 months. They want to be right in the next 1 year, 2 years. I don't care. I want to be right on 10-year basis.
So you're saying that the average investor should not worry about the FII figures today. We were earlier this morning speaking with a prominent market voice, and he said exactly this, that the conversations he's having with his friends who manage India for global funds is that हम office आए नहीं आए कोई फर्क नहीं पड़ता है. No one is looking at India right now globally.
Yeah.
Why aren't they seeing all of these points that you are talking about?
I mean, India for them is very small. Say, like, if there is one micro cap where a lot of excitement is happening, I don't care. Because in my scheme of things, that 100, 200 crore company or 300 crore company, I cannot buy enough. So I don't bother about what's happening in that company. India, in their mind, is something like that. And particularly if you're sitting in US, which is now $70 trillion, market cap, where single companies are bigger than India. Well, would you bother about an NVIDIA?
Well, would you really bother about NVIDIA or focus on your country's stock markets? Speaking of stock markets and oil prices, they have been stabilizing as hopes for easing US-Iran tensions following reports that Iran could allow ships to pass through around the Strait of Hormuz outweighed concerns over ongoing supply disruptions. Brent crude futures, if you see on your screen, is trading around $96 to $95 a barrel, while US West Texas Intermediate crude futures has been hovering around $92 a barrel. In the interim, the rupee has been hooked to the 93 per dollar mark, making the Indian currency trade on the edge due to the war. So overall, stabilizing crude oil prices have sent positive cues to investors in domestic equities, even though the demand for dollars from importers persisted a sharp recovery in the rupee. But adding more pressure to oil prices, viewers, US Treasury Secretary Scott Bessent told the media that the United States will not be renewing the waivers that discounted sanctions on the purchase of some Iranian and Russian oil. Now, this waiver was a short-term measure to ease global supply. And now that the relief ends, it only amplifies risks for India, since we would end up paying higher prices for non-sanctioned alternatives and use riskier workarounds that could inflate our import bill. Let's listen in to Bessent's directive.
We will not be renewing the general license on Russian oil, and we will not be renewing the general license on Iranian oil. Because again, that was oil that was on the water prior to March 11th. Right. So all that has been used.
Let's now get you an update from the war front. Israel and Lebanon are expected to hold talks today with an Israeli minister, saying Prime Minister Benjamin Netanyahu will speak to Lebanese President Joseph Aoun. Lebanon earlier cast doubt on Donald Trump's claim that the leaders were due to hold talks, something he reiterated in a post overnight. Meanwhile, the US says it has turned back 10 ships as part of its naval blockade of Iranian ports. The US Defense Secretary and the chairman of the Joint Chiefs will brief the media at 5:30 p.m. today. President Trump says the war is very close to being over amid signs of renewed diplomatic efforts involving Iran and key regional players. While in Tehran, Iran's foreign minister met Pakistan's army chief, is expected to focus on the next round of peace talks. But as that is the update on the Iran-US war front, more Israeli air raids on towns and cities across southern Lebanon can be seen. Israel issued a new warning to residents as its airstrikes continued, while Hezbollah says it has fired rockets at Israel. My colleague Mohammad Ghazali is reporting from Beirut, an area under the threat of Israeli aerial strikes and considered a Hezbollah stronghold. He's outside the residential area that has been recently attacked. Take a look at this report.
Right now, I'm reporting here from Al Maidi area of Dahia in the close to the Beirut city area. And you can see behind me the attacks here. I'll ask my camera person to come closer and show you the entire building which has been flattened in the attacks. The damage could be seen here. This entire area which you see here, these are tall multi-story buildings which have been flattened by the aerial strike. Some of the buildings have also suffered attack, partial attack. But if you see these multi-story buildings, all these buildings were livable. People were staying here. This is a densely populated area, Dahia area here, in close to Beirut. In Dahia, this is Al Mardi area, and you can see behind me all these visuals of the damaged residential buildings which have been flattened by the attacks from the occupied territory in the Palestine. The army has been carrying out aerial strikes. What we have been told by the local reporters here and the local civilians here is that this area came under intense strike just a week ago. This is also supposed to be the stronghold of the resistance forces here. But what we have seen is that the area is still under threat. This is one of the areas which is frequently attacked when the aerial strikes happen from across the border. People still continue to live here. I also spoke to a few locals here. They didn't want to come on the camera, but they said that why this rubble has not been cleared, because the area is likely to be attacked from across the border by the occupied territory, from the occupied territories in Palestine.
Viewers, Singapore Airlines CEO Goh Choon Phong is in India today and is meeting senior Tata Group executives. Discussions are expected to focus squarely on the loss-making conditions of Air India at present. Goh arrived at Bombay House, the Tata Group headquarters. Now, for context, Tata Group took over Air India from the government in January of 2022. That's about 4 years ago. And Singapore Airlines later picked up a 25.1% stake in the company. The timing is crucial as Air India faces rising operating costs due to West Asia conflict-related airspace curbs and Pakistan's airspace closure that has been there for about a year now. Adding to the churn, CEO and MD Campbell Wilson has announced his exit, prompting a leadership search, especially at the helm of this very big airline. Ashok Leyland, in other news, has launched twin fuel variants of its light commercial vehicles aimed at offering more flexible and lower emission transport solutions. On the sidelines of the event, my colleague Danish Anand spoke to Amandeep Singh of Ashok Leyland to talk more about the new launch and the price hike. Let's listen into that conversation.
So today we have launched our two new vehicles in twin fuel technology, Dost and Dost Plus XL. As you know, the demand for CNG vehicles has been steadily growing based on the fact that the number of stations in India has been growing significantly. Today we have almost 9,000 CNG fuel stations, and this is likely to double in next 4 to 5 years. So this availability of CNG, this green CNG being considered as a green fuel, CNG being giving a better KMKG cost advantage to the customer. So customers have been looking for CNG vehicles. However, there was some range anxiety which customer had. If CNG gets over and the pump is not there, what he will do. So therefore this twin technology helps him with this 5-liter petrol tank that we have given to take him to the next CNG station. So we have taken we have been forced to take one price increase with effect from 1st April that we have taken, because as you mentioned, this commodity cost increases that have happened. We are trying to mitigate the impact on our customers to the extent that we can. However, if the commodity prices remain at a higher level, we may, forced to take some further action. But as of now, we've taken this hike, but we are hopeful that there will be a solution to the crisis soon, and things get back to normal.
Viewers, the TCS Nashik controversy is deepening, with fresh explosive claims emerging from an employee in an exclusive conversation with NDTV. The employee has alleged that the primary accused, Tausif Attar, along with associates, created a deeply hostile and inappropriate work environment using vulgar language and allegedly subjecting female employees to obscene conversations at the workplace. She further claims that religious identity was repeatedly targeted, with instances of mockery over traditional attire and practices during festivals. The employee also alleges systemic intimidation and isolation with strict controls like keeping phones and personal belongings away, raising serious questions about what she described as a parallel system within the office. There are also serious allegations of coercion, including pressure tactics and disturbing claims around forced actions, which are now part of the wider investigation of this matter. Meanwhile, TCS has asked employees at the Nashik office to work from home, even as the police have detained multiple individuals and the probe continues to widen. Let's now take a look at what the employee revealed in that exclusive conversation with NDTV.
New shocking and chilling details now emerge with each passing day in the Nashik TCS syndicate, where now on one end it is Nida Khan, the mastermind accused through her legal team, if she's arrested, and secondly it is several investigative agencies like the NIA who have now stepped in to figure out how exactly and how big is this entire plot of religious coercion that was underway in Nashik at TCS, where more than 12 FIRs have been registered. Several complainants are likely to come forward and register their FIRs because their counselling sessions are underway. Whereas it is also the TCS company's internal team which has now begun an investigation into the entire matter to figure out how exactly was it that the entire syndicate was working without the top authorities even knowing about it. And since 2021, as an eyewitness while speaking to NDTV, stated that there were these activities carried out where vulnerable victims were targeted, they were suppressed and they were forced to be in their loneliness, distancing them from their social and family circles, and henceforth forcing them to practice Islamic religion and follow its protocols, because of which one victim came forward, took a decision, registered FIR, after which we saw multiple of them coming forward. So far, 7 accused have been arrested, out of which the main HR, which is Ashwini Chenani, is in police custody, the rest of them being in judicial custody, and likely the custody is to be extended because there are several other scales which needs to be investigated from the SIT and other investigative agencies, whereas it is also the Women Commission who has now raised their voice and asked for a stringent action against the culprits into the matter. Not only that, officially on the administrative front, it is the government who's thinking of launching an helpline number, as there are multiple complaints that are coming forward of women who are narrating their ordeal in the case, stating that in their particular company, similar of such instances have happened. So it remains important to watch what more developments take place and how is it that the police and the investigative agencies, they ensure that the entire syndicate and its extent to which it is connected is busted out.
Right, and in a big setback for Anil Ambani, the Supreme Court has refused to interfere in fraud classification proceedings, effectively backing lender banks. The top court dismissed Ambani's appeals against a Bombay High Court order, which had earlier cleared the way for banks to proceed with fraud-related action. The case involves lenders including Bank of Baroda, IDBI Bank and Indian Overseas Bank, which had issued show cause notices based on a forensic audit conducted by BDO India. The Bombay High Court had ruled that interim relief granted earlier was incorrect and that banks are fully entitled to rely on forensic audit findings in such cases. With the Supreme Court now declining relief, banks can continue their fraud classification proceedings, and this is important. However, Ambani's counsel has told the court that he is open to repayment and settlement discussions, even as he retains the liberty to pursue other legal remedies. But moving on to another legal case, Canfin Homes, which is a housing finance company promoted by Canara Bank and headquartered in Bengaluru, is in trouble for pan-India recruitment malpractice. The Telangana High Court has ordered the Central Vigilance Commission, also referred to as CVC, to investigate a whistleblower complaint against the company. And the complaint was raised by Assistant General Manager HR Manoj K. Badal. A lot of surprising details have come out from the court order. My colleague Nimin Dixit joins us with all the details.
Yes, the High Court in Telangana has ordered the Central Vigilance Commission to probe into Canfin Homes, the housing finance company, which is 30% owned by Canara Bank, and Canara Bank is also promoter of the company. Now, this comes on the back of a whistleblower complaint filed by one of their HR general managers, who basically said that the company had unfair and preference in recruitment policies. What they said that there were large-scale recruitment irregularities across Canfin Homes. They also accused of pushing preferred unqualified candidates and mark sheets allegedly being altered. Also, the whistleblower complained that he was transferred days after raising this complaint about the recruitment irregularities. Now, what the court has said that since this is a matter of public interest, because Canara Bank officials have been named and are involved in this probe, then it cannot be said as Canfin Homes wants to say that this is a private dispute. The court has held that this is a public dispute and it must be taken into account while ordering these investigations into it by the CVC, and the RBI has also been asked to look into this. Now, we will understand what inaction comes out of this RBI and CVC report as this case goes on.
Thank you so much for explaining the details of that case to us, Nimit. Now, the centre has reintroduced the Women's Reservation Bill in the Lok Sabha, a big political and legislative push during the special session of Parliament. Formerly called the Nari Shakti Vandan Adhiniyam, the bill seeks to reserve 33% of seats in the Lok Sabha and state assemblies for women, a move that could significantly reshape India's political landscape. The Lok Sabha is expected to expand significantly from its current strength of 543 seats to 850. Within this expanded house, 1/3 of the seats, around 283, would be reserved for women, marking the first time such a quota is implemented at the national level. Now, all this is good news. But while the intent has broad-based support, the implementation remains the key sticking point. The government has linked the rollout to a fresh delimitation exercise, which redraws constituencies based on population and is expected after the next census. This effectively means the quota may not kick in immediately, and that's where the opposition is raising concerns, questioning the timing and the linkage with delimitation ahead of the 2029 elections. Let's listen in to both sides, what Prime Minister Modi had to say, as well as the opposition on this matter.
एक बार 33% बहनों को यहाँ आने दो, आकर के उनको निर्णय करने दो, किसको देना है, किसको नहीं देना है, इस वर्ग को देना, उस वर्ग को देना, करेंगे वो निर्णय। हम उनके सामर्थ्य पर आशंका क्यों करते भाई? एक बार आने तो दो, उनको आने तो दो। जब आएंगे तो 34 में।
भारतीय जनता पार्टी इस आरक्षण को लेकर के भाजपा अपना नारी का नारा बनाना चाहती है और बदलने की कोशिश कर रही है। जिन्होंने नारी को अपने संगठन में नहीं रखा, उनके मान सम्मान के लिए कैसे रखेंगे?
Viewers, on an unfortunate note, veteran investor Mark Mobius, credited with bringing emerging markets like India to the global investment spotlight, passed away at the age of 89 in Singapore. Mobius spent over 3 decades with Franklin Templeton Investments, where he became a leading advocate for investing in developing economies across Asia, Africa, Latin America, and Eastern Europe. NDTV Profit pays a tribute to his legacy. Viewers, that's all the time we had on this edition of Profit 360. Stay tuned. This is Malika Mishra. Keep watching NDTV Profit.
कुछ बड़ा होने वाला है।
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
Tamil Nadu votes decisive, uniquely the way it does.
Politics, power and cinema and all of that in an unprecedented Dravidian script.
This is not an election easy to call. It never has been.
And unravel grassroots conversations with the voices that matter.
That's why we travel across Tamil Nadu to get you the real picture. From the OG of Indian elections comes the next big political blockbuster.
Because
Tamil Nadu votes only the way Tamil Nadu does. Tamil Nadu elections on India's original election voice.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's one unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Saigal. What's happening? How?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5, only on NDTV 24/7.
Hello and welcome back, viewers. You're watching NDTV Profit. Welcome to this special edition of Earnings Edge. Here we are to decode the NDTV Profit. Welcome to this special edition of Earnings Edge. Here we are to decode the Q4 results of Wipro. The numbers are out and they seem to be in line with estimates. Let me take you through the key figures. Net profit is coming at 3,522 crore rupees versus the estimated figure of 3,448 crore rupees. And the board has approved a buyback at 250 rupees per share. That is worth up to 15,000 crore rupees. That's a big number. Revenue has also come in at 24,236 crore rupees versus the estimated figure of 23,974 crore rupees. That's a jump of about 2.9% on a quarter-on-quarter basis. In fact, I have my colleague Jasmeet also joining me at the moment, who has been tracking the IT space so closely. Jasmeet, the second IT result in this quarter, how does it look like?
Well, the numbers are quite interesting with this particular counter. If you look at the overall revenue, you're expecting an uptick of 2%. The numbers did come at our 2.5%. So that's a good thing in terms of revenue. But overall margins see an expansion of 240 basis point, while the expectation was 190 odd basis point. While this jump comes on the back of the low base, which we saw in the Q3, which was on the back of that new labor code. So we see companies back into the 17% of margin range. While in terms of the net profit, even that's a healthy jump of 12 odd %. While this quarter was a weak quarter when you look at the product business. So overall service part of the company saw a downtick of 1.2 odd % in terms of CC growth. So it's interesting to watch.